but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Friday to just you, my son. How's everything?
Friday the 13th.
Again, this is like the second one.
Is it?
Yeah. I think this is like the second Friday the 13th in like 3 weeks or so. Yeah, February 13th. And I guess in a month, March 13th would be exactly a month. But yeah.
And yesterday.
What does that mean? I'll tell you what it means.
I was going to parlay that into yesterday. SPY closed at 666.
I got the email too from my buddy Richie. You remember Richie?
Of course.
Richie's still watching
from,
the show.
From
Los Kinky Boys.
Kinky Boys.
Yeah.
Kinky Boys.
Los Kinky Boys. That's right. That's right. Watching the show. Hasn't called in as much as he used to. Hasn't written as much as he used to, but still watching. He's like, Bat, what's with volatility? How come it hasn't expanded? I mean, market's down. It's 666 versus 6666. I mean, he was all over this.
Yeah.
You're all over oil right now.
I'm getting a little spicy. So
/CL trading 92.40 or so. It seems like that 98 level seems to be where you attract some sellers. I thought they'd attract some sellers in the 75 handle. So 98, why not?
You got the nice round number at 100. But so we did that short term, like call ratio type trade. Mm-hmm. We were long the at the money call spread about
in short units.
So long the 95-100 call spread. We sold the 120 calls way out of the money MCL. So we did this a handful of times.
Sure.
In the 4 day. So this is expiring.
It's like 100 shares of stock, right?
Yeah, 500 shares of stock.
Each one contract is like 100.
Is 100. Yep. Is 100. So yes. So, and that expires middle of next week. So I bought back the 120 calls and I sold the 100-105 call spread. So we now have the 95, 100, 105 butterfly on for a 95-cent credit. Right. So we have it on for $1.
And you have no unit risk anymore.
No unit risk.
And you have it on for 4 days. I mean,
4 days, it's a lottery ticket if we rally into.
Come on, 100.
Come on, 100.
Do you really want 100 though? I
mean,
this is like the anti. This is
a good trade. So I don't. If this doesn't play out, it's probably better for me than if it does play out.
not only long term, but existing position.
Yes. And
you covered all your units. You got /MCL, which is the same thing as /CL, just 1/10 the size of it. You sold these 120 calls all the way up here and bought a call spread. Call spread holds a little bit of value to it. Those extra units go to basically zero with only 4 days to go, and you buy in those units.
No, they didn't go to zero. They're at like 40 cents.
Right.
Still.
Right.
Well, we sold them at like, $1.50.
Yeah, I was going to say $1.40, yeah.
Mm-hmm. I just closed it out of, so we also did this in the 34 day. So we had the 95-100 call spread and the 175 calls, which I think we sold at around $2. Because that call spread has to be worth something. So call spread was probably trading around $1. We sold the 175s at $2. It nets you about $1 credit, which is what we got on entry. I just bought back the 175 calls. So now I have the 95-100 call spread for free.
Yes.
For nothing.
Very good. Yeah, you did it for about $1, that whole package, 95, 100, 175 or something like that. So now you got the whole thing on.
So I have that call spread on.
You have what you're giving up is what the value of it is right now. It could expand, it can contract.
Over 35 days.
Yeah.
But I have a bigger meteor position in Crude itself. So
I understand.
So these are
a hedge. No, I'm just kidding.
Sort of. These are like, if we get that big rally to the upside.
These are a never come into play, please.
Please. Yeah. Yes, exactly.
But you're ringing the register, which is the important thing. You got MCL down around 2% or so, the same thing as /CL. They're going to run concurrent the same way with each other.
Yes.
Good job. Good job, Eddie. Which brings into mind here what a month this week has been all over the place, right? I mean, if you were a bull this week, it feels like a month for sure.
Yeah.
And even if you were a bear this week, I think, every downtick felt like it was the bottom, only to be met with more, selling on top of that. We closed near the lows yesterday, down about 100 on the E-mini S&Ps.
First kind of washout.
Yeah, first kind of washout.
Every end of day has been kind of a rally. Or
we go from down 80 to down 40 kind of thing, and we say, all right,
it's a nothing day.
Right. Inside the expected move kind of thing.
Yeah. So that was kind of interesting.
Volatility stayed bid all day. I mean, but it never really expanded even as we went lower. But I just think volatility, just like it clusters down near the bottom, like how low can volatility go? Yeah. I think it's the same thing on the upside, unless you get some sort of major washout in the market. It's like how high can volatility go? It meets some sort of watermark. Now, that watermark can be a lot higher on the upside. On the downside, it's always going to be
and it doesn't necessarily have to go back to 18.
No. I mean, it could stay here for a long time. I would be really surprised by that.
Yeah.
It certainly can stay here for some time. I mean, when you have a news-driven event like we have all across the world here, this is the time when volatility can stay elevated.
Totally. And just, I mean, going into the weekend with volatility coming in, oil coming in.
It's only coming by 2.5%. Oil coming down has come down about $6 or so from recent highs.
I don't know if I'm buying it,
Buying volatility or buying the move?
That we're just done. I think you're going to have some two-sided action today. Like I'm looking.
You had two-sided action last night. I mean, you had a 70 handle move. I didn't see him down at 66.40. I must have been taking a nap or something.
Way like past your bedtime.
Way past my bedtime. Must have been. But we just got close to the high of 67.11. We were near the lows last night. New lows or new recent lows, 66.40. So. No, I don't think you're out of the woods here at all. Matter of fact, the expected move is about $55, $56, about equal to what we had yesterday at around this time, just taking a look at it. Again,
I've gotten that long delta, and I'm long the NASDAQ. We did that NASDAQ kind of pair trade, the call spread versus the micro future. So I'm long, but I'm hoping we get like another 50 to 60 points to the upside. I can kind of scale out of in NASDAQ. I mean, not in the NASDAQ was 250 handles lower last night than we were right now. So I'd like to scalp out of it. I'd like to size down a little bit for the weekend.
You got a little rambunctious with the
No.
You just would like to get a little less with it? Okay.
In a great position.
There'll be my boy Dino, thank you very much. There will be 3 Friday the 13th in 2026 because the first one fell in a 28-day February. The rest will be Friday, November. The last or the next one will be Friday, November 13th.
Where do you get that kind of info? You can't get that anywhere. You got to have.
You got it from USA Today.
I know, but on a live show, you got to get that. You got to have your peeps, ears to the street type.
Yeah. I get some. Listen, if you're on my Twitter, I get some of my best pictures from my peeps. I got a nice picture there today. You haven't seen that? You take a look. I can't mention it on the show right now.
Why not?
But if you want to see it,
put that up. You can put that up. It's a good picture. It's
okay.
It's all the girls. It's all the ladies. You're not going to
bring all the girls to the yard.
You're a good man. You're not going to out him. I mean, you did it, and you. But you're not going to.
I did it.
You're not going to push the limit.
Not going to push the limit. Not going to push.
You did it, but you didn't push the limit. It's okay. All right.
Anyway, how was your night last night? Did you have fun last night? Did you do anything last night?
No.
Thursday night's kind of a professional night. I would expect you to be out there. No. No professional night.
No.
You're like an old married man now.
Yeah.
Got it.
No, I went to Small Cheval. I'm hoping we don't have it for lunch today. That would be. It's too much.
You like the Small Cheval? Completely different than.
Great.
Really? Yeah.
It's consistent. It's perfect every single time. It's good. Price is in the right spot.
I guess I'm just angry from years ago when they kicked me out of the restaurant. So I guess I hold a grudge. I guess I'm one of those guys that holds a grudge. You know.
That was at the flagship.
That was at the flagship. That was not.
That was not
a satellite Small Cheval. Yeah, I know. I still. Listen, if your father, did bad by me, I don't know how good I'm going to be to the son. So, I mean, I don't know. I just told that. I'm that kind of guy. Hey, if he did good by me, you could do no wrong by me. So, I mean, it's equal.
Uh-huh.
I mean,
that sounds so Guido. That entire just line was just like, you do good by me, you're on my good side. You do bad, forget about it.
It's true. Went out to dinner last night on a Thursday.
Oh, wow. EJ's?
No, went to a new restaurant in my hood called Ovio. Pretty good. With a couple that my wife was like one of her best friends.
Oh, wow, swingers. I didn't.
Not everything in the North Shore is about that. Sometimes we just go out to dinner. This was just a dinner, although I wouldn't mind.
Yeah.
I mean,
whoa.
No, I mean,
that's too loud.
It'd be an equal trade.
Thank you, James.
It would be an equal trade. It would be an equal trade.
I don't know about
It'd be like going ES NASDAQ. They're both going to move in tandem with each other.
Sick.
It was nice. It was a nice dinner. Only one martini. I told my wife I'd be on my best behavior.
Oh, that's
so good. I only had one martini. She I promised. Not that I have a problem.
What kind of martini? What do? You go a little extra dirty?
No, I go extra clean. My wife likes it dirty. I go clean.
So you just want just straight. Do you go
like a man, son? That's correct.
Oh no.
And a little bit of vermouth, and just no. I don't like the olive juice.
What happened to you? You've gotten a little like I don't like this.
Too salty.
I don't like this.
I don't. I mean, I'll drink it. Don't get me wrong.
It used to be like
I just don't enjoy it dirty. I like my martini clean. So
you've gone really high class. Like you used to be like I used to eat spam 4 days a week. You don't like this, you eat that. You
4
eat
days a week, but it was on the menu for sure. Yeah,
you used to be one of those guys, and now you're like, no, it's a little too salty for me.
It's a little salty.
It's a little salty. It gives me a little,
like other older men that used to be here. Yes. I still have my taste buds, so I haven't lost them yet. So I don't. They're heightened actually. So I don't like the.
Yeah, it makes my toes swell a little bit.
No, I don't have that problem yet. I don't have that problem. You'll be lucky. I don't have that problem yet.
No, that's good.
You have some of my other issues, so
there's a lot of them.
Hopefully, you're not getting this one. So my wife gets really mad at me because most restaurants will screw it up. So I like as you'll find out as you get older, you kind of eat alike and you start ordering alike, and you start if she's drinking wine, you'll drink wine, kind of thing. If she's having a mixed drink, you'll have a mixed drink. It's just. Because you're not going to drink a bottle of wine by yourself, kind of thing. So you start doing the same thing. So we both. I mean, I love my bourbon. So, but if we're going to do like something else, sometimes we'll do like she doesn't drink bourbon as much, so she'll do like a martini. So I like my martini clean, but I like blue cheese olives.
Ooh. Okay.
She likes hers dirty, but she doesn't like blue cheese olives.
Ooh. So you guys are like the polar opposites.
So, but for the wait staff, it makes it
real kerfuffle,
right?
Because you gotta hit right on the olives and the mixing too.
She's convinced all the time that she gets the clean one and not the dirty one. So makes her mad when I do it.
That's tough.
I know. So that's how we start the night, but it gets better from there. So we started low, we work our way high, which is good. Like hopefully the market will do today. Although I don't know, man. I don't know. You got volatility down 60 cents, which is pretty good. I think we had volatility up about 80 cents on the day yesterday. Let me take a look. I don't have to.
On volatility?
Yeah.
We closed at the high of the.
It opened at 23 and change, and it closed at 24 and change. So it was up just over a $1.20 or so. So it's in by about half of its move on this $25 move on the E-mini S&Ps versus the $100 move that it had yesterday. So we'll see what volatility ends up doing here today. It'll be interesting. Bonds are sick, man. 114. They traded in the 13
on
handle.
The dot.
1326.
Oh, we're losing a little bit on our position, but
yeah, as bonds go lower, rates go higher. No more cutty. Yeah. I know our next friend who's coming in, Chris, was talking about that in the internal DMs to the firm. So I'm sure I'll mention a little bit of that today.
I just took off the calls
that you sold versus the puts.
Yeah.
Mm-hmm. Okay.
We'll lean long bonds here.
Longer.
longer 112 and the 113 strike. That's our spot there. I will say before we get to Chris, I put together a new little thing that I'm working on for Confirm and Send. Couple research-esque look back at yesterday in stocks, not to steal the this week in stocks, which we will have as well with Jamal.
With Jamal at 8:00, yes.
This is just a little something that I put together, so we'll see if you guys like it. I would love some feedback if there are things that you would like to see that are based on like yesterday's market as kind of a market recap. Let me know. But we're gonna show that today. So
great.
I don't have the branding down yet. If you want to, give us names, you can name this segment too.
Sure. Where can they send those suggestions to?
You could send it to Nick at tastylive.
Bad at tastylive.
Bad at tastylive.
Okay.
And so just kind of putting a little carrot out there.
I like it.
New little segment. It's not new, but it's something to, I don't know, spice up.
You said enough. We'll wait till we get there at around 7:45 or so, and they can see and they can judge for themselves. I mean, how about judging Bitcoin here? 72.3, kind of quiet move.
That's the only thing that kind of gives me, because I feel like we're gonna have two-sided action, which is not a shock because we've had that basically every day. But I feel skeptical of this rally a little bit into the weekend and just all the things that happen on the weekend. But Bitcoin is kind of on the other side of the coin where it's like, it's catching a little. I think there might be, I think Bitcoin's going to have some goofiness in the next. Like, I think that's as we've talked about, like every asset has had its like crazy volatility in the last like 6 months. I think Bitcoin is kind of due.
And IBIT might be the best way to play that one way or the other. If you're doing it, you can also just buy the cash, of course, if you're looking at it that way. This is all oil related news that's kind of putting a damper on the market. Zintight, God bless you, whatever we're saying these days.
Yes.
So I think
I feel blessed.
You are. I lost my gold down small, silver down bigger, 97 cents, a little over 1% move in silver. You know what? I'm going to take a quick 90-second break.
Did that really throw you?
You threw me. You threw me with the blessed thing.
I'm sorry. Well, you said bless you, and I said I feel blessed.
That's not something I usually say.
All right. I feel blessed every single day. I get to wake up and come into this office and start the show at 7. And I get to do it with my dad.
That was a big thing that the gentleman, Rick was his name, very nice guy, that I was talking with last night because he asked, what you do, this blah, 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 the small talk thing. I told him I worked with my son. He goes, really? Wow. He goes, I have a son. He has 4 children. His youngest is his son, still trying to find his way a little bit. He's younger than you, about 25 or 26 or something like that. He goes, I don't know how I could work. He's in finance too. He goes, I don't know how I could, if I could work with my son every day. And I say, well, you know what? It's been very easy. I don't know what I was expecting, but it's been very, very easy working with you. I will say that my wife will say to me, like, did Nick enjoy his vacation in Vegas? Did he like the hotel? Did he have a great meal? How did he score on his golf? She asked the questions that normal people would ask if they were together with their kid all day long. Yeah. And I said, I don't know. She goes, you're with him all day long. What did you ask him? I said, I don't know. We just really talked markets. I didn't. So you'll notice that I asked you those questions days later.
Yes.
Because she had asked me.
Don't feel bad about this because this is not a father-son issue. This is just a man issue.
Is that what it is? That's what I was hoping that would be the answer.
My girlfriend will ask me the same thing, like, oh, how was your dad's trip to Florida? And I'll be like, oh, I forgot he went. Like, I'll ask him tomorrow. It's that kind of thing. So it's not a father-son thing. It's a man thing. It's a mental problem. We have mental problems.
On that note, we'll take a quick 90-second break. We'll try to solve those problems right after this with my man Chris Vecchio coming in the house. Let me explain. We'll be back in 90 seconds. Tasty Live. I'm glad we got that settled.
Yeah.
global markets never sleep. Explore them with Forex on tastytrade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
Really
you,
do
Rob.
appreciate it.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
We are back, son, and you know what that means. Time for a little bit more Tasty Live with this man, Mr. Chris Vecchio. How are you, sir?
I'm doing well. I want to thank you both. Day 3, we've made it. We did it. The poly market bettors said, Tony, you would kick me off air before we got through Friday after that morning note kerfuffle on Wednesday, but here we are. We made it.
No, not at all. But I am truly excited right now this morning because in about 7 minutes or so, we're going to be able to get your facial expressions to the GDP, durable goods coming out, and everything else this morning, which is going to be amazing.
I'll give you a preview of it.
I mean, I want to see somebody who actually gives a darn about those numbers behaves when they happen.
It's not quite blue steel from Zoolander, but it's going to be something like. And that's it.
I like it a lot. I like it a lot. How are you, Chris?
Could be better because it is supposed to be a morning where we have some interesting numbers come out, and folks like me would usually pay attention to them. And instead, they don't matter at all because we're looking at the price of oil. And that really is the only thing that matters. When you get a schism like this, right, it's kind of like looking at labor market data from February 2020, when you knew all the layoffs were coming down the pipeline in the March and April data. Like who cared what the February jobs data had said?
Right.
There was a major disruption. So we're kind of in that same mindset right now.
So everything takes a back seat, right? I'm in the same camp as you right now. I think this is all news related and driven when oil is the catalyst of it. A lot more resilient than I thought it was going to be.
Proving resilient. The NASDAQ has been doing particularly well. Mega cap tech has been holding up better than its counterparts. Today is more the same. Russell having a nice, meaningful bounce here as oil comes in ever so slightly. But I mean, we're going into another weekend.
Yeah,
guys, have we seen markets go into the Friday close since this started? I mean, it's only we're talking about the end of the 2 weeks now.
Yeah.
But have we seen the market go into the weekend on strong footing, or does it kind of limp in there because everyone's so scared? I wouldn't be surprised if we look at that war trade hedge come in where it's oil up and stocks down. And then maybe we see the weekend's news and first call, we get a gap lower in oil because nothing big happens.
Yeah, I was kind of talking about that earlier this morning and managed a couple positions in oil, MCL futures, micro futures. But I think that's an interesting point in that the weekends have been where we've seen things start to get dicey. And we've had on Fridays, it's kind of been a risk off sentiment. This is of the 3 weeks is the only one we've really come in with a little bit of a bid volatility coming in. It seems
a bit in the market and volatility coming in a little bit. You mean?
Yeah, and oil coming down a little bit. Like
22 handles after 100 handles, after 70 handles, after
nothing.
40 handles, after 40 handles prior to that is not like
it's nothing.
Rally back. Yeah.
But it gives me a little pause. So I'm kind of on that same footing as you are, Chris.
Mm-hmm.
Yeah, it doesn't necessarily mean I'm going to change what I'm doing. Mm-hmm. It just, do I have faith in this equity market bounce here?
I would like to get 50 or 60 more handles in the NASDAQ so I can scale out of some of my positions. I said that this morning. I'm going to stick to that. Not that I'm fully loaded. I mean, it's relatively small.
Well, the expected move this morning in the NASDAQ is, closer to 270 handles. So you're inside that expected move.
Bonds under 114.
Again.
Ooh.
Chris, I know you wanted to talk about that a little bit. Go ahead. Give me your take on bonds /ZB under 114. And you can see here probably one of the weakest products notionally too, coming from around 119 or so at the earlier this month, and in the less than 2 week span here, going from I'll pick out the high here and say 118 and change down to 114, just under it right now. You're looking at $4,500 in value coming out, and notional, big number here, signaling rates are not going to be cut.
Yeah, and it's kind of a regime change flip, right? Let's wind back the clock to 2024. The Fed gives you 50 basis points of rate cuts in September of that year. And what do treasuries do? Treasury yields go up thereafter. It's a reflation environment. Looser monetary policy is going to help growth and inflation. And we kind of see that along the way as the Fed loosens rates and it makes its adjustments over various points of last year, where treasury yields, they don't go down. The Fed is adding lower policy, looser rates, or looser policy, lower rates at a time when inflation was already above target. So it's interesting that as the cut odds are disappearing, it's not producing a shift for lower yields, saying that, well, we're not going to get the cuts, so we're going to have lower growth and lower inflation. The cuts are following the inflation expectations right now. As those are going up, the cut odds are going down. So this is a true inflation scare. What makes me concerned is that if we're looking at a short-term energy supply shock, we should see a steeply backwardated crude oil futures curve, because it's really just the front month, maybe the next month delivery that gets impacted. And while it's a little bit less so today, we have seen in recent sessions, really over the past, we'll call it 72 hours, that the crude futures curve has started to flatten out somewhat, which is to say that traders are beginning to bid up the mid-month contracts as you go into June, July, August. They're no longer ignoring the risks that there could be supply disruptions as late as December. So that makes me uneasy. And you see the market yesterday drops the chances of a Fed rate cut by December below 50% for the first time all year.
Hey, you're just looking at the Fed watch tool, right? That's not just your opinion. You're just looking at what the
positioning.
Correct.
Yeah.
Correct. So CME Fed Watch Tool is using the ZQ contracts, which is the Fed Fund Futures contracts. On our platform, you can use the SR3 contract, which effectively is the same exact thing. Mm-hmm. When you look at the SR3 Z6, for example, for the folks that just want to know how this works mechanically, on your Y-axis, you're going to have numbers that should be in the 90s. If they're in the 80s, we have a huge problem.
That's a problem. Right? That's a double-digit interest rate.
It's a huge problem.
Yeah, it's a huge problem.
So you take the number on the Y scale, you subtract that from 100, and that is your implied Fed funds rate for the period. So SR3Z6 would be, you take that number on the right side, subtract it from 100. That's your implied Fed funds rate by December, the Z cycle of this year. So you could see that this contract is now trading at its weakest level in over a year at this point in time.
Yeah.
this is the least confident that the Fed is going to give us a cut by the end of this year that we've been since the tariff episode. And quite frankly, we were more confident during the tariff episode because people said, oh, this is going to be such a disaster. The Fed's going to have to cut. And now we're already through that. So, the confidence isn't here. The cavalry's not coming. If that doesn't make sense for the nerds out there, Gandalf's not coming over the hill with the Riders of Rohan anytime soon.
What is this contract trade price-wise? Like, what's a tick in here?
Oh, that's a good question.
Like,
I haven't
is
traded.
it really that tradable? Because
I use it as a gauge to watch. I've tried twice to place trades in it, and I haven't been able to be filled.
Okay.
It just and like at the price I wanted. Right, there are no options. I'm not trading the options in this.
Yeah.
I'm trying to look at it. I mean, the expected move is basically zero. I don't know.
Well, it's just based on the change in.
Yeah, it's gonna go to par eventually.
Yeah.
I get that.
You're getting a 2,500 full point multiplier at $6.25 tick value here.
Okay, so
And you got a 40 tick expected move in 180 days. I mean,
Yeah,
this
so
is not.
so that's what.
I mean, this is where you go to tell people you trade. If you don't trade,
No, I think it's.
Like, I mean,
I think it's to Chris's point. It's
Overnight buying power is $500.
right?
Yeah, it's an easy way to get what the short-term rates are.
Yeah,
A 3-month rate. That's that's pretty.
Yeah,
it's a pretty interesting
And if-
way to look at it.
You could do that
long
as a
bonds
wait
is
instead
the
of
same
ZT.
trade. Yeah.
Well, I mean, ZT, if you're thinking about the short end of the curve, ZT has a 781.25 tick value and $1,300 of overnight buying requirement. So if you're playing like, what's the Fed going to do? You don't need to play the proxy of the 2-year note. You could just go to the SR3 and trade it directionally.
sure. Or you can do BIL too if you're looking for a place to park money. I mean, that's 1 to 3.
Yeah, no, I was talking about it in the sense of like seeing where current short-term rates are.
Yeah.
It's a pretty interesting way to
Yeah,
do it.
Cool water cooler talk. I get it.
Yeah.
I get it. Yeah. I get it. I do.
Water coolers. You see, guys, see that the Chicago Cubs are now the third most valuable team in Major League Baseball.
Really? What's that number at? 10?
Yankees are 9, Dodgers are 8, Cubs are a little over 5.
Oh, really?
And you know, we talked about this before, but how many degrees of separation is it, Chris? You'll probably know. My son won't know.
For what?
Is it 6 degrees of separation? 3, 9?
Between you and Kevin Bacon?
Between us and the Cubs. What is it supposed to, so you didn't
What do you
hear
mean
this?
us and the Cubs?
Prior a company that was started by same people that started this company back in the day was sold to TD Ameritrade.
Yeah, Ricketts. Yeah.
The Ricketts,
Yeah.
right? And they wanted to buy a company for cash. And the powers that be said, we don't want cash, we want stock. So they gave us company stock instead of cash, which freed up a bunch of cash for them. And they went out and that same week bought the Cubs.
Wow.
So they never buy the Cubs, never make probably one of the greatest 2-trade combinations ever.
Damn.
Buying the prior company and buying the Cubs basically in the same year if the powers that be didn't took cash instead of stock. So it's an interesting story. It's how things work out when it wasn't really planned. It's an opportunity.
Are you telling me that you're the reason why the Cubs traded Javier Baez to the Mets for Pete Crow Armstrong?
Something that would be another degree of separation.
Javi was great once upon a time, though. So
he came to the Mets and gave the middle finger to the crowd and then left.
Yeah, I know, but you can look back at
and got paid and got paid still.
Look back at his time in the Cubs and be like, "Wow, that was cool."
El Mago, he was great back in the. I can't believe that him. It's like Chris Bryant, him, Anthony. They all sacrificed their souls to get the Cubs a World Series.
Yes.
Addison Russell? What happened to all these players? They're all out of the game. Basically, out of the game now.
Yeah.
Pete Crow Armstrong, never an Ojibwa boy.
Is he?
Went to Ojibwa for a year.
Didn't know that. Your camp alma mater.
Yes.
Yeah, rich white guy problems. Right. Good job out of you. What else you got for us, Chris? Give us some more. Segue us here, please.
Sure. Transition.
So when you said something about bonds there for a moment, is monetary policy still a panacea or is it not?
No, there's nothing the Fed can do here right now. And, like the bigger issue is that people keep drawing comparisons to the 1970s, and they're doing the very, I'm in the mood today. So they're just doing a very amateur, like tourist of history type of view. That's
you go
being
back
spread.
50 years, things are different 50 years ago.
They're totally different. It's like when people show the 1929 analogies of the stock market, like it's a different environment with different regulators, different liquidity providers, different market structure. Like to get that kind of cascading sell-off, Anyway, the point is 1970s, the popular narrative that you'll hear from the guy on Twitter or the hobo behind the liquor store, I don't know if there's much of a difference these days, is that the Yom Kippur War coupled with the oil embargo, which only lasted 6 months, led to, inflation over the next 6 years. I think that's a shallow reading of history. There are a lot of conditions that happened in the 1960s and 70s. GIs coming back from the Vietnam War, the civil rights movement, which unlocks a whole group of people joining the economy, adding aggregate demand at a time never seen before, as well as the continued inclusion of women into the workforce, is adding and building up aggregate demand. Against that backdrop, systematically within the structure of the economy, you have a Federal Reserve that's keeping rates far too low in the late 60s and the early 70s. And so when they try to respond to inflation and it starts to come down after the oil embargo is lifted, what do? It's the classic mistake that sets up the necessity of Volcker. The Fed cuts too early. And so you have the Fed boosting the monetary base, all of this aggregate demand in the economy with an energy crisis that allows for the inflation to, percolate, if you will. And now what do we have? We just had how much of the monetary base during COVID expanded, and everyone points to the Russian invasion of Ukraine as the catalyst against that backdrop that allowed inflation to bump up. And so do we say those conditions are here today still? I would argue yes. The Fed is cutting rates. The balance sheet hasn't shrunk. The government deficit is continuing to increase at World War II-like paces, $40 trillion in debt. So anyway, we're in a good position here in the United States right now.
The dollar's strong.
Everything seems, it's still the nicest house in a bad neighborhood, and everyone's being reminded of this week.
Can't give it anything, huh? Everybody wants a strong dollar. You got a strong dollar.
What do the other currencies have going for them? Not to be a jerk about this, but like the pound is the currency of a dying empire, a dead empire.
My point to you on Wednesday, but go ahead.
The euro is constantly at breakup risk. The yen has horrible demographic issues working against it. People aren't going to trust the yuan with the CCP. The ruble is the currency of Europe's gas station, effectively. There's no alternative right now. And
Aussie dollar would be the only one. Yeah.
Are you going to carry around a bar of gold and like shave it off little by little to pay for stuff? That's heavy. You need a ship to do that. And all the ships are stuck in the strait right now.
Did you just do a story on Bitcoin? Just sounds like you just talked about Bitcoin. Somewhat.
Maybe, but can the U.S. government see everything that's going on the blockchain and claw back those transactions, as we've seen numerous times over the years, even if people are using things like Tornado Cash to try to obfuscate the transactions? Uncle Sam finds you.
All your important, non-important numbers came out, moved even the S&Ps.
Nothing. They were up like 30 at one point.
Yes.
Tony, I made an explicit point of not even mentioning them.
I know.
They're not important.
Bonds didn't really move. I mean, they're 114.04. They did trade down at 13.26.
I think it was 2 weeks ago, maybe 3 weeks ago, when I was talking about PC. He was like, "Who cares about that?"
Right.
And I had like one of those like taken aback moments. I was like, "What? So this doesn't matter anymore?" And I guess it doesn't anymore. It's at least on
when
the back
Tom was
burner.
here, he already had that lane filled. Now that he's gone, I can take off the mask. I can take off this fake macro character I play and get back to the good stuff.
There you go. I love it.
I like it a lot too.
Yeah.
I like it a lot too. All right, what else?
Last thing for this morning.
Okay,
last thing for this morning. I saw this article in the Financial Times today. Not necessarily anything market related, but polymarket traders are shifting their behavior and starting to take 5-minute bets as a leading area of trading activity. So traders are jumping into the market and then they're holding a position about like, will the U.S. reach a peace deal with Iran by the end of the month? And they're holding that position for 5 minutes and getting out. I'm not a good scalper. Far too emotional, far too biased. So I try to avoid it. So scalping poly market around world events to me is like, that is a level that I just don't think I've unlocked. I haven't reached that confidence, I suppose. But does that concern you? I know that you guys, zero DTE is something that we defend here. Poly market scalping feels a little different. Is this a sign of excess in the market that we should be worried about, even against a backdrop where, risk appetite is clearly taking a hit?
I mean, maybe. I'll say, it's kind of interesting to see that, first of all, these are not as liquid markets as what we're used to. And so they're noticing that they're putting in an order and they're getting filled on it. And then maybe they're up a couple dollars real quick. And that's just widening of markets because they're getting filled and they might be the only, bid there, or there's just not a lot of bids. So the market moves a little bit just because there's nobody else to fill at that price. And just basically they're trying to scalp bid-ask spreads on illiquid markets.
Yeah.
Which I think if that's what they're doing, I think that's amazing because once they get into real liquid financial markets, they're going to be able to at least understand what's going on with positions and understand why managing positions makes sense. I think that might be going back to Thomas, our intern. He does that and has been doing that on the side of his schooling, that he has every single day on the weather in New York. He's just making bids and offers.
Markets are so wide.
It's 3 to 5 cents wide on a $1 contract. So it's a 5%.
He's like a bookie.
I've seen some people point out the Kalshi and Poly market. They don't respond to the news in the same exact manner on the same exact timeline. And so there have been reports of people at Goldman Sachs, Jane Street. I mean, pick a name out of the hat. Someone has been fired in the past month, 2 months, 3 months, because it turned out that they were running a little ARB bot on the side where it was like buying one contract for 51 and selling it elsewhere for 47 and just pocketing the 4 cents difference and doing this tens of thousands of times every single day. And, maybe that's one of the opportunities in this market, Tony. We're sitting here with a fire hose of quotes and information in front of us. I should share a study. Polymarket apparently is pricing in news that's hitting the Bloomberg terminal about 4 minutes later than the news is actually released. So if you are sitting there situation monitoring, Nick, you're at Buffalo Wild Wings, you got your Twitter open, right? You're really tapped in.
Yeah.
If you're nimble, I mean, there are reasons why people are doing this because these are still such early, immature markets.
Yeah.
There are opportunities to potentially exploit still. Now, I'm exploring this. I have Claude fired up. I've started to move away from ChatGPT and joining the Claude bot craze.
Look at you.
Yeah, they all come around to my son's group. Good job out of you.
Doing some back testing myself to see if this is something that's viable, if there's a little bit of money that could be put behind the strategy. And I'm sure you guys would know because the next time I do this show with you, I might be on an island somewhere if it works out well.
There you go.
I don't think that's going to be the case, but it's just interesting that we're seeing people now as the market's maturing. We're going into these smaller and smaller timeframes to just squeeze out these price inefficiencies, and they exist for the time being. Not saying it's a strategy everyone should try to operate in.
I don't think the size aspect is really what is. I don't think you can go in there and dump, hundreds of thousands of dollars on an ARB here.
Oh, you have to caveat emptor if you're going to go into these markets.
No, I know you're going. Right. The ARB exists, and I think this is why you're seeing the retail customers take these 5-minute trades. The ARB exists for those customers, and it's basically ARBing customer to customer. It's whoever's first getting in at a better price than whoever comes next on the other side of that bet. I don't think there's. It's a $500 ARB where you're betting $500 and you might make 3 or 4 cents per 100, $3 or $4 per 100. 15.
I mean, Tony, these are decentralized markets, right? And it's not. I don't want to say it's the same thing, but it does kind of remind me a little bit of like early FX in the 1980s and the 1990s, where because everything was done decentralized over the phones, you could get for like. Cable in London versus what it was trading in Shanghai. Paul Tudor Jones, the whole start of the documentary, The Trader, about him is, him arbing British pound futures between China and London, because he was getting information that others weren't, and he was able to scalp out 3 pips and do this, dozens of times. And so that's the goal here. You're not making these traders aren't making millions of dollars doing this. They're picking up pennies here and there, but they're doing it consistently enough, exploiting the information mismatch in the environment. It's an interesting case study in a new market where you're still getting this price discovery, if you will, and liquidity discovery. But Nick, I think the point that you make is astute. It reminds me of the Eggman prophecy, as I've shared before. But if you go up and you buy all the eggs in the market, when you try to sell them, people are going to say, "Who are you going to sell them to? You're the Eggman." So just be careful. I'm testing. I'm seeing what's out there, see if it's something that's worth playing with. Because hey, we're the dead time of the year. There's March Madness going on, but let's get baseball going again. It's time.
Good job out of you, my friend. I'm going to let you leave on that note, but I will remind you, if you want to talk football, who's your quarterback?
Oh, Gino. Oh, God. Brutal.
Sorry, I'm getting some interference here.
I'm going to leave you with that thought. We're going to take a quick 90-second break and come back with more Tasty Live after this. We got confirm and send with an asterisk right after this.
New one. E-minis up 42.
Yeah, they just made
NASDAQ just rallied 100 points. I scalped out.
Yeah, you were able to scalp out of your NASDAQ futures. Yeah, a little bit. Very good. All right, my friend, we're going to take a quick 90-second break. Volatility in by 85 cents. We'll be back with more Tasty Live after this.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
really
you,
do
Rob.
appreciate it.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University, number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live with Confirm and Send Friday the 13th style.
Yeah. I guess
a little bit different.
Yeah, a little bit different.
See if you guys like it. Give us some feedback. Nick at Tasty Live, Bad at tastylive.com.
I mean, we had Vanetta's been out for a couple days, so we had, we're just throwing some things at the wall here.
We had some extra resources because she takes a lot of time up. She's very high maintenance, so the guys were able to do a little bit more.
You be careful. She's probably still listening.
So of course, the walls have ears. Let's see what the market's doing. Even the S&P's up 31. They are about 15 handles off of their highs. Couldn't say that earlier today. Even the S&Ps have had a nice range already. 80 handles overnight. Volatility has come in by 72 cents. Volatility was steady all day long yesterday until that last push lower when even the S&Ps went from down around 65, 75 down to about 100, closing down there on the day. And then volatility made its highs of around 24 and change, a half or so. Now in by about 3%. You wanted NASDAQ higher. You got NASDAQ higher. You were able to sell some of your futures out at 24,704, about 30 handles off of their highs. Nice little move up for you to take advantage of. Russell, the strongest of the group right now on a percentage basis, up 17. The Dow up 200 and change. We'll see if we'll be able to hold a rally. We have not been able to hold a rally all week long, as you can see by the action here on the right side of the chart. Bonds over 114, still relatively low, got down to 113.26 before all the GDP numbers came out, which everybody that follows that stuff has written into me that they're all in line, whatever that means.
So that was the number that moved everything.
I don't know. It was a delayed move.
It was a delayed move.
It took like 20 minutes.
That's why I think it had to be a tweet or something,
yeah. Who knows? Who cares?
The war
really?
is going well or something. We'll be done soon.
I just think I really here I'll tell you. I mean, for me, I think it was oil. Oil got down to 91 or so, so you're about $8 or $9 off of its.
So they all moved in the exact way. If markets were spiking higher, you'd expect it's on a move lower in oil.
That's correct.
It's all the things were happening at the same time.
That's correct.
You had bonds up. You had gold bounce a little bit too.
Yeah, you most definitely did. Gold was down to 50.66. It's about 80 handles or $80 higher than that, just off of its highs of almost unchanged. Silver's down 69 cents. That was the one that was the weakest between gold and silver. Gold-silver ratio spread really hasn't moved all that much. It's trading right around $60, 60 in the orders or so. Net gas down 6.5 cents. 2% move, but net gas a tough one to trade. Bitcoin 72.4, a lot more things to trade there, whether it be coin, COIN, which is also up around $7 or $8 this morning, or IBIT if you're looking to go there. If you're not looking to trade the cash, you can look at that, trading around 41 and change. Ethereum up $73, good size move, double the move in Bitcoin, really, if you're looking at, I guess if you look at the cash, it's basically the same. My mistake. I digress. Oil off of its lows of 91, $5 range in oil. If you go to the trade page here and look at what the expected move for the day is, about $3.50. That would be all in one direction. No, that's either up or down. So you've got a decent sized move in oil. You got a decent sized move in the market. We have not been able to hold a rally. I don't expect us to be able to hold this one. I think you can have some two-sided action. Yeah. And we'll see how the rest of the day goes.
It'll be interesting to see where oil volatility ends up towards the middle/end of the day today. Because you're at highs. We closed yesterday. So the OVX, which I can pull up here, it's OVX colon CGI. It's a VIX-style crude volatility index. We got up to like 125 yesterday, I think was the high, 125.99. We closed at 120, which is really where we were kind of into the peak craziness the other day.
Yeah.
And so I think that'll be kind of a good indicator to see where the market and this is not like I'm not going out on a limb here, but it'll be a good indicator to see how the market is perceiving weekend risk. If you have volatility come in a couple points or even more than that, it might mean that, the weekend's kind of maybe not as scary as it could be. But if it stays bid, then I think you gotta watch out.
Mm-hmm. Very good. All right, let's get to this.
Let's do it.
Friday the 13th.
Slash, I don't know, name rights up for grabs here.
So if you want to name the segment.
Yeah.
Okay.
Yeah, it's something.
Email in.
We don't know how long it's going to be. We don't know anything about it, if this is going to be the last of it. But really, it's just going to be like kind of a daily recap is really what we're thinking for this. So we're just going to walk through kind of what happened in markets yesterday if you kind of missed out. So let's give it a little bit of a look here. So first slide, we're going to just look at the index performance. The way we're looking at this is giving you the high, the low, the open, and the close, and just the overall daily returns. On the move size is kind of an interesting look. We're doing this on kind of an average look back. I think we're using 10 years on this in terms of relative to the expected move. So
it's not a personal opinion here. It's based on the math of the expected move.
Yes, I will get a more in-depth
explanation on
the exact expected move and what we're considering this as significant. So we're kind of calling it like an inside down move, a significant down move, an inside up move, or significant up move. Those are like kind of the four, like inside up, inside down, or outside the expectation to one of those sides.
Well, I said this morning, you laughed at it. I said, what a month this week has been. And that's basically what they're saying here with this significant move.
Yes.
Okay. And so in probably a more intelligent way than I said. More widely recognized way. How about that?
I don't mind how you said it.
Okay.
So going into just the sectors themselves, we're going to break this up into up and down. We have a lot of down sectors here. Yesterday, really the only thing that was up were energy and utilities. It's funny because when I was putting through what ETFs I wanted here to measure, and these aren't, we have another list on the next slide that we'll look at in a second, but I didn't include basic materials. And basic materials were the biggest performer yesterday. So if you look at, and we'll see that on some of the stocks because we're going to pull that in. But really yesterday, the story was energy and utilities were really the only thing with any sort of strength. And it's been like that, pretty much all week. Materials themselves, so that is more in the gold and silver realm. So that's like kind of an XME basket. So that's looking at like gold miners, silver miners, that sort of stuff. Not basic materials like in the ags and stuff like that have been kind of going crazy. Financials have been super, super weak.
Super weak.
The rest of the list, we get to the next slide here.
Wait, before we get to that last one, if you look at it was consumer defense or consumer staples, however you want to call it there, that's your Walmart, your Costco's, your Philip Morris, your Altera group, like that's that kind of, they've been going, like the whole mix of them has been kind of sideways action, which I think is a little, little counterintuitive to what you would think going on with the market. I don't know. I guess, I don't know. It's kind of interesting. I don't know, to me. That wouldn't be weak also.
Yeah.
Next one, please. Sorry.
To the downside, it's pretty much everything else. So you got healthcare in there, metals and mining. The metals were very weak. Yesterday, tech obviously getting killed. Semiconductors, kind of the story of the day. The semiconductors, which have been the biggest mover in both directions here. And so on all these, you'll see the IVR. I'm going to cut that down to no decimal places so that it's easier to read. Again, work in progress here. I'm out there Claude coding here, vibe coding, as the kids would say.
You fix the follow feed so my option trades today.
We're working, okay?
Can be on there.
Hey, you're
a coder now.
I'm on track.
You're on track.
You like that? You'll have the implied volatility, which is our IV.
For you to be on track, we had to get somebody to be under track. So
no, on track's right.
On track, right? Yeah, right. Right.
IVX is our 30-day implied volatility, so it's an IV value that you'll see in the platform. It's a VIX style value, so it just gives you a general implied volatility. You can see healthcare stocks generally don't have a lot of implied volatility. They're moving a lot. IVR at 41, a 1% down move, over 1% down move, big change. We also put the 5-day IV change, which you love, in there.
I do.
So you can see, although some of these are moving lower, you're not exactly seeing like a huge spike in volatility across the board here, which is kind of surprising. I guess when you take into account the last 5 days, that includes the 30 VIX that we had over the weekend. So,
Yeah, that 5-day IV change, 5-day IV change, I should say, not IVX, sorry. I like to look at that because if you're looking at something to sell premium and you want it to be expanding over the last couple of days, because we're dealing with the here and now, right? So you want high implied volatility, that high IV rank, and the 5-day change going higher. I don't know, to me, that's nirvana. So maybe the consumer staple stocks, which are a little boring at times to me, are the place to be.
Next slide here, a heat map. Look at this sexy thing.
If you like red.
I know. But it gives you an idea of just what's moving the market here. These are just the baskets in the S&P 500.
Yeah, there's that Walmart, Costco I was talking about.
Yeah, that basket is kind of the bottom right corner. And obviously this is size of these markets, right? So you have technology, the biggest bucket in the S&P 500, financial, consumer services. Those are the next bucket there. And then you got like cyclicals, healthcare, industrials, consumer defensive, all these sort of things. So real estate in the bottom right corner. You can see in the bottom right corner, the stuff that like really is kind of on the smaller end isn't really, moving in the same direction. A little bit more choppy.
I would personally like to see it flip-flopped and see this left side all nice and green and the right side red, for at least for a short period of time here.
If that happens,
give me an out.
It means the market's probably going up.
Yes.
When we look at the Mag 7 specifically, here's a little look back at yesterday's price action there. You got Tesla and Meta, the weakest of the group there. Microsoft has remained choppy around that 400 handle. So we've seen a little bit of strength in kind of the ones that have kind of gotten killed. Despite Meta's move, the ones on the downside have been relatively strong.
Yeah, Tesla was down $12 yesterday. That was one of my option trades today. It looks like it's up about $5 this morning. Still not back to where it was. Well, it's back to where it was about 3 days ago. Not back to where it was actually on Monday. Unlike the market, which was significantly higher, NASDAQ, I mean the S&Ps on Monday than it is right now. Played a little long delta there, sorry.
Good call.
No, everything's up right now.
Yeah. S&P 500, so we're going to give you a batch of kind of the biggest movers to the upside, biggest movers to the downside yesterday, just yesterday. So you can see kind of the story of the day yesterday was some of these basic materials / ag stocks, CF, MOS, which we put on a position on with Vecchio the other day. You got, some of these stocks that you were talking about, like your Kroger is in there. You got some of the energy stocks like Oxy was up 5%, COP, ConocoPhillips. So this is not the usual. It's funny that we're doing this for the first time, and you have kind of these funky stocks up there that we don't really trade, but it at least gives you an idea of what was happening in the markets yesterday. I mean, these are kind of the stocks that were in play.
Yeah, no, most definitely stocks in play for sure. I mean, if you haven't, they're not the most popular names, but and you would expect there to be a lot of energy related stocks. I mean, it'd be interesting to watch those energy related stocks like XOM, which has been high. Obviously, oil going higher, their product is higher. See if the stocks move first or the oil itself moves first. I mean, the conventional wisdom would be that oil moves first, but I've watched these things before in gold and silver and oil back in the day, where sometimes these stocks move a little bit before the future itself. So we'll see. It'll be interesting.
Yeah. On the downside, it's a funky batch here as well. You got a couple energy names in there, industrial technology, you got Block in there, Royal Caribbean. I mean, a lot of these stocks are dependent on you have CCL, Love, Royal Caribbean, 3 stocks that are kind of tied into the price of oil, right? They're transportation stocks, airlines, and some of those stocks have been really, really weak.
If we were looking at this on Saturday, you might have Ulta in there down $50 this morning, just because, you know what I mean. Yeah. So you might be looking.
That was earnings. Ulta had earnings, I think.
Did it?
I believe so.
Maybe. I don't remember it, to be quite honestly.
It's not a very liquid one that we probably would not have traded anyway, but I think it did have earnings.
March 12th, you're right, after the close.
Good. I'm like an elephant. I remember everything.
It's like an elephant without the trunk. Go ahead.
That's it for us. So
good. Good job out of you.
Just a little bit of a recap of yesterday. A couple minutes for you just to kind of digest what happened yesterday. Maybe give you some trade ideas. See stuff that is, getting whacked today. Maybe that's a position. If you're looking for something where you're not buying, tops, those are interesting stocks. If you want to get some short delta, maybe you look at some of the stuff that's flying to the upside.
Sure, or continuation moves on those that have been weak, right?
I think the sector stuff is cool because it gives you an idea of the market's kind of strong today. Why?
Good job out of you. Even the S&P is up 32, NASDAQ up 117. The Russell, the strongest of the group. I like it when the NASDAQ is the strongest of the group. It's not. NASDAQ is kind of in line with even the S&Ps and the Dow up 225. Russell, the strongest, up 17. We'll take a quick 90-second break and come. I like NASDAQ up the most when you want the market to go higher.
Yeah.
Leader in the group. The left side of the chart that we were looking at from your slides that you're showing there. We'll take a quick 90-second break and come back. We got more Tasty Live after this. We're going to bring in Jamal. He's going to go over the whole week for you. We'll be back in 90 seconds with Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
I'm just going to wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20 because that's how many underlyings are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trained 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
I'm still coming down from the weekend. Saturday night like we should. I know I should work a bit harder, but baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know that you worked a bit harder, 'cause baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know what I know, it's time that I go, 'cause baby, your love is too good. Baby, your love is too good. Touch me, hold me.
Nicky, we are back, son. And you know what that means. Time for a little more Tasty Live. We got this man in the room. That's right, my friend Jamal, this week in stocks. How are you, my friend?
Doing well. How you guys doing?
Good. No, a lot of complaints. I mean, the market hasn't been able to hold a rally. I like two-sided action. We're significantly off this week's opening price. I got a lot going on. Oil went significantly higher than I ever imagined it was going to. People, write into me, can't imagine that, you didn't think oil was going to go from 60 to 120. Still holding on. I think the play was selling a lot of out-of-the-money calls, dangerous play, but the volatility was just so high in there. You
didn't really think oil was going higher? I get it, like initially, but I mean, like this past week, it hasn't cemented, like the fact that they've shut this whole thing down this straight.
I think the move's in.
I mean, I think I have said the move is in ever since it went to 120. I said the highs are in for your foreseeable
I think
lifetime,
you'll get
which
spikes.
is probably
You'll get spikes here and there.
you're gonna get
Just
spiked
like
back and
news-driven
forth. But I just think
spikes.
that upside vol was just so Jamal,
I don't see the
news
one-
is such BS on both sides of the coin. It's subject to change immediately, if not sooner. So I don't look at it like that. I think everything is. I try to take advantage of it, but I like.
in
selling
the heat of the moment, the story was 200, like inflation adjusted to 08 or what was when did we get high? The high like 150-ish was 08-ish?
Like 150 something. Yeah. No way.
Inflation adjusted, it would be 200. So that was like the narrative that I was seeing was like, oh, if we're going to go back to the highs in 08 or 09, inflation adjusted, it would be 200. And so people were calling for that. And I think that's why my 175 calls were bid at $1.
Yeah. $1.50. Yeah.
But I don't think that's in the cards. I don't think Trump is going to let that happen. I think the powers that be are not going to let that happen because
Nimble is the word for the day, and you've been trading it nicely that way, not marrying into positions, just being nimble. That's the way to play it.
I don't know enough about like the details of this conflict. Honestly, I haven't looked at the news of it. I haven't really read much on it outside of the financial stuff that we have. I don't really know about, where troops are located. I just saw something a little while ago, Italy pulling troops out of Iraq. I'm like, they have troops in Iraq? I didn't know that. I mean, why does Italy have troops in Iraq? So I don't know. So I'm just telling you that's the vantage point I'm speaking from. Yeah. But just looking at price action, it seems like oil is very comfortable in the 90s. And the idea of drifting higher, I don't know about spikes. Like, I think that was ridiculous what happened on Sunday. Clearly, that was people blowing out. But it's comfortable seemingly in the 90s, which to me says we could easily continue to move higher at some point. That's how I feel.
105.
Just looking, yes.
Yeah, like that seems more reasonable. The 120, 150, 175, 200, that seems a little bit.
I think it just really depends on how long you think it's going to last. That's right. That's really what I think this boils down to. I mean, is it going to be a month? Is it going to be are we still going to be talking about this in 3 months? That is where you start to see those prices. I don't think when we're saying 120 right now, it sounds like we're talking about like a 30-point increase currently from where we are. I feel like that happens over time if this lasts long. That's the thing that makes me nervous. So to your point, Tony, like all the things you mentioned are completely accurate. And I'll add in one thing. We had the lowest close of 2026 last night.
Yeah.
I think closing below 6,700 is not good for anything. I'm actually glad that we're up today. I thought closing below, and this is Friday, so who knows how this, and it's Friday the 13th, so who knows how it's going to end. It's that's ominous, but we have seen them let them go into the weekend. And so I'm a little worried about that today, especially after a close below 6,700. But I just feel like oil prices. I know, but
October, November, we were at these numbers too. I mean, you make it sound like 6,700 is a magic number because you're looking at the end of the year till now, which is a short.
No, I'm just saying based on resistance. Resistance is a thing. I mean, it's a thing. Resistance is a thing.
You get when you look at the market, we've been bouncing around 6,800 for
and yesterday was 6,700.
And yesterday was the first time we've really had a little bit of.
We had that overnight move on Sunday too that got us down here too. I mean, matter of fact, this whole week is inside Sunday's big move.
Yeah, but Sunday we reversed that whole thing. We were
yeah.
So yesterday was the first time
we were back in the 68 handle.
We kind of closed underwater relative to where we had been trading the whole day.
Exactly. That's what I'm trying to say.
Yep.
I don't care what the number is. I don't care if it's 67. I don't care if it's 66.
Yeah.
We closed underwater from where we've been trading. That's my point too. Right.
Yep. Totally agree.
Let me pull you up some slides and show you a couple of things here about what's been going on. You guys know I love trends because trends help me make sense of the market, and that's what we've been doing here in these last couple of weeks of slides looking at the week. CF, Moss, LYB, Dow. When you see those names, what do you think of? I'm just curious if you do. I got a story for you. Of course.
I think of the dollars that
I picked the wrong profession.
Yeah, I think of the dollars Mr. Vecchio made me when he said, hey, you got to look at the fertilizer stocks here. Everybody's freaking about oil. Just wait until we can't grow crops. And I was like, bro, I don't know what you're reading, but I'll follow you into the darkness here. And that's
the darkness.
These are such short-term moves, in my opinion. Okay.
I caught him.
Of course.
I know. I get it. But the sky is falling kind of thing. Just wait until this happens. Just wait until that happens. Are such short-term trends. I hate them personally. Yeah. I really do. But they're opportunities.
Obviously. Exactly. And that's the point. So obviously, without going down the rabbit hole, which I don't feel the need to do, it's very interesting to me because CF and Moss, and there was another name, AGU, the fertilizer names. These were names that were absolutely crazy. I used to trade them heavy in 2008 when oil was doing, and other times when oil has done this. Mm-hmm. And just if you don't want to trade those, totally makes sense. Guess what? These affect the grains. If you've looked at the grains recently, you've seen a similar effect. Wheat, soybeans, corn, similar deal. Trade them however you want. You can trade them and fade them, or you can actually trade them. Well, that's a thing that we do, but you can actually trade them if you wanted to the upside as a way to offset long delta in your portfolio. So that's another thing you can think about. People are always looking at buying puts. I mean, puts are expensive right now, right?
Yeah,
but if you wanted to trade another way, And this is affected by oil. This is directly correlated to the oil price. Fertilizer names, chemical names. We've talked about Landman a whole lot, right? There's a little instruction time. Landman talked about how many different chemicals. Remember when he told his son how dumb you are? You don't realize how many chemicals how many things are affected by the price of oil. And I wasn't his son. I think he told the lawyer. And this is an example of that. LYB and Dow, they're plastics. They're affected by oil, and that's why those have moved. So just showing the different trends. One interesting thing this week is the refineries. You can see the refineries this week. VLO, PSX, MPC. Refinery names have been on the move this week. Oxy is another one. So that's kind of fascinating. ADM is also fertilizer, and so is Bunge. So these have been the big movers just this week alone. For whatever reason, it took this week versus previous weeks, right? So all of a sudden, I guess, you know what? We almost might need a viewing party for Landman just for that one scene, because once we got into a certain level of price, all of a sudden, these triggered. And I just find that super interesting.
Yeah, we could cut that and have Vecchio just run off the top list of fertilizer stocks and which one. I remember he was talking about like some fertilizer thing that goes into corn the other day, like I remember it sounded like urine, like it was called like urea or something.
Urea.
Is it
urethra?
I believe it was
related.
Yeah.
No, it's urea. It's related to
about?
phosphorus.
Yeah,
it's related to phosphorus.
You would know this stuff too.
I would know this.
Yeah.
So I would also say he's going to take it the next level and say, these fertilizers are going to affect crop and it's going to affect certain countries and they're going to go into famine. I'm not going that far. Okay?
I've heard that story too.
That's where I stop. That's where I stop.
I'm hearing if this lasts too long, there's like countries that are going to be like in a famine. I'm like, come on, man.
That's where I stop. And hey, look, that's the real doomsday situation with Tony hates, which I do too to some point. My whole point is, yes, 30% of the world's fertilizer goes through the Strait. That's not nothing, and these stocks are showing you that that's not nothing. That's my point.
That's fair.
Let's move to the next slide.
So good.
Geez, this one is a mixed bag here. So I will say, when you look at Campbell's and Conagra, and Lamb
again, another life choice. Why did I pick this business? I could have been a dentist. Go ahead.
Really?
Campbell's soup. How do you trade it?
Would not have been a dentist. There is nobody that is going under a knife to you. Okay, I love
Let alone
you
would like to be in people's mouths that much?
No, I would not. That's what I'm saying. I mean, I look at Campbell's soup. It's like, why? Well, I could have been a dentist. You know what I mean? Like, why?
Yeah.
Yes, I agree with you. Why did I pick this profession? Go ahead.
It's surprising to see AppLovin on this list. A lot of these software names have actually seen a bid recently. We've noticed that. But just wanted to point out the consumer defensive names. Those are the ones that were actually catching a bid like before, I don't know, like the first week of this whole thing, right?
Yeah, we were talking about Pepsi.
Actually, a little before this just really kicked off. It was in January. We saw a lot of this. January, early February, we saw XLP getting bought up as software names got sold off. And all of a sudden, when this kicked in, those are the names you usually expect in a quote-unquote war to be the ones that people run to, the consumer defensive names. We've seen a little bit of sell-off in some of those this week. Ares Capital Management is sort of the one thing that's capturing something that I don't think we've talked a whole lot about. I personally haven't really. And you talk about stories in the market, and that's the private credit thing.
Yeah.
This is capturing that. So, think what you will. I mean, we've seen financials struggle, XLF, if you look at them, Goldman, JP Morgan. I'm in a bunch of them, honestly, short put spreads. We'll see how that plays out. But that's been that area of the market that I think is
I like your play, and what's blowing up in J.P. Morgan and others that you just mentioned on this private equity side of it is the two counterparties themselves making markets. This is not really a public problem, meaning consumers like UI and everybody else. Yeah. This is one rich MOB, and another one coming up with some product that they decided to put together or put their customers in, and they're just screwing their customers. This is the point that I think is being missed when they get these headlines about this. It really has zero to do with us and our markets here or credit ratings or anything else like that, bonds or anything else like that. It's really a private transaction. It would be like you and your neighbor or you and the mafia, which would be the way it would be. Go ahead. I'm sorry.
Thank you. No. Absolutely perfect timing. Thank you for explaining. I could have said it better myself. that's
you probably
why
could have
I
said it a
haven't
lot
really
more
been as worried
articulate than
about
I
it.
did, but sure, go ahead.
No, actually, you nailed it. You nailed it. Let's go to the next slide. So those are just directional up and or down. This is vol related. So again, similar names we talked about, not too surprising. I guess I didn't mention Fair Isaac on the last one, but it's really more software related. That stock has gotten taken to the woodshed. Honestly, it should. I feel like stocks like that who like, what do they really do in life? And they're like $2,000 and all of a sudden they're $1,000. You're like, yeah, you needed that haircut. Anyway, CF, Moss, FICO, Aries, a lot of these names we mentioned have gotten bid and vol this week, ConAgra. So do with what you will. And then the next slide, last slide. These are names that got smoked vol-wise this week. A couple of them had earnings. Of course, that makes sense. Oracle, DG. I don't know if Vertex had earnings or if there was just some chemical situation that occurred. Surprising to me is WDC and SanDisk. Those have been some of the hot names as far as making moves and vol, and those are down on the week. So, yeah. Micron also. That didn't have earnings this week. It has earnings.
It has earnings next week. Yeah, next week. It's
so, yeah, lost
that's going to be a
vol.
really interesting one because it's tied.
Volatility's real high in there too.
Oh, through the roof. I mean, they're pricing that thing like it could double next week. That one's going to be a really interesting one because it's that whole space: STX, SanDisk, Western Digital, Micron. Even if you tie in the whole Korea market, which is like mostly Samsung, which is in that space as well. EWY, if you've been trading that, it's been a volatile ride. So that should be interesting next week.
All right, good job, my friend. Anyway. Even the S&P 6709 up 31. We'll take a quick 90-second break and come back. We got more Tasty Live after this. Jamal, great job with the slides. We'll be back in 90 seconds. Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes success. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son, in just about a minute before this market opens. Even the S&P is up 28 and change. Why does it feel like they're down?
I don't think it feels like they're down.
Oh, okay, good. Even the S&P is trading 20 up 29 now, 67.06. They've been as high as a quarter, down to 66.40 last night. I did not see that. You've already had about I don't know, what is that? A 60.85 handle move on the E-mini S&Ps with expected move for the rest of the day, about 50 handles or so, 47 or change. NASDAQ is the weakest of the group, still up 80. Russell is the strongest of the group, up 17, and the Dow up 200 and change. Volatility in by 59 cents, although it was about 30 cents lower than that just a moment ago. Of course, it's a full $1 off its highs from last night. There's your opening bell. We'll see how the rest of the market behaves here in just a moment and take a look at that. You would imagine that volatility, we say this almost just every Friday, that volatility does not come in existing positions that you have. I'm going to kind of change that just a little bit today. If we can hold this rally a little bit. Yesterday, volatility did expand and expanded right on the close. I think we get that back and maybe a little bit. We've had a lot of volatility in this market. We've had a lot of volatility holding up. A lot of pricing is priced in some extra daily moves to this move. I think you can get volatility weak this morning. Maybe we could see volatility in if even the S&Ps can stay, up in this 30-ish plus handle move that we've had so far today, just because yesterday volatility did not come in at all. What'd you just do there, Mike?
I shorted a little bit of the Russell here into this rally because I'm long the NASDAQ. I have that call spread as well, so I'm like kind of neutral to long NASDAQ. We'll just long NASDAQ because the call spread is a vol and decay component. Into this rally in the Russell, you have bonds lower, or bonds basically unchanged now. They were lower, but at the lows, I think you can kind of sell some of the small caps. So
good IV rank in there too. Look at how this volatility has really expanded in the bonds. If you look at TLT, just to try to get what the last 5-day move was here, you can see the IVX 5-day change here up 5% on top of big moves in volatility right now, on top of big moves in price too. Probably warrants a trade. Adobe, what you just doing there?
I just closed that. I did a little earnings trade on the close yesterday.
Probably played it to the upside, I'm imagining.
Played it to the upside. I thought it would have like an Oracle type move.
Inside the expected move, though.
All the bad news being baked in. It turns out to not be the case. But we have seen...
Adobe was down around 22, sorry to interrupt you, pre-market, down about 16 or 17 right now.
We have seen a lot of these software names, like we had a position in Snowflake, where the stock opened down $10, and by the end of the day, it was up like 15, 20.
Yeah. Agreed.
So I think we could do that. We could see that.
Let's see what's moving this market here as even the S&Ps are up 30 and change. Russell up 21. That should leave the clubhouse. To the upside, you've got SanDisk. You just talked about it's selling off, trying to catch its little bit here, up 21 or so. MU up $12. Coin up $11. Not surprising with Bitcoin now over 73,000 and change. MSTR up 7, TSM up 7, BE up 5 and change. I saw a little volatility on there for option trades today. It's a small winning trade right now, even with the stock up $5.
Got some wide butterflies there on the upside. If we hit those again, that would be...
It'd be a home run. Circle
that twice would be insane. But
Circle up about $5. CVNA up, UNH up around $5. Diamonds, Q's all up. Obviously, Google up 2 and change. Meta was one of those guys on the slides that both of you put up there. Was lower, and it is lower again today by $19. 618 IV rank of 28 in there. You take a look at Meta here for a moment. We'll go to the downside, make it easier. IVX 5-day change percolating a little bit, has earnings 429. That's next month at the end of the month. Adobe down 15 for earnings. Maybe Meta, Adobe going in both ways with them. Oil 92 and change. USO down $3 and change. GDX, some gold related stocks. XOP, oil related stocks. Palantir down $1. Palantir's actually kind of caught itself a little bit of a bid, been going sideways as of late. IV rank's only 19. That's all I got. What do you think? Yes.
Got some of these wide butterflies into next week that are like Micron. I've got them. BE. Got them right where I want them.
Really wide markets when it first opens like it is right now. You can't trade it. I mean, and you can do whatever you want, but I mean, as you take a look at some of these markets here, you got $6, $8. Forget about the ones that are close to that, the money, even the out of the money options, $2 and change, $3 and change. Puts are going to be the same way, $3, $4, $3.5, $4.5. BE, you got to wait till markets kind of contract a little bit after the opening. Even the S&P's up 31. What do you think here?
I don't have anything
Nothing percolating, nothing wrong. You got some nice P&L so far this morning.
Yeah, because the vol is coming in, and I've got short.
Your oil related is helping you too.
So you
need a little bit of a down move there. You got oil down $2 and change to 92 and change, so that's helped a little bit. Ivy Rankin oil 91. So if you go to look at oil this morning, Ivy Rank was closer to 116, meaning it was the highest that it's ever been on its close. You look at it right now at 91, it's still elevated, it's still high, but it's now off of its all-time highs on volatility as it's down $2.30 right now, trading about $1 off of its lows. So you get a little bit of volatility contraction in oil working to your favor here, which is nice.
Yeah, I was hoping this move in gold would continue.
Gold is down about $18, right?
What's that ratio at?
It was 60 in the orders a moment ago. It's 61 right now.
That's silver moving.
Yeah, silver down $1.40 or so. It's about a 1 3/4% move versus only a 1/3% move for gold. 2 of those would bring it to about 1%. Hey, you got it moving ever so slightly, not a ton. We've seen bigger.
Yes,
definitely seen bigger. That's what she said. All right, what else do we got here? As we, I don't know. Try to hold.
Thank you, John.
John.
I'm sorry. That was just, it was
James starts with a J. You can just go J. As even the S&Ps try to hold on to their rally here, up 28. NASDAQ up 60. I really think you're going to get a little bit of a move lower here.
We'll
see.
Why? Because volatility.
I just got to scare the children one more time. I don't mean like a big move lower. I just got to get rid of these green numbers. I hope we don't. I hope we kind of scream from here. I'm kind of set up more for that into the weekend than anything else.
Put ratio in AMD.
I like it.
We've been trading strangles there, and it's been great because AMD has chopped around this 200 handle for basically going back to earnings. It had that sell off, and it's been in a very, very tight range, which has helped us pretty significantly. I just put on a put ratio here as just kind of a engagement trade, I guess. I don't know. It's short some vol.
Are you poo-pooing the put ratio spread? Is that what
I like it.
Is that what you did? Is that what you're doing?
I'm not poo-pooing anything.
Okay. Don't you dare. All right.
What else do we have?
Good job out of you. What else do we have, son? Trying to okay. That's all I got. I don't have too much else to say.
I know. I wish.
It's been status quo here. Now EMSP just quite a bit, up 37. Russell's your strongest of the group, almost up 1%. It's been the weakest for quite some time. Got a little bit of a pushback there in the Russell.
I was looking at those.
What's that?
The IBIT leap calls that we did.
Yeah.
Do I take $200 on them?
Sure, why not? On a long dated option, I mean, what do you expect it to be? I mean, this is as high as you've had.
We sold the calls against it too.
I know.
We did the 49 straight calls against it, which basically didn't move, but we bought those 45s at 5 and we're closing them at 7. So pretty decent.
It's a decent return on capital if you're looking at it that way. I just look at it as a nice 2-point trade.
Yes.
All right. Good job out of you. Great job out of the market. Even the S&P's up 39, trading about 10 handles off of their highs. NASDAQ up 114 or so, about $50 off of its highs. Russell up 26 on its highs, and the Dow up 411 on its highs. Volatility making a move lower by 71 cents. We'll just do there.
UiPath. E-mini's up 42 now.
Yeah. I mean, now I did not. This is encouraging. Didn't think it was going to happen.
Volatility coming in. Oil's not really moving all that much. UiPath, we did a stupid. So we sold the put to buy a call spread. Stock's up pretty decently today after earnings. It was kind of unchanged on earnings.
I mean, I guess on these $10 stocks, you got to talk percentages, up almost 4.5% or a little bit more here. So you're just taking off the put side of it, right?
Just taking off the put side. So we did the original trade at I have the wrong ticker up. We did it at like 30 or 40 cents, I think. So we did it at 28 cents. We sold the 11 straight puts, bought the 12-14 call spread. I just bought back the puts at 67 cents. They went from like 90-ish cents when we sold them to 67. You peel off the puts, you free up the buying power. I own the 12, 14, 37-day call spread for 30 cents.
That's correct, because you took off these puts. You did the whole thing for a 28-cent credit.
Yeah.
About a 35-cent profit or so.
Believe in yourself,
it's a small
a shot.
It was a Johnny-ish type trade, right?
It was a Johnny-ish trade.
All right. Good job out of you.
Yeah.
Okay job out of me. Don't really have too much to add to this. We got fast market coming up next. We'll see how these prices.
Do I take $100 out of those puts we sold yesterday?
In
SPY in the Qs.
I think the rule for the week has been be nimble, and it's paid off.
Nimble, be quick.
So you miss some of this move to the upside. I think you'll benefit in other places on existing positions. So I think you'll be fine. I think that's the code for the day is be nimble.
The Qs I'm gonna hold.
Awesome.
Those aren't in enough yet. They've come in 75 cents. The SPY puts. What do we sell them? 9 and change.
Yeah, and it wasn't the greatest of sale.
No, we took some heat on them.
Yeah, most definitely.
We probably sold them right around here. I could actually look this up.
You sold them at around 9:28 in the morning yesterday, which was really not the lows of the day. We made lows at the end of the day. You sold those puts at 9:56, and they're trading 8.50 right now. And if you go to if you want to look at on your platform what the price of SPY was, I think you're going to find that it was higher.
Yes.
Because at 9:26 in the morning, the NASDAQ was not making its lows. It made its lows at the end of the day. So that's just volatility contraction in by 75 cents, taking a little bit of the weekend out, which I was talking about earlier. We haven't kind of seen that. I think if you have Delta coming in today and you got SPY up right now, let's just say if you had 100 shares of stock and SPY is up around $5, you think it'd be up around $500. If you had long Delta in there, I think you're going to find yourself up more than that, up like $800. That's just volatility coming in. Maybe a little bit of the weekend coming out, which I think is probably warranted with some of the action that we've had all week long with volatility staying bid. All right, getting a little lucky here.
Lucky.
A little bit of a lucky move. I mean, I think a lot of people talking last night, going down under, even Jamal was talking about it.
I don't think anything in markets is quote unquote lucky. I think if you're putting risk on, you're making that decision, but you're doing it quantitatively. You're looking at implied volatility. You're looking at stock price. You're thinking about time, position size. Sure, the move might be short-term lucky, but I don't think trading.
If you've been selling premium all week long, you feel like the unluckiest person in the world. I know it because I've been doing it. And you're getting a big reprieve in that right now.
Yes.
So do you neutralize some of that delta? Probably prudent.
That's what we did.
Probably prudent. And take a little bit off the table? Probably prudent. Let's take a quick 90-second break.
That's AVGO. We sold. That was Julia. Julia gave us that trade.
Well, she wanted to do the Iron Condor.
She made it a little smaller. We did the Strangle. $290, $390. We did it at $9.95 yesterday. It's at $8.92. So I took $100 out of that.
You did that right in the morning, close enough to the morning trade. AVGO was trading close enough to around, it opened at 337. We're right there right now. It went as low as 332. So it's right about where it was yesterday. And you can see that you're able to close that spread that you sold at 995 for 892. That's another thing, like just taking what the market gives you here. Basically unchanged, $1 lower. Again, volatility contraction. Even the S&P's up 54. Nice
beautiful
move.
Day.
Let's be honest.
Beautiful morning.
We're going to take a quick 90-second break. We got more Tasty Live after this. We got fast market coming up, 10 trades that you came up with. We'll be back in 90 seconds. Tasty Live.
Looking for market insights you can count on?
Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, tastylive, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
It's the day that when you write dates in the American system of month, day, year, which is a little bit funny, looks like 3.14, which is one of our better approximations. And actually, this year's even better because it's 3.1415. I've never before, but this year there's a couple other math people who just got a pizza oven, and so they're bringing everyone over. We're gonna make a bunch of pizzas. It's one of the few very important transcendental numbers, right? I mean, 0, 1. There's a lot of good contenders for most important number. Anytime you have anything that's circular, you're going to wind up with pies. Anytime you have a pie, you should sort of expect there to be something circular. I can do one more than the date on Saturday. I can do 3.14159. Irrational numbers are fractions, and pi just is not a fraction. 22/7 is pretty close, but that's not what it is. It's the ratio of a circle to its area, right? And so that's not an integer ratio. It just isn't. Oh. Pumpkin. Oh, just circles are great.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Like the music. Din, 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 din. Niggy, we are back, son. You know what that means. So is the market. Even the S&P is trading near their highs, up 56. Pleasantly surprised here with the market action, 67.37. Didn't think I'd be talking about the 6,700 being pleasantly surprised by the up action when we started the week, as we were in like the 68 handle. But certainly violently unchanged is almost on the docket here if we get a little bit more of a rally. NASDAQ up 200 and change, kind of up around 1-ish% with everything else. The Russell up around 1% now. Russell was the leader in the clubhouse. NASDAQ catching a little bit of a bid here too. Dow up 300 and change. They're all up around the same here amongst friends that we all are here at Tasty Live Network. Volatility in by 80 cents, just a skosh off of its lows. Bonds are up 4 ticks, 114.09. No real relief there to the upside with the monumental move over the last 2 weeks in bonds lower. Bitcoin saved the market. Bitcoin saved the market, 73 and change after scooshing up on the Bitcoin Cash up to 77 and change. Kind of a wild move there because the Bitcoin futures really only trade up to 73 and change. Ethereum hanging in there at 21 and change, also up around 3.5%. Oil, don't ruin the party here, oil. Traded down to 91. It's flirting with 93 right now. Definitely oil related with the rest of the market move here. Gold was a little bit weaker earlier. It's back near its highs for today at 51.32. The high, 51.17 and change. Let's just take a look at the market across the board here. Adobe down $13 after being about $8 or $9 lower than that. Meta, I'm looking at the dogs right now. Meta traded down to 617 at 624. It's still down $13. Going across the board here for the rest of the stocks that we kind of trade, you got a little bit of gold, oil, and volatility-related products. Let's see the upside, but pretty broad-based on the S&P 500. A little over 400 stocks are higher. Dow also about 25 stocks or so higher in the Dow last time I looked on the break. SanDisk up 21, MU up 17, AppLovin up around 9 or 10. Coin, which was up right by about $7 higher than where it is, up $7 right now at 200. I don't know.
Yeah.
All's good right now.
We close out the Qs puts, but I want to mention, because you were talking about how it felt like they were like kind of taking out the weekend there in the early part of the session.
Yeah.
When I was looking at those puts, which the market has rallied about another, at this point it's kind of 50 handles, but it was up about another 50 from where we're at NASDAQ.
I mean, they have 20 deltas to them. They should be moving 20 cents.
Yeah.
I mean, just extrapolating out on a dollar move in the Qs.
So we'll just call it a dollar move in the Qs.
Sure.
And they were up 75 cents from the sale that we did, which was actually at higher prices.
So they were a loser by 75 cents on the close.
Of a loser. Into that bounce, I put an order in that was about 15 cents off the mid price at 7.35. The mid price was at about 7.50.
Yep.
I got almost instantly filled as I put that in, and the market didn't really move.
Right.
When I looked at that order about a second later, like 15 seconds later, the mid was at 7.30. So these had moved 20 cents on basically a nothing move in, and they're actually back. What are they at now?
Now they're 757,
with this little bit of a sell-off.
Yeah.
It's just telling you how fast and how dynamic volatility is right now. When you have a 23 or 24 or 25 VIX future here, and the VIX itself at 25 on the nose, things are moving very, very quickly. You can put your order in and get filled, and by the time you go look at it where you got filled, it can be 20 or 30 cents different from that price.
Oh, sure.
And so, that option moved 75 cents in the first 20 minutes of the day on what should have been a 20-cent move in the option.
Right.
And that was volatility, and now volatility is going the other way. So it just reiterates the fact that this market.
You have to watch the whole market, right? That's what you have to do. You have to watch everything that
Yeah, but
prices.
you got to be nimble. You got to be in and out.
And nimble.
Stuff.
Yeah, there you go.
It just goes to what we've been talking about.
You ready to get with a little bit of fast market?
Yeah. Fast market.
That was a little premature. Yeah, I think you were on.
You don't want to be
premature. I think you were spot on. I know. Sometimes maybe, because then it makes it worth it for them. You know what I mean? Like just
if you're, squeeze for time.
What else you got?
First slide here, please. Don't let us
help us.
Yeah. MOS. Oh man.
Ugh.
Ivy rank around 77 and has been trading between 23 and 37 for the past 2 years. Gotta like that. I'll trade the range by selling the 27.5, 35 strangle in April. Okay. So I legged out of the puts I did with, my man, buddy, my guy.
Mosaic neutral is down $1.30 and change after hitting itself with a nice rally here the last couple of days, going from 26 to 32. Ivy rank is 84, so certainly probably warrants a trade. They want to be neutral here. It's got earnings in May, no weekly options, so you're going to have markets that are good, not great. And look here, they're about 10, 15 cents wide on a $30 stock, relatively wide for a small stock.
Okay. So I still have the call spread on. That was my lotto ticket because I bought back the puts at 70 cents. They're now marked at like 95. So getting it at a better price. I think I can add this.
Okay. Did you get filled on?
I didn't put it in.
Oh, okay. I didn't know. I didn't know what account you were in. I didn't see anything. I apologize. I mean, I'm only human. Oh, yeah, you even got the dings going. Good.
All right. So
$1.80.
What?
$1.80.
If you missed the live show, here's our cherry weekly recap.
Ah, look what the cat dragged in.
Top of the morning to you all. How are we doing?
Rich McDonald from London, he was so excited to tell me that he was on a game show in LA.
You were on a game show in LA?
Yes. He was walking down the street and some Hollywood producer spotted him and goes, "Oh, we gotta have this guy." And what was the game show again? I forgot.
It was called Eliminate.
Oh, I know Eliminate! You were on Eliminate! Oh my god!
You've seen it?
Have you met me? Yes, I've seen Eliminate.
You get eliminated on Eliminate?
Who would not pick the Scotsman? Like who? Why? Oh, that's that woman's trash. I'm so sorry, Rich.
The camera's finished, and she turned round to the guy she eventually picked, and she said, "So where are we going on our date then?" He said, "Oh, I'm very sorry, I've got a girlfriend. I'm going out with one of the Lakers cheerleaders. I just wanted to get on TV."
In a tribute to you today, just so you know, we have one of our viewers sent Tony a bunch of Scottish things. The first thing.
I mean, I wanted just a man in a kilt, but apparently I'm just gonna get some pudding.
I don't even know what spotted dick is, really. It says it's delicious. I mean, this is the first time for me trying this. Vanetta, you?
Yeah, I'm on a dick-free diet.
Have you managed to warm up your spotted dick?
It kind of tastes like, like the banana pudding or the vanilla pudding that you get, but that's like not refrigerated.
It's actually pretty good.
Yeah, it's not bad. And I imagine if you go actually to the UK, I'm sure there's places that can do it more authentically.
Is all the custard in cans?
Yeah, pretty much. It's one of those ones. If we end up in a war, then you just fill your bunker with custard and beans.
Control knocked me off my pivot today because they came up and they said that you were having, I actually had to go Google this, that you were having a conversation about traditional spotted dick desserts, whatever.
No, it's not a dessert. It's not a dessert.
It's a muffin.
Are you adding this to your repertoire?
It's a muffin. And we poured the custard on top.
You pour custard on top of a muffin. That's dessert.
Okay, American, you uncultured American. Okay, Dylan, explain to them.
I think that the good Dr. Sheridan accurately describes any item that has custard upon it as being in the dessert category, whether you're a sophisticated Milanese gentleman such as myself.
I can't be friends with Dylan Radigan if I eat SpaghettiOs out of a can because the Italians...
I mean, but you can't because remember, I'm from Saranac Lake. My relationship as a young man with the canned beans was to go out to the ice fishing shack. Because the canned bean is a very staple food for the ice fishermen.
So you grew up in the ice fishing community?
It's a card-carrying member.
Please tell me what the pleasurable portion of ice fishing is.
I haven't done it since, probably I was 16 years old, but our primary pleasure was smoking pot because you could get into the ice fishing shack.
There we go. Do you actually care if you catch a fish?
No.
Okay, perfect.
With your buddies, like, Sosnoff, grab the drill, and then it's like work and you got to drill the hole.
Tony is going to counter that and say it's all about catching the fish. For sure.
No. I don't think he's an ice fisher guy. I don't see him sitting around the hole in the ice fishing just hoping a fish pops in.
There's not enough marijuana in the world or Coors Light to get Tony to go ice fishing.
Get the full scoop by checking out the archives at tastylive.com.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
All right, yeah, I'll talk to you.
There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes. So are you ready? Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure. Yeah. Like I live in Italy. Yeah. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed the most? Who is more spoiled?
It's not even close. Like you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. Multitask MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Your outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you seen me, then you seen a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
If you missed the live show, here's our cherry on top weekly recap.
Look what the cat dragged in.
Top of the morning to you all. How are we doing?
Rich McDonald from London, he was so excited to tell me that he was...
Our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies. Covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nikki, we are back,
They
son.
can't pull the plug on us, okay?
No,
I see people saying they finally got the bats. They didn't get the bats. You can't pull the plug on us. Can't do that to us.
No. And I know I've heard all your jokes coming out there about
ice raid,
all the different things. Yeah. There's only one reason why this happened. I made a silly joke. I haven't picked on my boo in a long time, and I said on Twitter. For who wore it best, I was picking the blonde-haired girl in the middle here. Some would say it was a little bit of a gray-haired beauty, and he pulled the plug on.
He called in to the powers that be to shut the power down.
Yeah,
you didn't want that one out here.
Yeah. The power used to see what happened was the bill was in his name, and now his credit card didn't work after 6 months. So they shut off power, but we're back, everybody.
Yes.
So good job out of the team there. James was working on plugging him back in there, got us all all good. What we didn't do here.
We got James in a precarious situation. He was on a bathroom break, and it got a little dicey, but he's all right.
Even the S&P sold off 30 handles, no joke there, from the high back to 67.06. NASDAQ cut its gains by about half. I don't know, some people saying the JOLTS number and everything else coming out at the top of the hour. Maybe it was, maybe it wasn't. I think it's a little oil related too. Oil about $2 off of its lows to 93 and change. Russell, which was the leader of the group, now up as much as everything else. Volatility well off of its lows of 2340, 2380. This is kind of the action I thought we would see. I didn't think we'd get as high as we did, but I definitely thought we would sell off. So be nimble.
I think we're going to chop here at 6,700. I'm putting in a 0DT SPX.
Oh, I like it.
20 delta on either side, 15 points wide.
And you got filled at 480 on this trade.
I'm trying to close it at $4.
Which is trading around $5 now as we go a little bit lower, but now it's $4.75. That moves all over the place. Just trying to give you, the viewer, because we just got filled right now in real time. What we got filled at around 480. You can reasonably expect to get filled at 480 or maybe 485 if it's a little bit lower, that kind of thing. So you can just watch it yourself, how the pricing moves in there. You buying back your NASDAQ?
No, my Russell short.
Oh, sorry, Russell. I apologize.
NASDAQ is still up 0.5%. Russell has moved about 0.5%.
Yeah, up around a third of a percentage point. That is,
so we took
correct.
15.
I thought we were going to have a half a day or something here today. Man, you should have heard the size when the lights went back on here.
I'm glad we're back.
I'm glad we're back too. I wish the market was acting better here, but this is what I really kind of thought would happen. Now, hopefully, it'll catch a little bit of a bid over the next hour or two or three. Let's take a look at what volatility is right now. 23.90. Now, if you're looking
it's oil.
It is oil related. 93 and change, up $2 off of its lows. But now you're looking at, if you were looking at your positions, you came in with 100 shares of long delta in SPY. You would expect to be up closer to that $300 number where you were up $600 or $700 earlier in the morning when volatility was a lot.
I got long another gold, 5,100 right here.
Gotcha. You did yell that I missed it kind of thing. I knew I should have bought more gold when gold was about $25 higher than where it is right now. So you did put your money where your mouth is. So
yes.
Good job out of you there too.
We got filled as the power was going out on that MOS strangle 180 on that. So we've got one. Let's get to the rest of them.
You did for
fast market. We're back to fast market.
Yeah, fast market,
and then we'll get back.
No problems with the platform, right?
No, platform's all good. We're rocking and rolling.
It was even through our outage here. Obviously.
Yeah.
Yeah, I was more on time there. Better,
I wasn't.
Better. That's what we had need to the power to go out.
MOS, Alex in Portland, we are with you. Let's do the next one here.
Let's go.
BX. Okay.
Oh, I have to turn my coffee thing back on.
Oh, you got to make sure it's warm. If you don't get a warm coffee, there's nothing worse than a bat with a lukewarm coffee.
I agree. Yeah.
Betting the 95 support level holds, selling a 95.90 put spread for about $1.30 credit. Okay, BX. Stock up $3, but down near lows.
Mm-hmm.
Markets do not look great.
True. What are you thinking?
I think I'm gonna be, because this is all the credit fears, all that kind of good stuff here.
Okay.
I sold the 100 strike puts.
I like it.
At 430.
That's correct. Good job out of you.
I'm with you. I like the put spread if you want to get smaller. I like that idea too.
Mm-hmm. Mm-hmm.
So I'm in. I'm with you, Kyle in Columbus. Appreciate your trade idea.
In BX, something you don't always usually trade.
No, not super liquid, so very small.
Yeah, and when it's not super liquid, I know a defined risk trade, like a vertical spread, it's going to have a lot less delta, better pricing. But I think a naked option in there is easier to trade in and out of.
Yes. But bigger size, so
a bigger size. That is correct. Yeah.
Market may have overreacted to Rivian's new model release. Happy to own shares near 15, either by selling at the money put or just buying the stock. Caleb in Reno, we actually made a well-timed exit of our stock position at 1673. Stock is now at 1528. What do you think of this?
Oof, bullish in Rivian. I mean, I like it better than 3 days ago. That's for sure. So yeah, you want to try to catch this this up move again. It doesn't have earnings until May, so I think an April trade is warranted here. The only problem is you've got about a $2 expected move over the next 35 days. So what do you want to do here?
Puts? I was going to sell the 15 strike puts. He wants to buy stock or at the money puts. I think you do the at the money puts.
Sure. So you can sell a 15 put for about $1 and change of extrinsic value, or you can sell the 16 put with $1 and change of extrinsic value, but you can make 50 cents more on the upside. I would sell the out of the money put.
Yep. I sold the 15 strike puts.
Classic.
$1.06.
Yep.
And we'll wheel those too. So if the stock goes down, like I'm not gonna do anything with this. You're
not gonna panic?
No. If we go down, I'm gonna take shares and then we'll sell cover calls like we did with DraftKings and some of the other
All right, beautiful.
stocks here. Gives us a basis at 1394.
Okay, beautiful.
Cool. So we're with you, Caleb.
Good one. What's next?
Next one, Oracle.
Oracle. Oh, this was a dog with fleas for a long time for us.
We nailed this one.
We were nimble.
On earnings, yeah.
Which I think is going to be the for the next month or two, the saying of the day here, be nimble.
All right, so Michael Berry is getting long Oracle, and I'm leaning the same way. It was overheated last year, now looks oversold amid AI concern, considering a jade lizard. Brad in Colorado Springs. Okay, so you're looking at the 140 strike.
They took away my power. They took away my P&L with this. Even the S&P is only up 20 now.
Damn. Should have held my Russell. And my gold is going against me too.
Russell's about to go unchanged here.
I kind of like this.
Okay.
Do the 140, 175, 180. Looks like 520-ish. $510. I'm in.
All right, beautiful. Good job. He's basically sold a call spread and sold a put here to be bullish on a jade lizard.
Yes.
Got $5.10, more than the width of the strikes. This is going to have a 70+ probability of success because you got more than the width of the strikes. I like the trade.
XLF, I think it was down 10% in the last couple weeks here. Big move in XLF. Looks oversold in the short term. We actually did I sold some puts. Well, Blackstone, I guess, I would think is in there. So that might be part of it. We also sold the puts in Goldman Sachs, which are coming in a little bit today, but are still a little bit underwater.
XLF up 25 cents, but on its lows. So the power outage actually helped you for this trade because you would have been trading it a little bit higher than this. Doesn't have a big expected move for the day. 30 cents had much more than that for the next day. It's only next week or so. It's $1.29 for the next 7 days. If you go 35 days out, it's got a $2.50 expected move. But let's just go back in time here for a little bit. It was $51 and change just about on the 5th. So it's moved twice as much as the implied volatility as of late. So definitely something that's oversold relative to its implied volatility.
All right, I'm getting some gamma in JP Morgan, which we did for Johnny Trades yesterday, which might be a decent trade at this point, but
JP Morgan up $2 and change. Instead of doing XLF, you went into
I'm going to do
Morgan.
XLF too, but I'm going to do XLF a little different. I'm going to do just short puts in XLF. I'm going to get some gamma to the upside in JP Morgan.
All right, so in JP Morgan, you bought the 290 call, sold the 310 call for $10.35. It represents almost 30 deltas of stock here. Buying power is only the price that you pay for the spread. So good use of capital on an almost $300, $285 stock. Go ahead.
And then I sold the 48 strike puts
in XLF.
So does Madison, Wisconsin Grant here get the award for fast market trade of the day because it got 2 trades on, one in XLF? Okay.
Sure.
Okay.
Gold star for you, Grant.
Gold star. You
Madison.
got it. You got it.
Shout out to the Wisconsin Badgers that won yesterday. Close game for the Big Ten tournament.
I didn't see it. Oh, good. Good. Are we doing anything for March Madness or?
Yeah. We got to talk to our guy.
Yeah.
Our source.
Yeah, Rob, right?
Source.
Yeah. Maybe we get him on the show or something.
Yeah.
We'll see.
Okay.
All right.
XLF, we're in. Right. Also did the JP Morgan.
When does that start? It's got to be soon.
I think next week.
Okay. Beautiful. I mean, you think you should be right on top of this. Go ahead.
I know.
Huh?
Next one, please.
All right.
SPX. All right. Slightly bullish on the market after this week's pullback. Either a put spread or a bullish iron condor on the 0-day. So we did a delta neutral 0-day trade. It's actually coming about 40 cents here. If we chop around here for another 30 minutes or so, I think we'll hit our $4 exit. But I'm with you, Jared. I'm leaning long via like NASDAQ right now. And then I got neutral delta in ES and SPX. So I have this. I'm with you. Not going to add to it.
Okay. I concur.
Very good.
Taking a look at your SPX trade.
I got a working order in there.
Oh, do you? Oh, beautiful.
At $4.
Oh, beautiful.
So we did it at 480. So
it's like 450 or something like that. 440, 445.
Yeah.
Okay. Beautiful.
Cool.
Next one.
So Jared, we're with you. Let's do the
Japanese yen. Somebody's messing with you, son.
Oh no.
Oh no.
Oh no.
Go ahead. What do you think?
Long the yen.
Long the yen. Again.
I'm going to keep this so small.
Okay. I don't blame you.
Out of the money put spread.
Out of the money put spread. What are you doing there?
6261.
Okie dokie. Okay.
250.
Small trade, right?
Yeah.
Okay.
$250 in credit.
Mm-hmm. And your
actual value.
Your risk is there just a little bit more, right?
Yeah.
Got it.
All right, Zach, I'm with you. I will warn you, I do not trade this well. So for everybody out there that is listening or watching this, I do not have a positive P&L in the Japanese yen.
Okay. All right.
I don't think over any time frame. So
all right.
Take this at your own peril on this Friday the 13th power outage.
Yeah.
So we're in. I'm with you, Connor, in Fort Worth. Don't love it. Next one, please. XOM. Oh, no, I'm sorry. Connor in Fort Worth is looking at XOM. I missed who gave me the Japanese yen. Zach in Salt Lake City.
Thank you, Salt Lake.
Shout out Utah. It's just there. Beautiful state. XOM, 36 days out, selling the 140, 170 strangle for some premium. Okay.
Okay.
All right.
So
we got an upside butterfly here.
All right.
We got the 155, 160, 165, 140, 170. I think I could put this little Johnny on.
Okay. XOM up around 86 cents. XOM traded down to 153, about $1.50 lower than where it is right now.
173, I'm in.
As oil rallied a little bit.
Yep.
In there. XOM rallied too.
I'm with you. Connor in Fort Worth. Appreciate the idea. 40 IV rank. I like it.
Okay.
Not something I trade all that often.
Okay. Good enough.
So we're in. We've done basically all these. IWM.
We have.
IV is even richer than many of the individual stocks. Looking at the April Jade Lizard, 240 for the put, 260, 265 for the call spread.
What do you think here in IWM being bullish?
I've been generally using IWM as my bearish.
You have been. Actually, you sold some Russell futures, didn't you?
Yeah. I bought them back.
Oh, you bought them back. Got it. Yes, you got it. 51. Why didn't you wait? Just kidding.
I'm going to do this. I'm going to sell the 240 strike put. I like that spot. It's a 30. You know what? I'm going to move this to the 30 delta, do the 235. And then I'm going to do the 255, 265 call spread. You sell that call spread. It's a $10 wide call spread. You're selling at about $3.
Mm-hmm.
And that's out to be about $8.20 is what it's marked at in credit. Let's see where I get.
Let's do it.
So you'll have risk to the upside, but the point being here, I want a little bit of extra short delta on that call spread. The $5 wide call spread is fine, and you're going to sell it for 1/3 the width of strikes, but it's not a ton of delta there. I would like this to be more neutral, so to speak. So I'd say it's neutral / slightly bullish lean, Jade Lizard.
Okay.
But short, extra premium.
Well, what is it?
I did it at 8.15.
I'm just kidding.
Or 8.19.
Beautiful.
So I'm in. A little bit wider on the call spread. And
You're
closer
on the follow page, you will see that.
And closer at the money. Cool.
I like it.
So I'm in.
Yep.
Last one.
Yeah, PayPal.
Thank you, Seth, in Lexington, Kentucky. Haven't been there, but I'm sure it's a beautiful place.
I haven't been either. I mean, I haven't been to Kentucky. I want to do the Bourbon Trail.
If you didn't get rid of that RV, we could have taken.
We were talking about the RV last night too.
We could have taken a trip, done like the Whiskey Row or Whiskey Road, whatever they call it.
So you want to drive a 28-foot RV after having whiskey? What kind of
no.
What kind of responsible son are you?
See the world, see the beautiful land that we have here. Could have been nice, but
I have a piece.
I'm not the number.
I have a piece of property at the what's the whiskey?
Ozarks. No.
In Kentucky.
You have a piece of land?
Yeah, son. We don't talk about this kind of stuff.
Yeah, this is good. But you might want to reveal this because when you're gone, the rest of the heathens you got, they're gonna cut this up and liquidate. Okay, so you be careful. All right, so you got a plot of land. Nice. I'm learning all these things. Any bodies buried there?
not that I know of. Right by not Jim Beam, but what's the other kind of Johnny one? Give me the other one. What's Jack and Coke? Jack Daniels, right near Jack Daniels.
Nice.
Yeah.
All right.
Yeah.
Cool. Good for you. GFY. PayPal. Oh, they wanted the PayPal strangle. I'll see it. Let me see.
Yes. Go ahead.
Okay, the 40-50. So I'm actually long stock, which was from a short put, and we got kind of totally bailed out on that takeover news, which I think was kind of fake news. But we had a call ratio too, so I'm locked and loaded on the upside here. I don't mind the idea of adding a little bit of like a heavier delta call to this.
Okay.
So maybe we do the 42.5. I'm thinking maybe the 42.5, 47 strangle.
Okay. I don't have too much of a problem with that.
Or do you do the 40-50 strangle?
6 of one, half dozen of another. I like the bigger credit than the smaller credit, but that's just me.
Yeah.
Basically the same amount of risk.
Yeah, let's do the 42.5, 47.
Okay. But you got more of a time to manage it when you have a bigger credit. You'll be able to manage it quicker if it works with a bigger credit. If you get the move that you want, which is really inside the move, on a small amount of credit, it doesn't move that much, those tails. Even the S&P's up 26. They've been real steady since we've been back. Everything up around 0.5 percentage point. NASDAQ is the strongest of the group compared to the Russell, which is only up 9 now.
I sold that at 278.
You most certainly did, son, and your SPX trade is trading around 415 or so as we sit here. Why don't you go over what we traded here? Good job out of you.
Did basically all of them. I think we're
in
some fashion on all these trades.
Yeah, and the extra one. And the
JP Morgan too.
And yes, he did 11. Nobody's ever done 11.
Extra credit.
No partner of mine has ever done. Gesundheit, God bless you, whatever it is.
Thank you. I feel blessed.
You've never done 11 out of 10 here. You're like your brother who gets
extra credit, baby.
Extra credit points. Right, on his test. We're going to take a quick 90-second break. We're going to come back with a market measure, then we'll come back with Q. We got more Tasty Live after this, as even the S&Ps are up 29. We'll be back in 90 seconds. Let's Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We are back, son, and you know what that means? You just got filled on your SPX trade, by the way. I don't know if you heard the ding before we just came in. You got filled at $4, so good job out of you. Good job out of the E-mini S&Ps, up 36 right now. They've rallied about 10 handles or so in the last 15 minutes. NASDAQ up 150 and change. Russell up 15 and the Dow up 281. They're all up around the same on a percentage basis. Volatility in by 67 cents. It was in by about 50 cents 10 handles ago. We'll see how that behaves. If the E-mini S&Ps oscillate back down there, maybe catch a little bit more of a bid in the market or a little bit of pressure by watching volatility get bid or contract. Remember, it moves the opposite of the market. Bonds are up 6, 114.11. Bitcoin quietly trading 73.7. That's up a little over 3% there. Numbers that we have not seen in quite some time in Bitcoin. And I know we were up in the 71, 72, maybe even 73 handle back on March 4th, but I'm going to throw that out there and say we haven't been here since February. It's my show. I can do what I want. Ethereum up 82. Oil, stubborn little SOB, $93, down $1, $2 off of its lows, $3 and change off of its highs. Gold down 30, silver down 2.5. Let's take a look at the market since we haven't done that really in quite some time here. Going to the net change, click on that. On the downside, you got Adobe down 16, closer to its highs for the days than its lows, but still down 16, which is a 6% move on Adobe for earnings, right? Meta down 11. And then you got oil, some oil-related stocks. AVGO, which was trading down 331, it's 333 up to 338. down 2 and change. Palantir down around $2. Oracle down $1.50. Your beloved Mosaic, you and your new boyfriend Chris, down $1.30. MU up 18, SanDisk up 18, AppLovin up 11, Goldman Sachs, some of the financials catching a little bit of a bid here. Maybe it's a relief rally, I don't know, but we'll see. Mini S&P's up 26 here as the E-mini S&Ps sell off a little bit. Like I told you just a moment ago, we'll see what volatility is doing. Volatility staying a little bit depressed here. Maybe we'll get a little bit of a release bounce back. We will see.
So I also legged out of I did a CL strangle, and I just legged out of the 65 strike put. I sold it at like $2 and change. It's marked at 90 cents. I figure if we do get a little bit of a downside move, I can sell a meteor put against it and just not have that 30 or 40 cent drag on it. I don't think it's going to move all that much over the 35 days at 90 cents, the 65 strike. I feel like it's just a lot of downside risk as opposed to like much reward. Like I might have 20 cents of potential reward over the next 2 weeks. But if we do get some sort of news that kind of moves us lower in oil, I probably have like $1 of risk on it. So I feel like it's just not a good risk reward to hold it, given that it's come in about, over 50%. And then I legged out of some Netflix calls that I've been selling against long options that I have as part of diagonal spreads that are further out in time. Those were 80 some odd cents. I sold USO calls at the 175 strike in April for $3.90 as a way to kind of get a little bit smaller short delta in oil, as opposed to going to like micro crude or the crude oil futures. So I'm short upside volatility in oil right now is really where I'm at. I've got
I think that's the way to play. A lot of people write into me and contradict it, which is fine. I mean, that's what makes a market, right? I mean, both can be right over time, which is the beautiful thing about trading.
Yeah. And I've got like my oil position, it has tail risk. Like if we have something crazy happen and we're 200
to the upside on oil, you'll pay the price.
That's my kind of.
That's selling insurance, son. That's what that is. Yeah.
Okay. Cool.
Beautiful.
Market measure.
Let's do it.
It's a 0-day market measure. Can we roll 0DT to succeed? What say ye?
Oof. Well, we're gonna find out right here.
So the basis of this study is going to be about putting on a trade, managing it, and then rolling into something new.
Okay.
It's going to be kind of the look that we're going to look at here. So obviously the exceptional liquidity of 0DT markets makes rolling an attractive tool. A trader can close an existing position and re-enter a new one with minimal slippage at virtually any point in the trading day. I mean, SPX has been an amazing liquid fun thing to trade. We've already done one today. Our earlier investigations into rolling 0DT positions, however, were not encouraging from a profitability perspective. With 3 years of data now, we can kind of redo some of these segments. We've been doing when we were doing these segments with only a year's worth of data, it's kind of, hard to
It's a small subset relative. Big relative because it was only around for a year or two. Yeah. Now you get more data.
So today we're going to kind of dive into this and see what we got here.
Okay.
So we're going to be using 3 years of data in 0DT SPX options collected every 10 minutes. We're going to consider entering a number of different short premium positions. So we're going to look at iron flies, iron condors with 20 delta short strikes and at the money put vertical spreads, all $20 wide, and the put at 9 a.m. each day. So a couple of different strategies. These positions were monitored to see if and when they reach 25% of the max profit. And we then examined the results from selling at the money premium at the new spot price after they were managed. So using $10 and $20 wide iron flies, put verticals, and then call verticals. So you're kind of leaning directional. It doesn't matter. The good thing about this is that the context is that we put the first trade on, we managed it. Now we're starting with a new position. We're going to look at neutral to the new price, bearish to the new price. It doesn't matter whether the market went up or down. You could use that as kind of your momentum type trade. If the market was down, you'd be, the call spread would be quote unquote momentum. If the market was up, put spread would be quote unquote momentum. So we're going with, we're looking at all three options: neutral, against the grain, with the momentum.
Okay.
And so we're going to take a look at kind of the data here. So start with the iron fly. What does it look like if we roll into a new iron fly, rolling into a new put vertical spread, or rolling into a new call vertical spread? Obviously, over the last 3 years, we've leaned bullish. So you're going to see that, by and large, rolling into something that is bullish is obviously going to be the best performer of the group. You'll see, though, that the max loss is pretty much the same across the board here when you're rolling into the directional trades. And that's because the spreads are right at the money. It's 20 points wide. When you're rolling into this, the theoretical pop is going to be 50-50. So you're going to have a lot of winning trades, but you're going to have a lot of tail losses on all these strategies. And you see that across the board. Your CVAR is basically the max loss on all of these because you're rolling into a new directional trade, especially with those vertical spreads. But overwhelmingly, the long side has worked throughout the last 3 years.
Perfect. Even the S&P is up 15, volatility in by 45 cents, trading 23.90 or so. Russell's only up 2, and the NASDAQ is up 61 or so here. Oil /CL down 80 cents to 93.62. Catching a little bit of a bid there. Definitely oil-related market. Can't stand this kind of thing. I don't know what's on the upside here, but everything seems to be a little bit lower here. If you were looking at that heat map that you were looking at before, it's all the financials are actually catching a bid, almost like a relief rally there. You got NVIDIA up a little bit, but you got Apple down, you got Tesla up very slightly, Microsoft is down, Oracle is down, AVGO is down. And you got a big move in MU to the upside. MU up around 4.5% or so. So MU is big. Intel is up. Cisco. You really got a tug of war here.
Choppy.
And then volatility in by 50 cents, up in by 70 cents. It's moving all over the place. Something just come out. Some news just came out because volatility is.
Tell us in the chat.
What is it?
Tell us in the chat.
Okay.
Peeps.
Yeah, please do. I don't know what's going on, but volatility says the market's going higher. The market's actually going lower right now. So really conflicting here. I say that because volatility is only in by 45 cents. Even the S&Ps were just down a moment ago. They're only up 15. I don't know. Something came out. I don't know what it was or something, but I don't know.
Following iron condors. So we're going to look at iron condors now. Same case here. When you're rolling into a directional trade, a bullish trade, it's going to be a better net position here across the board. You can see the iron fly is actually kind of better in starting with the iron condor and then rolling into an iron fly. The net P&L is actually a little bit better. And the iron condors we've seen across the board have been the best way to trade 0DT versus like an iron fly.
Okay. Yeah, we got a really weird market right now. I don't know what's going on.
You scared?
No, not scared. I'm bewildered is more of a better.
All right, just stay small. Don't be afraid.
I'm tired of being a Johnny.
Following put spreads, you can see the continuation of the market has helped make the additional put spread the best of the group. This is across the board. I mean, the data is skewed to the upside, but you can see, kind of trying to go bullish to bearish is kind of the takeaway here is that hasn't really worked. It's been mostly a continuation.
This is true.
A couple takeaways for you. So across 3 years of data, rolling 0DT positions were largely profitable, a notable reversal from what our earlier research indicated. So it does kind of make sense to continue with 0DT positions, albeit the bullish side has been kind of the one that has been the outlier here. The one constant exception, rolling into a short call spread, struggled. The market has been mostly up. So, going with the trend trading has largely worked in terms of like establishing a new position that is bullish has worked into what has been a bullish market here. On the structural side, narrow wings on the rolled position consistently outperformed wider wings. This makes sense because you're putting less risk on. So the tail risk of that new position that is further on in the day is going to be lesser when you're selling a tighter spread. The data suggests that following a quick 0 DTE win with a second trade can be a viable strategy or restructuring to where the market has moved. It's typically moving in your direction. And especially if you're adding bullish positions in that second trade, you're doing the best out of the group.
Good job out of the team on the 0-day rolls there. I think if we were sitting at home ourselves trading here, we would be rolling a lot more than we do, especially if this was more of a core strategy. I don't want to say position. It's really not a position because it's day long. Let's take a look at this market. Even the S&Ps at the lowest they've been since we've been open, up around $6 and change. You can see the big move here from 66.40, almost 100 handles. NASDAQ up 26, Russell down 2, Dow up 100 and change. NASDAQ up 26. I don't know what I said, if I said down or not. Volatility in by 37 cents to 24, hanging in there. You can see it right in the middle of its range, like the overall market. Bonds were catching a bid. They are now lower. Bitcoin traded up to 74 on the futures, trading just under 73 right now. Oil only down 50 cents to 94. I can't find what the news is or anything else like that. There was no economic number. I got to imagine that it's some sort of tweet or news out of the Middle East there that spooked the market here.
Trump warns Iran to watch what happens.
Oh, there you go. We're going to take a quick 90-second break.
I got long a little bit more NASDAQ here. I scalped out of one at 24.7. I just bought it back at 586, 24.586.
I think Nimble.
Quick, Jack goes up the.
Good job out of you. I think Nimble was the way to go here across the board. Your SPX traded back to where you sold it, maybe even a little bit higher, as the market went a little bit lower. Last time we were here with this 0-day trade, which the 0 days have about a $43 expected move so far today. Last time we were here, that trade was closer to $4.15, $4.20, just showing you how volatility has expanded and expanded in the 0 days too. Even the S&Ps are unchanged. NASDAQ basically unchanged, just turned red. Russell down 5, Dow up 100, volatility in by 25 cents. Oil 90, just under 94. We'll take a quick 90-second break and come back. We got more Tasty Live with Q in the room. I don't know why I feel so bullish, but I'm starting to feel a little bit bullish here.
You think so? Just because you think we finally spooked them?
Yeah.
I'm positioned for that. So
I just hate the news-driven thing. But we'll take a quick 90-second break and come back. We got more Tasty Live after this with Q from Tasty Trade
World Headquarters.
Yes. Thank you. Peace.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade. Make your move.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. You still got the consumer stocks, Walmart and Costco up big. You got a relief little rally in some of the financials. Morgan Stanley up $2, Goldman Sachs up around $7. They've all been depressed, coming for the pigs. But you still got the the Nvidias of the world basically unchanged, Microsoft unchanged, Apple unchanged, Oracle down, Palantir down a little bit, AVGO down a little bit. But you got some of the semiconductors catching a bid here, Cisco and MU and Intel. But the market is not finding its footage one way or another. It's on a slippery slope here. Even the S&P's unchanged. Yeah. NASDAQ just rallied. It was up around 40 or 50 when we went, shortly after we went to break. It's now down 10. I think nimble is the word of the day. It's been the word of the week. And I think you can continue that going into today. So you know what I'm going to say? Somebody who's really nimble from the trade desk.
He's got speed. He's got finesse.
My man Q, what's up, brother?
Fellas, how's it going? I'm doing well.
Well, how are you?
I wanted to ask you.
Good.
I was told that, Fridays usually good lunch.
Friday the 13th.
Well, no, Fridays are usually good lunch because, there's usually not the most packed day in the office. There's a lot of,
They spend a little bit more?
The tourists aren't here in the office. The blue plate. Is this?
I have no clue.
Is this a new one?
I have zero.
Are they cutting back on the lunch spend? Because I'm used to Diego burritos. I'm used to
Diego's so good.
Diego's so good. Friends of the family too. They big Tasty fans. We love them. If you ever go there.
Oh, cool.
Yeah, the owner is a Tasty fan. Diego's great. Small Cheval, great. These are kind of like
4.7 stars. Blue Plate Catering here. Been around a long time. Trusted partner for catering events, weddings. You know how that wedding food can be. But wedding foods, catering, workplace dining.
It's got me a little off-putting, I was expecting.
We'll see.
Give it the benefit of the doubt. Give it the benefit of the doubt.
Nobody knows. All right. If they're cutting back on you listening out there, people, you're cutting back on our lunches.
No cutting back.
I will get the Tasty Union back together, and there will be how to pay. There will be how to pay.
No cutting back on the backup power here. Everything was great on the trade desk.
That is
Phones
true.
worked. We had a power outage here in the whole building. Phones worked. Platform worked. Obviously, servers were all over the country.
Yeah,
so you'd expect that to work and not even know. But if you needed to call in or everything else, chat, everything else was working. So good job out of you and the team. I know you programmed that.
We got our Taiwanese sources. All right. Good. We got all that in check. We got backups for days.
Good.
Backups for the backups.
Got backups for the backups.
Good job.
I went to dinner with some of my friends last night at Jack Melnick's. Have you guys ever been there?
Yeah. Classic.
Really good wings.
Yeah.
Really, really good wings.
They are good wings. That's Let Us entertain you.
Where is that?
Is it?
It's on East Superior.
Like Lincoln Park-ish.
I never heard of it,
no,
but I've also
There's
never
another
heard
one that's
Okay, is there?
out there.
I've also never heard my friends say like, good wings when they said like when we went to a restaurant. Good wings.
Well, you're
No,
so
they're
used
really
to.
good wings.
I had the foam and the this and that. We're men of the people.
I'm glad you
Yeah.
enjoyed your wings. I digress.
Thank you.
Yeah,
I'm just
you
a
gotta
little.
go Bird's Nest. Bird's Nest is the spot. You ever been to Bird's
Yeah, right. No, I haven't been there, but yeah, I've heard about that.
Bird's Nest? You got to go to Bird's Nest. That's
Okay.
the best wings in the city. Bird's Nest. You ever been to Bird's Nest? You've never been to Bird's Nest?
I'm not a wing guy.
Okay. Well, you're a suburbanite now.
I'm not a wing
You
guy.
don't know anything about anything. All of our stickers keep falling off the wall. Have you noticed that?
I have not.
We've had 2 stickers fall off the wall.
Oh.
There is some weird stuff happening today. Okay? The power outage, SPY at 666 yesterday.
Oh, whoa. I didn't know
see
that.
On the
Oh,
dot.
no. I guess I didn't put 2 and 2 together.
Yeah.
The
stickers
low in the
fall
market
off
was
the wall.
666.
I feel like there's like ghosts in here or something. I mean, we got freaking Blue Plate for lunch today. Like
The power was going out. I mean,
What is
what's
going
next?
on here?
Really, what's next?
This is.
What can be next?
I might have to close my long delta. I'm scared. This is freaky.
Yeah, I'm a little ornery. I apologize. I thought we were going to catch a little bit of a bid here. We have not, so that's why it's not your fault.
Okay.
But let's get to your list.
Yes.
Let's get to the list. Top 20.
Top 10. I did
going
Tesla trade
system.
yesterday and option trades today because always up there on the top 10 list. Tesla is down at $2.
You just call it the top 10 list?
Sorry, top 20. It used to,
Every single day.
when you were pooping yellow, it was top 10.
Every
We had this
single
on-
day when I come up here, I go top 20 symbols going through the system and their IVR.
That would
And then you
imply
give
I
me
was
top
listening.
10.
I know.
All right, top 20 symbols going through the system at their IVR. Of course, number 1, Tesla with an 8, Microsoft 32, Amazon 27, Nvidia 18, SLV 53, Micron 68, GLD 51, IBIT 54, Netflix 26, Google 16, TQQQ 40, TLT 33, AMD 32, Palantir 18, Meta 23, DDOG 45, Spotify 28, SNDK 54, Oracle 57, and SoFi 25. Questions, comments, concerns, Tony?
No, Tesla number 1 up there again. Microsoft, I think, should be up there. It's been kind of weak as of late. I would imagine one of the top leaders in the market. We almost have all 4 indices lower. Only the Dow is up by 50. A little surprising. You've had almost on the E-mini S&Ps a 100-handle move. We're about 25 handles off of our lows from last night, which I didn't even see. I thought we'd have some two-sided action today. We went to the extreme to the upside of what I thought and the extreme to the downside from what I've thought. We've also done that in volatility. Volatility 24.25, only down 12 cents now. This market is not done fooling everyone as far as I'm concerned. So I think,
oil.
yeah, oil 94 and change now, about as high as it's been, basically unchanged for the day. This is definitely oil related, definitely tweet related, definitely news driven, which we've talked about for some time. Keep it nimble, watch your size.
Yes.
Always.
And then on the other side of the coin, you got fortune favors the brave. But we're going to take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny next. Good job out of you. Thank you for coming in. Appreciate it.
See you Monday.
Ciao for now.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Hello, everybody, and welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette wearing green representing the Irish is Jenny Andrews.
Ready for St. Patrick's Day.
I mean, you got to wear it all. Every ounce of green that we own, you got to wear in March.
And you have a big day. You've got a big day. JD is on his way home.
The prodigal son is returning. He was supposed to be flying, but there's so many crazy winds out that O'Hare is a disaster. So he's actually hopping in the car with one of his friends whose mom is down there driving. So
it's like 40 miles an hour, 40 mile an hour winds here.
Yeah.
It feels like my house is shaking.
I know. Little blips in the internet. So
yeah, so it's kind of crazy. It's interesting that are you in an all brick house?
Yes.
And my last house was an all brick house, but here in this little like old town I live in, there aren't any. There are very, very, very few brick homes. We're in a historic area, and very few brick homes, and so I think there's a difference. I can feel the wind.
It's like the Three Little Pigs. You know what we can feel is the weight of this market. I mean, talk about heavy market. We opened up the day. Let's pop in the platform. We opened up on the day, and now spoos are down 0.25%. The only thing keeping its wings up is the rut, but that.
Well, no, just the Dow.
Oh, just the Dow. Sorry, yeah.
Yeah, because I see I sold an iron condor in the rut this morning, and it's through my put.
Yeah. This is the market feels heavy. That's why as we were talking, I was typing in the VIX. I wanted to see what the VIX was doing. I want to see its range today.
Well,
So
it was probably down this morning.
The 24.67 is the low, and now it's 27. These are big moves in the VIX.
I know. At what point, I would love a study of, what's the average amount of time that VIX stays above, 24, 25, 26, 27 in that level before we kind of come back down to the low 20s. But we should take advantage of this while we have it. Do we have a long term? Because I kind of like in this market the 45 DTE SPX iron condors. I do like those in this environment.
Yeah. Let's take a look. So you want to go to the 45 day?
Let's just what do we have in SPX?
SPX.
Do we have anything?
In SPX? No.
Well, we didn't get down that far. Let's see.
No, we don't have it. I know we don't have anything in SPX.
Yeah, so I've been doing those, and I feel like this is a good environment for them with the vol so high. You'll be shocked at how wide they are.
Okay, so what are we doing?
So if you just go to the 45 day, I know we've got 34 day or 62 day.
Let's go. And those are the AMs, and I'm not a fan of the AMs. So
then you just take the same day.
I'm gonna go regular. And here's what we're referring to. Generally, I will go. My eye line will go to the highlighted line. I'm just gonna go to SPY to show this because they don't have AMs. So the regular monthlies are May 15th, June 18th, July 17th. That's the color. If you go to SPX. The highlighted ones are the AM. So I'm going to go to the one right after.
Day. And now I'm pretty sure that my 35 day April is already off in my SPX iron condor where I'm probably going to May. But this is a trade
we could go to May 62 days. This is I don't want the AM. This is the dealer's choice where you can go one or the other. There we go.
So let's just look, let's compare the width. If the expected move is 500 SPU points, you can see that. Move. So if you go to 16 delta, I'm just curious, if you go to 16 delta or 20 delta, you're going beyond the expected move. Go to the 20 delta and make it $10 wide. 61.25.
I can't. I'm going to go 20. I'm going to go 20. There you go.
2010. No, you don't have to make it $20 wide. You can make it $10 wide for us.
Okay, $10 wide. So 140. So this is the 61.20, 61.10. So $10 wide for $1.40. That's not bad.
No. And then go up to the 20 delta.
And then you're scrolling because there's to Jenny's point, there's a $465 expected move for this cycle. So I think it's going to be out of the way the expected move is 20 delta as well. No,
not with the calls. With the calls, it's not quite.
So you are going to get
you're at 7,100.
Wait, so I want to say we're getting 150 on the put spread, and if we do a $10 wide on the top with a 20 delta, wow.
Yeah. So, and you could even move the calls to the expected move and just try to get $3 on a $10 wide, but you're far. Look at this. You're getting
270.
Yeah. These aren't bad. These aren't bad.
You know what? I just want to keep it symmetrical. I'm going to go with our shorts. So we have 61.20, 71.20. Just for...
Wait. That's just a $5 wide.
Okay, 61.20, 61.20, 71.20, $10 wide for $380. That's not bad.
No, think about your risk here. You're getting $380. Your risk is only $620. The width of this, 61.20, 71.20, is 1,000 points wide. 1,000 points wide, SPU points. But it's a 63-day trade.
It's a 63-day trade. You've got a 41 rank, so this is the time to lean in for iron condors because you're getting your width so far.
Now, just show how if you made this go from a $10 wide to a $20 wide, what the difference is.
Okay, so 20.
Well, that's a $30. That's 30.
You got to keep an eye because it sometimes it's a $5 wide, sometimes it's a $10 wide on the top. Okay, so here, this is $20 wide, and then I'm going to go down to the bottom.
So that's what I've been doing, these $20 wides in SPX iron condor. So, and here's a $20 wide. So $740. It's a decent collection, and you're risking $1,200 to make $750. I feel like this is just, I don't always do these, but with the vol so high, I've been doing them.
Now, it reminds us of our friend Robin, who was a rising star a long time ago. Then she worked for the company for a very long time. I believe she's since been retired. But so I loved her rising star video because she said her husband made the money and she grew the money, and she did it by doing this.
by doing like SPY iron condors or SPX iron condors or some kind of big iron condor. $25 wide. I feel like I remember her video and she did $25 wide. But here we can't even do $25 wide right here because the strikes are kind of.
I mean, you could, but $20 wide is fine. But I'm actually, for our account, because it's on for 63 days, Jenny, I'm going to take it back to $10 wide for $3. I like it. I do kind of, personally, I like the $20 wide or the $25 wide, but if we're going to hold up that much capital, we need to, this is great. This is a
$10 wide for almost $4.
I know. So I'm going to lock this.
And like our puts are at the 6,100. I'm not too worried about the 6,100 puts. I'd be more worried about the 7,100 calls. But if my thought process is, if I'm losing on these calls, the rest of my portfolio is back in great shape.
Yeah, for sure. For sure. Okay, so that, SPOOs are literally almost unchanged now.
Yeah. Well, I didn't make as much money on my 0 DTEs as I wanted because I was like a little baby and won on some, lost on some, and closed it for a small win.
I have diamond hands
you're
right
gonna
now.
take a big turn.
I have a diamond hand, so we'll see how it turns out. I haven't done anything yet. I mean, I put the trades in. I haven't closed anything yet.
In this market, so in one of them, I managed both sides separately. When we were up, I bought the put spreads back, and then down, I bought the call spreads back, and that worked out. The one I tried to manage as a package, I had 2 iron condors, like iron condors in RUT and iron condor in NDX. In RUT, I left it and tried to work it, just say, oh, take it off as a package. But I think in this market, taking off one side and then the other is really the way to go.
Maybe, right? If you've got the iron condor in, because if you get a pop in one direction or the other, one side can come off.
Right.
Which is crazy. I want to give a big shout out. So we've been, Tasty Nation, everybody on the team has been working very hard to create, hold on, I'm going to go the other way, to create these YouTube videos, and they're really good. I want to give a big shout out to our buddy Chris, and this was a really cool piece that he did, and he had a guest interview, and her name was Helene Meisler, and it was a very fascinating interview. I'm not going to put words in this mouth, but in anybody's mouth, but I would suggest going to look at it.
I definitely. So Liz and I both watched this. I found it very interesting. She uses the call put ratio from the SIBO, and Liz, Liz pulled it up. So she's just, to find this, you just went to SIBO.com.
Yes. Yes, SIBO.com. And literally it's in US options market volume summary. I was looking around a little bit for it. And what I like about it is here. So this one is total. And this is index options. So it gives you the amount of calls and the amount of puts that were traded, the total, and then the PE ratio. Or I'm sorry, not the PE, the PC ratio.
The put call ratio. So she uses this deciding, how she wants to trade or what her market sentiment is, and it's a good video to watch. It's not very long. It's not that long, but it's pretty cool to see how she uses this call put ratio or put call ratio to give her idea of market sentiment or which way she thinks the market might be going.
So take a look at this. I find it fascinating. No, I'm not going to look at I'm going to go back and look at her ratio a little bit more, but take a look at this. So the totals in the beginning at the 9 o'clock hour, the calls were over puts, right? So you've got a million. Or is that 100,000? I can't tell with the numbers.
Million.
A million, and only 840,000. So at the 9 o'clock hour, it was calls over puts total. But take a look at the index options. If you take a look at the index options at the same time, it's puts over calls. You've got 526 versus 510, which is pretty interesting.
It is, and I think I'll have to go back and see how she used this info and what she was looking for, and she was looking for some extreme compared to what she's been seeing before. She would say like, yeah, I'm going to get back in bullish in the market. She was waiting for some extreme.
Yeah, I mean, it was really fascinating. And take a look at this. Equity options, this was very heavy calls over puts. So if you're taking a look index versus equity, and the totals were above it, so you've got, it's kind of a tale of two cities, because the index options are puts over calls, and the equity options were calls over puts.
It's funny because so would you think that, and I don't know if this is all just retail, if this is institutions and retail, if it's
I'm gonna bet it's everything that's just traded on the SIBO.
Because I would say with equity options, like for me, I actually bought a handful of calls today. This morning I thought, oh, market's up. What if we start to have a big rally? And I was going through individual equities and buying like next week's calls, going a little bit in the money on next week's calls, not giving up too much extrinsic value, but getting some more long exposure, thinking, oh, what if this market's going to turn around? Okay. And so I'm part of that 497.
I was laughing. I was laughing as I was looking at that. Now let's just talk about that. So spoos are green. I mean, barely, but they're green. Okay, taking a look. I'm just going to go to something we don't have. Let's say like Amazon. I don't know what you bought today. But if you wanted to take a look at something like Amazon and you were going to buy next week's, which is 7 days out, you're just going to be buying something. I'm going to bet you gave up a couple $100 and would buy something like that.
Yeah, and mine were smaller fries. I'll show you some of mine that I bought. And some positions where I had stock that has rallied and I got rid of the stock and bought calls instead, just in case the rally continues. So go to Nokia, NOK. If you go to Nokia and take a look at the chart, it's had quite a rally. So I sold out all my Nokia stock and then bought next week's 7-day in the money calls, the 7.5.
7.5. I can tell which one because you don't mind giving up 4 cents for it.
Yeah, right. Giving up a little, but keeping my long position going in case the run continues. But if it falls back, hey, I've locked in my profits on the stock. American Eagle, I bought some weekly calls in because that has been beaten down. It's something that I watch, and if you look at the chart in American Eagle,
I'm gonna bet you bought that one. Yeah, that's been down a little bit.
Look at the fall it's had. So I thought, you know what? I like being long American Eagle. I'm going to buy some in the money calls just for next week and to see if in case it has a bounce next week. It's just a cheap way. It's a cheap way to play that.
It is a cheap way to play that. But you know what you did? I'm just gonna we will do this quite a bit, is just change stock positions. But it's similar to the ratchet. So you were long Nokia. I'm just gonna kind of break this down, and we didn't talk about this beforehand. So if it's a product you're long, you had actually the stock instead of a zebra. So if you had a zebra, you could continue to ratchet it. But you decided to take risk off the table, and then the only thing you have at risk is that long call.
Right. And I made sure what I spent on these calls was a lot less than what I made on the stock. Like if I made $1,000 on the run on the stock, I'm not spending $1,000 on these calls. Made sure what I was paying on the calls, what I was risking on those weekly calls was way less than what I made on the stock, so that if Nokia keeps running up, great, I'll participate. But if it falls back down, I'll lose some of what I made on that stock run.
Very similar to the ratchet, and that's what options allow you to do. You're actually going back and forth using stock and options, very similar to what the ratchet does.
Now, the bad part about that is them selling the stock quickly, and I'm paying short-term gains on that stock instead of holding it for a long time and paying long-term gains. But I just thought in this market, I do want to take some risk off the table. Now, I could have done it differently. Instead of buying that call, honestly, I could have bought that put to protect my stock. But I didn't really I don't want to get in that game of like throwing away money every month trying to protect that stock.
Well, it's the same thing.
But I thought I'm going to leave this on for a week, see what next week brings, and then I'll reevaluate what I want to do in Nokia.
And you felt more comfortable buying the call then. To your point, you could, if you kept the stock, buying this is exactly the same thing as buying in the money call. If you have the stock, synthetically, if you own the stock and buy this put, it's synthetically the same thing as if you were long this option.
And I think like whatever happens next week, I might get back in with monthly puts or something like that. I'll see what I want to do. But when something's having a rally, I did this in NEO this week. So NEO was in the news, had a rally. And if you look at the chart, I see that little jump. So the day that I had that jump, I just did it with the weekly calls. I went out and bought weekly calls in NEO, thinking
you did it after the jump.
Yeah, like that day it was in the news, like NEO's up X%, bought weekly calls, gave up very little, and thought, okay, if this keeps running, I'm going to participate on the continued run. And it's a cheap way to do it. So I'm part of those call buyers. So I know, the call put ratio tells some kind of story, but you don't know what the purpose is and why everyone's doing it.
And in an ironic turn of events, you're being a smart call buyer versus, and I'm not saying that there's dumb call buyers, but you're thinking about it from a trader's perspective by going in the money. So a lot of people might say, oh, if it's going to continue its run, I'm going to buy, I'm going to spend $40 and buy 10 of these. And that is not what Jenny's doing is not. You're almost replicating stock because of the extrinsic value. You're paying a little bit more to only control 100 shares versus that long shot that I'm going to spend $40 on a chance that in a week Nokia's at 9.
And this is Neo now, but it has.
Oh yeah, Neo.
Look at the chart, and I get it. Like there are people who don't want to spend a lot of money, and they just want to spend a little bit of money, and sure that's more of that you're risking very little and you're playing for a big move, but you'd need a really big move just to get up to that 6.5 level.
You would need it. That's just it. It looks enticing on paper. So when you on paper, on a resume, and we were kind of talking about this a little bit in Market Movers today, this is very enticing to the youngsters, right? Where you're placing a $40 bet. I'm even just going to, you're placing a $40 bet with unlimited profit potential. Because that's what it says. If you go here and it doesn't say your profit potential, but if I go on
max profit, you've got the infinity sign.
Max profit infinity. So this is what kids like to see is max profit infinity.
And they're hoping for a big payout. And again, it depends on your account size. Because if those calls if the at-the-money calls, you're giving up a dime and they're only $40 for people who have, bigger accounts, that's nothing when you think, oh, I'll buy 10 of these for $400, take my chances. If Neo's going to keep running up, no big deal. But our younger kids don't want to just throw $400 away on a chance that Neo's going to keep running up. So they might be more likely to buy.
Right. So if they were going to spend $40, this is what we're trying to change. We're trying to generationally change the mindset. If you're going to spend $40, you can buy one of these, which is the smarter move, versus buying 10 of these. It's right. You're outlaying the exact same amount of capital. One gives you a better footing because in this example where you only have one of these, you're going to make money no matter where it goes up 1 for 1 versus you need it to go to 650 in the next 7 days. Mm-hmm. Could it happen? Sure.
It's weird because, do you remember that day? And I don't know if it was Monday or what day we had the EV news coming out.
It was the day we talked about Tesla. Yes.
Right. And so if you take a look at Neo's chart, Neo continues to bounce, but Rivian doesn't look so hot.
It bounced. It just came right back down.
It came right back down.
Yeah, it got the same bounce. It just came back down because we were looking at it. We looked at it on that bounce day because we looked at Neo, we looked at Rivian, and we wound up talking about Tesla because that's what a lot of people look at. And Tesla never got that huge bounce. It was up a little bit.
It got a little bit of a bounce, but that's come back down too.
Yeah, everything's kind of come back down. It's crazy.
So I don't know if we have short puts in Rivian, but with the down move in Rivian, I don't mind Rivian puts.
So Rivian, we usually have some. Yeah, we always have something in Rivian. We have a synthetic covered call in Rivian. So it's in the money put is a synthetic covered call.
Yeah, but it was probably out of the money when we put it on.
I don't know. We might have. I really don't know.
Go to our position page and see what we collected.
Sometimes we do. It was 3 days. Jenny, it was 3 days ago.
And it was trading, it was 95 cents and we're down $71.
Yeah.
That's just what I'm like. Rivian has fallen the last couple days since we put this on.
We probably put it on right there.
Yeah.
Yeah. So now, but when I look at this isn't something I would knee jerk panic and say roll or anything too. You still have 94 cents extrinsic value in that option.
No, but I would add, if this is mine and I'm small enough, I'd add on the 14 put.
Yeah. But we trade in one lots here. I mean, I don't mind it.
Did you freeze? Oh no. I think Liz froze. James, I don't know if Liz froze or I froze.
We'll take her down. You can keep going.
Oh, so Liz is controlling the platform. Do you want to take a quick commercial break so I can pull up a platform? Okay, are we on a commercial break or are we on am I just on?
It's just you right now.
That's fine, and I can stay on. I just have to. I have to get into our show account. I'm just gonna briefly get into our show account because I'm in my account.
No worries.
Log out and pull up a platform, and maybe Liz will make it back. I know the high winds have been. She's had power trouble all day today, so this will take me a second.
Good job. Just keep it rolling. Awesome.
All right. And if Liz makes it back, we'll add her in. Okay. So this is kind of fun. I get to trade whatever I want, and I don't have Liz to stop me. We'll see what she comes back to. Okay, everyone. We are back in the platform, if everyone can see this. And I am going to play some trades while I have nobody telling me what I can and can't do. That'll be fun. And I might close a few things. Our MCL Strangle, we sold this 3 days ago. And the rank is still an 88, which seems high, but we made $100 in just 3 days in the MCL Strangle. So we can take that off. I took mine off. Actually took off my MCL and my CL because watching this CL downside broken wing butterfly, here, I'm going to go to the analysis page here. Watching this downside broken wing butterfly that we have in CL and seeing how it behaves in a down move. Hold on, let's see. Here it is. Okay, so we put on this downside broken wing butterfly where we collected a credit, but really what we were playing for was it to end up, way down. We are way down in the 60 level. Okay, here we go. We're ending up down. We're playing for a down move in oil, and this is a longer dated trade. Watching how this behaved on the oil down moves and knowing we put this on as a bearish position, I took mine off for a small profit, and thought on a down day, I'm putting this back on because we saw this when we had bigger down moves in oil. This trade was really losing, even though we put it on as bearish trade. So I thought, okay, if we wanted to have a bearish trade in oil, but this was really taking a hit on the down moves, I took mine off, and I'm going to wait for a few down days in oil to put back on this downside broken wing butterfly, and then we take in a much larger credit than just that $1.70. So we'll see if I can get $50 out of this. I'd probably do it. I'm going to try. Let's see, 12. If I could buy, I'm going to put in an order to close this for 12, and that would be $50 out of this butterfly, 12 debit. And, I'm going to put this in as a GTC and leave that. And that will work because then we'll just take $50 out of that, and on a down day, put it back on for a much larger credit or a wider spread. And this MCL Strangle for $100 in 3 days, I think I'll take that off. Let's see. 468 debit, and we collected 571. So I think that's fair. Liz she likes to take things off, so she can't complain about that. All right, I'm going to close that. Okay, so let's see what we have. That's working. And as far as new trades, CRWV, we know that we've keep that on for longer. We don't have anything too amazing. Oh, this long call in ETHA. We bought a long call in ETHA to replicate 100 shares of stock. We did it yesterday. And ETHA's having a little run today. It's up 4%, up $64. And it was up maybe 10 cents yesterday after we put it on. So we're up $74 overnight from our long call in ETHA. I'll take that. And all of these will get pushed out after the show. Okay.
Did you miss me? I had to thank God for hotspots, right? So I just went to the hotspot.
Oh, clever. Let's see what you think. We bought this ETHA call yesterday, and we made $74 on it. I said, okay, I'll show you what I did while you were gone.
Yeah, please.
Okay, so I'm selling out. I'm putting in order to take that $74 and eat the overnight. But why not? I tell me what you think about this. Okay, this CL downside broken wing butterfly, we put it on as a bearish trade. I know we collected $170, but we put this on as a bearish trade. And I have been watching my CL positions because I have this, and you have it too, with a little more risk. And then this MCL, we've got the MCL strangle, which I put in an order to take that off because we made almost 20% in 3 days.
Yeah, 100%. And that's so, it's so wide. I think that's going to keep its volatility wings up a little bit. I would take that for sure.
But this CL, watching how it behaved, and I don't know if I'm in our show account as much, but watching how mine behaved, when we had those bigger down days, when oil was back in the 80s, this trade, even though we put it on as a bearish trade, was losing. It was losing because our risk is to the downside, and this trade on the down days was losing. So I thought with oil up at this level, I was trying to take $50 out of it. It's bouncing around, and I put in order to take $50 out of it, thinking if we get a day with oil back in the 80s, we can put it back on for either a wider win range or more of a credit, because when oil's been going down, this has been a losing trade, and I don't want to have a bearish trade on that's a losing trade if we go down. I'd rather, if it's a bearish trade, wait and put it on when oil's a little bit lower.
Well, I mean, in these markets, let's just talk about today, for example. I mean, I know we're talking about oil, but you're getting two-way action. We've been up and down today, so I have no problem taking these off. When you put a butterfly on, you're not going to really get paid, even if it is bearish, because they don't open up until the end.
I know. And usually when we put on those broken wing butterflies or butterflies, you'll see us put them on a little bit shorter term, like our natural gas. So here's our natural gas butterfly. Oh, still 13 days to go. And still 13 days to go.
Well, this one, and this is a butterfly that we have on 4 even. We legitimately have no credit, nothing in this. So we need it down. This is, I mean, we did it 45, we did it in the 43-day cycle, because if it's got 13 days left and we've had it on for 30, we did it with the 43-day cycle.
Mm-hmm. So we're not doing anything with that, but I put in an order to take $50 out of this CL butterfly, and then the $100 out of this MCL.
Yeah.
And I know we wanted to leave this, but too many times when we saw oil down and this was a big loser, I thought, no, when this is up, when oil's up and this is when I'm taking it off, and then when oil's back down, I'll put this on for a better price.
But you know what though, Jenny, if you're really playing for a bearish trade, what's nice about it is collecting $150. That anywhere to the upside, we would have kept that.
Yeah. You can see we collect 170.
Yeah. So, I mean, that's a decent collection, which is kind of nice. But so when you're talking about the collection, if you made 10% in a couple of days, if you were just selling the put spread and you made 10% in a couple of days, you'd take it off.
Yeah, and I don't mind taking $50 out of it and just keeping a close eye on oil.
Well, that's it, and that's what's different than the natural gas, because the natural gas we don't have a credit in at all. It's for even.
I know. Okay, so you didn't miss anything else.
Did you go to Twitter yet?
No.
Oh, I didn't know. Do you have Twitter pulled up?
I was just coming to see what we have in Broadcom. 8 days, Iron Condor.
Oh, $50. I mean, the key word in this environment is nimble. Of 39, I wouldn't take, but I would take $50 or $40.
Right, yeah, $250. I'll put in $251 is $50. I'll put that in.
Yeah.
Okay. Oh, Twitter. You know what? I don't even have Twitter up. I wasn't, because you were running the show today. I just quickly, and I was in my own account. I quickly logged out of my account, logged in the show account, and quickly pulled this up. I don't even have Twitter up.
If you hold on, let me see if I'm still back up. Otherwise, we can switch the sharing.
I mean, I might. Let's take a. You know what? Let me look. I might have Twitter up somewhere. I've got it.
Okay.
Okay. Here we go. I just have to make sure great. But we can go back. Here it is. Okay. I was showing my husband some of our viewers, because last night I was texting with Mikey. And I was like, "This is Mikey," and so I was showing him I'm showing him all of our Twitter stars today. Mikey, Jack Tucker, all the Twitter.
We haven't heard from Jack Tucker in a while, but I will tell you,
he's in today.
Oh, he is in today. Wonderful. He's back. I love it. Okay, so look at this. A sneak peek into the book of a few iron condors and the big CL options.
Nice. Please be careful.
I like it.
Not a
Not a
trade
trade
recommendation. Yeah, look. Okay, so just to give you an idea of how big these are, if you're looking at 10 points wide, that's $10,000. $10,000.
Let's go take a look. Let's pull up his trades.
So 70, 60, 125, 135 in April.
Yeah, you can go back in. So it's April with the 35 days. And he's the 70, and he did a roll in there too. So 70, 125.
It was.
This was yesterday.
You know what? We've got.
He's just giving us a brief.
I'm going to go to the 28 day just because we have, it'd be crossing over.
Sure.
We have 70, 60.
So 70, 60. So take a look at that. This is what we were trying to show. So it's your max loss is $9,000, but you're collecting 89 cents, which is $890. It's $10,000.
And what was his top?
Andy did 10 of them, by the way. And the top was 25.30, which you don't have here. Just do.
I don't have here.
I'll do 15.25. So you can see $10.
Oh, it was 25.35.
Yeah, 25.35. So just do 15.20.
25. Okay, so I had to go a weekend because we had positions in the other cycle. They'd all be crossing each other and make a mess. $2,500 in profit potential, $7,500 in risk.
That's for one lot.
And he did 10. So we've got $25,000 in profit potential, $74,000 in risk.
Yeah. Yes. And that's why he puts not a trade recommendation. But Jack Tucker, I mean, honestly, I don't know how many of these I can give you. I think yours needs to be laminated. I think yours needs to be laminated.
Yeah. Nice work, Jack. Nice work. Okay. Frank from the SIBO Thursdays option volume. And Frank gives us these calls leading puts 7 to 6. He always gives us that info.
Which is great. And so if when you're on the SIBO website, it'll fill in as the half hours go by. So Frank gives it to us from yesterday's, which was wonderful.
Yeah. Okay. What else do we have? Oh, we had a lot of numbers come out today.
I mean, what do you think? Do you think it was the JOLTS? What turned around the market today?
Well, we were up. So maybe the JOLTS, because after JOLTS came out, did we pull back a little bit?
Or are down 23?
Are they?
I mean, I don't know. Maybe my internet isn't connected. Darn it, it is.
Look. You know, you're right. It is. My short puts in RUT were 24.80. I'm glad. And
it's right there now still, right? 24.80. It's 24.78. Yeah.
But if you think about it, on the open, that was the expected move. That was it. I sold them at the expected move on shortly after the open.
So do you know how good the expected move odds makers are? I mean, it's not a real person; it's a volatility. I know that, but we were up 30. So let me give you a couple of facts. We were up about 32 this morning on the open, and SPX, and the expected move. Look at this down. We're down 17. The expected move for the cycle was 50, 52. We were up 30. Now we're down 17. I mean.
Yeah, but this market doesn't look good to me. I mean, I wouldn't be surprised if we're down 50 by the end of the day. This market does not look good.
No, it doesn't. But when you look at it, the odds makers are pretty good. When they said that, it's been a 50-point move. And if you take a look at SPX now, you've got a 35-point move, which means that we can only be up 18 instead of up 30. I mean, it can move more than that, but the volatility is saying that it's going to be.
I'm not going to say that the odds makers are so great until the end of the day and we see where we close, because being up 30 and now down 16 doesn't bode well for the market.
Oh, I don't think it bodes well for the market, but that's what the expected move for the cycle was. And so that's just it. Is go back to your RUT. Go back to RUT if you don't.
But that's for end of the day. It's 10:30, Liz. Like, who knows where we're going to be at 3
but your chance of hitting it. So the delta is, if you double the delta, it's your chance of hitting it at some point during the cycle. So you should expect to be tested on those puts that are at the expected move.
I'm just giving a warning that I wouldn't say, okay, these numbers on the side, the $35 expected move, $100 expected move.
No, it can get a lot bigger. I'm just saying from right now, from the point of this morning until now, it has moved its expected move.
Yeah.
50 points.
50 points from up 30 to down 16.
It's not over. It's not over, Johnny. It's only 10:30 and it's not over.
No. I really was thinking when we were up 30 or then up 40, I thought we might have a nice rally today, but
Well, you bought a bunch of calls. You had to put your money where your mouth is.
Well,
You for sure
I
thought it was
took-
going to rally.
but what I did was like take stock off and replace it with calls on some of them. So I felt like that's not taking stock off and replacing them with calls isn't a bullish. That's not like bullish. That's protection.
That's protection. But when we were talking about Nia and Nokia, you were saying I think it's going to continue its run.
Well, I think part of my point was the calls over puts. You don't know what people are doing. So if I'm closing stock and replacing it with calls, that doesn't mean I'm super bullish. That means I'm more nervous and protecting people. So you can look at those call buyers and they might be doing it for different reasons. You don't really know.
That is, I think, what we have to. That's our biggest takeaway when we are live from the SPX pit, because we look at those high volume, and you have no idea what anybody has or what they're doing it against, or what they're doing with it.
Oh my gosh. Jamal must have tweeted us because Mikey said, come on, if you want the ladies to see your tweet, you need to add hashtag LAZJ.
Oh, thank you, Mikey. Our Polish warrior is the best. Yeah, Jamal, we don't see anything.
Checked on Jenny. What is Jamal saying?
Oh, it's because of Miami, Ohio.
Oh, yes, I know. So that's why if you see our market movers later on YouTube, I went onto DraftKings app to bet that Miami, Ohio would still make it into the NCAA tournament, and but it wasn't a choice. It wasn't a choice. It wasn't a bet I could make.
Oh, but
they lost. They lost in the first game of the MAC championship. But you know what? So many teams do. There are over 10 teams in college basketball that were the winners of their season and are already knocked out of their like conference championship.
So does that mean they can't make it into the tournament? Or they should make it into the tournament?
No, Sunday is the announcement of who's making it into the tournament.
Okay, gotcha.
Yeah. So thank you, Jamal, for thinking of me. Pro forma. This is all.
It's all related to Mikey. Oh, Fabio's coming in.
All right, Fabio, good to see you. TGF ladies, what do you think to adjust the delta in your Intel Strangle? Let's look. Why not roll? Okay, calls about 90% pop. Why not rolling down to 50, collect more money? Let's look at our Intel Strangle.
Okay, and I've got it pulled up. So he said short calls about 90% pop. Why not roll down to the 50 and collect an extra 160 in credit?
Okay, so we have the 4460 Strangle and Intel. So he's saying that, our puts are here's what would happen. Our puts are losing. And if you're trying to keep your Strangle somewhat delta neutral, our puts the 38 delta and our call is an 11. So his suggestion is bring that call down.
The 50 is his suggestion is the 50 and collect another $1.60, he said, but yes.
So me personally, I'm not comfortable with the short naked 50 call. I think in my wishful thinking, Intel might be above 50 in 35 days. But I don't mind rolling it down. It's tough.
Well, I usually don't trade this way. I mean, I will roll down when my short is breached, not tested.
And I'm always kind of watching. Like 2 days ago, I sold the 52.5 calls for $2. So I have a hard time rolling down when those calls are $1.28 right now.
Yeah.
I actually bought them back today. I bought them today. I was like, 52.5 calls, only $1.28, $1.30. I bought them back today because I sold them for $2 and $2.10 the other day.
No, but Fabio, I like Fabio is very clear the concept. He's a very good trader, and a lot of people do this.
Yeah, and a lot of people are trying to keep their position neutral. Do I mind leaning long Intel? No. Do I mind having long delta here? No, because we're short 40 deltas and we're only we've got this. So we've got 40 deltas from the port and then 11 on the call.
But take a look at the delta. So you're right. There's a 39 delta on that put, and then if you go to that 50 call. Oh, no, yeah, you're $1 out for a 40 delta, and that 50 call is a 35 delta. They're not too far, and you're $5 up. Isn't that crazy?
Yeah.
Do you see what I'm saying?
Right.
Your 50 put is a 35 delta, and your 50 call is a 35 delta, and your 44 put is a 39 delta.
Right. Well, I'm still holding on to my bullish dreams in Intel, so I don't want to roll down, and I don't. So we're leaning bullish. So if we've got 40 deltas here and 10 here, we've got 30 deltas. We're long 30 deltas. I don't mind leading long.
No, we don't mind it either, but thanks for bringing it to our attention, Fabio.
Yeah. And we'll keep an eye on it. Sometimes I'll buy back if my short call gets cheap, I'll buy it back, but we can leave that for the 45 cents. But I don't like the 50 call.
No, 45 cents is a lot to buy it back.
Yeah. It's not like they're giving it away for a nickel or a dime.
So our lumen is up almost 50%. I mean, you have to look at it on a percentage basis because it's a big lizard.
Well, and that's a big lizard. So sure. Great.
And it's got 7 days left. We've been doing this. Do you want to reestablish it?
Yeah, let's take this off and put on a new one. So we sold this for $1.15. It's 60 cents to buy it back. Could be slightly wide markets. I'm going to go 63 cents, see if we get out of this. 50. It's 63 cents. Let's see, 50. I'll let this work. I don't know that we need to buy back that or sell out that. There we go. We're out. And I'll go to the 35-day. Now we're trading 650, so it's a little bit tricky.
Yeah, I mean, we can also wait in lumen. It's not as if we're dying to get into it.
Right, because we're not getting enough. But I do like lumen. I do like trading it.
It's been small. It's been a slow and steady wins the race. It's done pretty well for us.
I don't mind having like this 7 synthetic covered call. You're getting $44 in extrinsic value, 40 cents in extrinsic value. It only uses $168.
Yeah, that's not bad.
No.
That's not bad at all.
And then if it pops up, if we sold that put and if it pops up a little bit, we can add on that 7-8 call spread.
Sure.
Because lumen, down to 650. Yeah. Let's hope for a little bit of a pop. I'm long lumen stock and I'm always trading options around it.
Oh, we got out of our MCL.
For $50. So for $50, no, that was $100 on the MCL strangle.
Nice.
Yeah. So I'm still working this $50 out of that CL. I'll go back to Twitter, make sure we get to everybody here.
We have a lot. There's quite a few tweets in there.
All right. From B. Wyatt. Sold call side at the open and the put side as the market sold off to create an iron condor. Also took Jack Tucker's advice to widen the strikes from 20 to 25 instead of adding contracts. Well, good luck.
Market, I hope. I
hope so. Yeah. Good luck.
Yeah.
He's an FTX and his short puts are the 6610, 6585.
Well, there's a couple, right?
6610. So we're still,
Oh yeah, you're okay.
Points away.
Yeah.
Points away. Yeah.
You're okay.
All right, good luck. Okay, and then MKSA, greetings. What will you do with losing earnings calendar in Adobe?
So they have the April-March 290 call. Let's take a look at it. Nothing's a trade recommendation. Adobe.
April-March
290 call spread. Call calendar.
So all you're left with is the April 290 call. Really, that March is probably worthless.
I mean, it's still got 30 cents in there. So they paid $5 for it.
So you paid $5 for it.
I would leave it.
Yeah, for now I would. There's still 35 cents left in the 7-day. If this were me, I'd probably leave it to the end of next week when this 290 is about to roll off or worth very little, like a nickel, and then decide what I want to do with my April. Because sometimes if I have something like this, I'll use that money. I'll take that 211 and sell it out.
This is kind of what we were talking about, with the kids. If you were going to look at Nokia and you're going to buy 10 of them, it's got to go so far in order for this to happen. When you put the calendar on, it didn't come to fruition. Now you're not in bad shape. A lot of times when I have a calendar, sometimes they have a raging comeback, but you could just do a call spread wrapped around the at the money if you want to use that 210.
Yeah, you could, and that's going to be a cheaper way to do it. Like if you sell that out and use that 210 to buy a call spread, you're outlaying 60 cents debit, but you already outlaid that $5. You're just trying to make your money back and hope that call spread is full profit in 35 days. That's one thing you can do. I will often sell that out. I'll turn it into a diagonal where, and I'll give myself more time, where I'd sell out that long and then sell out another, one at the expected move and go to the next cycle and buy the at the money. I guess it's outlaying quite a bit more. And then I'm left with a diagonal.
I mean, a calendar to a diagonal is always going to be a lot more expensive.
Yeah. Yeah, that is expensive. So Liz's idea of turning it into a call spread.
I mean, sometimes I would just leave it. None of this is a trade recommendation, but I've been known to leave it because you have 35 days left in there. And then maybe when your 35 days or $35 comes out, sell the April with 20 days, the one you're over, 290.
And I think, so your long is in April. 35 days is a long time in this market.
A long time.
Yeah, because I have leftover calls from positions in Microsoft, AMD. There's a handful of leftover long calls I have from old positions that are April. And I look at those and I say, hey, 35, anything can happen in 35 days. I'm just leaving these.
Anything can happen in 35 days. That, to me, for me, that's an eternity with a long call.
Right. So I don't know what are you doing with, because we'll throw in diagonals. We'll throw in, most of mine would be left over from a diagonal. And what are you doing with your long April calls that might be left from diagonals?
I have, like I said, I've left them. I've left a lot of them. I mean, Costco was my biggest one where I kept, and Costco was like the gift that kept on giving. I let the short roll off and then the call came raging back because it was such an expensive diagonal. It was actually a calendar. So it was a very similar position to this.
Mm-hmm. Yeah. So I'm kind of leaving.
You can do anything you want though with it. You can, like, there's lots of other things to do. Nothing we do is a trade recommendation, but if I spent $5 on a calendar and I still have 35 days left and it's still worth about $2.50 because they're 30 cents in the one, I might leave it.
I probably would too. At least until the end of next week. And then once your short is gone, then reevaluate it.
Yes. Okay. So do you want to jump back into Twitter? We have only about 3 minutes left because we can't step on the show that's after us. And MKSA comes in. How about an earnings calendar in Dollar Tree for Monday AM? The direction is your choice. We can do that, but I want to just get to Jack Tucker's too. Because
okay, we'll take a look at that. Jack, 3 double tranches, collected 31,000. Jack, good luck.
Or 30,000 after fees. I like it.
Yes,
short deltas were about 17.
Nice.
So can you, and you know what he did? He did it at 10 o'clock. 10:15. He's our time.
He did it at 10:15. Well, yeah. I mean, at 10:15, the market was starting to turn around, was turning red.
You're almost in better footing, I think. When you're doing an iron condor, I kind of want to wait until 9. If I'm doing one second,
it kind of depends. Because again, I did an iron condor in NASDAQ or an NDX, but when we were up, I took off the puts, and when we were down, I took off the calls, and I was out of it by 10. I think
But I also don't think, like, Jack is really good, and he trades all different times, right?
Yeah. I think it depends. Everyone can kind of, the longer you do this, the more you have your own personal, like, feel for the day or feel for the market. You can just decide whatever you want to do, right?
You can decide whatever you want to do, and some people have other jobs and other responsibilities, and this is when they can get there. So that's just understand your risk, your reward, and your risk is managed at order entry.
Okay, earnings calendar in Dollar Tree. What did we just get filled in? Do you know?
No, but I will push it out, whatever it is.
Let me take a look at Dollar.
Lumen.
Oh, okay. DLTR, Dollar Tree. We have earnings. She was looking at an earnings calendar, trading at $1.10. Earnings Monday morning. Let's see how expensive this is. If we say, because sometimes when the economy is not doing well, some stocks like Dollar Tree go up. Do you want to play it slightly bullish?
Sure. I don't want to go too bullish, but sure.
Like, how about here, 114, 113?
Sure. They're all going to trade around the same price, so you can pick your strike.
Oh, but here, the weird thing is, we're not selling today's. Yeah.
No, you have to go 7-day, 14-day.
And then that's tough, because this calendar's not really going to come in because it's you've got the 7-day. Vol will come out. Like, Vol will come out of that.
Sure, come on, let's jump in.
85 cents. Sure, 85 cents. We're in 114.
Yeah.
Okay.
Perfect. I like it.
All right, that's it. We're out of time, Liz. We made it.
I know it. The fastest hour of the day, done and dusted. All right, everybody have a wonderful weekend. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you on Monday. Have a great weekend.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
I like how you do it. You're helping me through it. Baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it. You're helping me through it. Baby, your love is too good. I'm still coming down from the weekend. Saturday night like we should. I know I should work a bit harder, but baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know that you worked a bit harder, 'cause baby, your love is too good. helping me through it. Baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it. You're helping me through it. Baby, your love is too good. Baby, your love is too good. Baby, your love is too good.
What's up, Tasty Nation? Welcome back to the show. My name is Mike. I'm here with Jamal, and we have a very special guest today. We've got Russell Rhodes from the business school at Indiana University, head of research, academic market insights. Russell, how you doing? Thanks for joining the show.
Doing great. Long-time watcher, couple of times guest, maybe a decade or so ago, but very happy to be on with you guys.
It was more recently than that. You were on Engineering the Trade.
That's right. That's right.
Yeah, that's right. That's right.
I was thinking of something from my SIBO days, but you're absolutely right. And I told Jamal at the beginning, there are several Kelly students that are very jelly that I even know you. You got some big fans. You got some big fans down there, man.
Shout out to the Kelly students. I appreciate it. I appreciate that a whole lot. It's a very small band of people that actually pay attention to me, so I can appreciate it. Thanks, man. Mike, you are looking at the face of a man who is very happy about the national championship his team brought home to him. He is a huge Indiana guy. He is not of the ilk of the people we've talked about in the office who all of a sudden started showing up with Indiana stuff on. He's been repping it for a long time, obviously, as he works there.
Yeah, and I honestly, it's the first time I've been associated with a real winner. I still don't really know how to deal with that. You know?
little impossible.
Having come close so many times. So.
I love it.
What do you give us your overview before you even get started? Give us your overview of what you're seeing right now. What are you thinking, man? Before we dive into some deeper questions.
You know, everybody's focused in on the Iran thing, and every day I use this analogy with somebody that's not involved in the markets, trying to explain the issue that's going to come out of what's going on in the Middle East. You know, like if you've got your commute down to the minute, and you know, if you happen to leave 2 minutes late, that makes you 20, or leave 2 minutes late, that makes you 20 minutes late. You know how it piles on the end. Every day that the supply disruptions go on, it's not like it's just one day to get it back together once this thing clears itself up. So, you know, every day that this thing goes on, it's going to end up causing some major supply chain issues. Energy prices affect everything else because you got to use energy to get goods around. And because of that, yeah, I think I'm afraid we might be seeing another round of inflation. And I think the market is starting to recognize it as well. Before we got I don't know what we call it, so I just call it the Iran situation or whatever. But before that happened, we were looking at, when you look at the odds of what the Fed's going to do, we were looking at 2 cuts this year, one maybe in June, July, and then one by the end of the year. Right now, it's actually pricing by a hair, no cuts in 2026. And one of the things to teach in the classroom is the biggest driver of interest rates is inflation. So you've got to assume that there's some big concerns around inflation. And I'm going to be watching what the Fed says next week very, very closely, because it's possible we could experience stagflation for the first time in a lot of people's lifetimes, which is the worst case scenario for the equity markets. So that's probably the biggest thing that I'm afraid not enough people are paying attention to right now. And that's where I'm always trying to look, is not exactly what everybody else is looking at. And that one's been creeping up on us.
I mean, that is extremely well said for a lot of reasons. We have one of our GuyFX guys comes on the show every week, and he came on Wednesday, and he did a little thing on stagflation. Mikey and I have talked a lot about what's going on with inflation right now and how it's messing up the market. And you see the 10-year. I mean, it was below 4%, 10 days ago, and now it's above 4.2 and change. So obviously, all of that is leading to volatility, right? And you've been studying volatility for a long time. What do you think is the most misunderstood thing about volatility right now?
Well, I think the most misunderstood thing about volatility and VIX, and I think this does a disservice across the board with respect to implied volatility, is that the VIX reactions, or how VIX is behaving, is 100% a reaction relative to what is happening in the S&P 500, and I this is a very difficult process, and I've been trying off and on for a long time. But I feel like there's an anticipatory component to VIX sometimes. When national elections coming up, when we're looking at the next Fed meeting, et cetera, you're going to see a little bit of a tailwind for VIX, and then it does come out of VIX once we have some of those major events, or we've got just major uncertainty in front of us. And VIX has been at relatively high levels for most of this year. We've even hit the 30s this year. But even last year, VIX was at what I would consider relatively high levels, even though the S&P 500 was making new all-time highs. I did a little histogram around it, and the normal histogram for all S&P all-time highs versus where VIX is, the midpoint's kind of in the 12s or so. For last year, the midpoint was like in the 15, 16 range. It looks like the whole curve had shifted a bit to the upside. So I think the biggest misperception on VIX is that it's 100% reactionary to what's going on in the equity market. There is an anticipatory component to it, and I think that's why it's been elevated for most of this year, and rightly so, as we can see now with it up in the mid-20s.
Yeah, that makes a lot of sense. And if I could just piggyback off of that, when you look at these VIX markets, what are you seeing right now? Or in other words, is there anything that really comes to light to you? Is it the backwardation in the VIX futures market, or anything specific to the VIX options themselves?
Really, with respect to the VIX term structure, I think so. My job used to be working at SIBO, and I was supposed to get people interested in VIX. That was my job. And
I'm familiar with that.
And Jamal might have had to do that as well. So in one of the ways that I would try to get people just to pay attention to the index, I always felt like it was a long sail. You want to pay attention to the index, but you shouldn't be watching the index in a vacuum. You should always be watching the index relative to the futures, and that's where you start to get people interested in the term structure. And I know your viewers are very familiar with the term structure. What it's looking like right now, and last I checked, April was at about a point discount to spot. With spot, we're pretty much in the same range. April's at March was at 26.15. I apologize. It's at a little bit less than a point discount to it. That's an indication that people are still a bit braced for, what may come. I mean, I doubt a lot of people want to be leveraged long stocks and short volatility going into this weekend. It sure hasn't worked the last couple of weekends. And we get that one going off the board next week. I am a little surprised that April is at as much of a discount as it is, even though as the curve the curve remains kind of flattish when you go from May through the summer. When you've got everything in a really tight range like that, with April through almost August, that's just a big indication of uncertainty. They're just not sure what direction we're going next. But it's not like when we normally have VIX spike up and it's just a defined backwardation where there's an expectation that mean reversion out of VIX is going to happen in the very short term. I think the way that the VIX term structure appears right now relative to spot, it's that the market is expecting high volatility for some time. It's a good way to put it. We're not out of the way. What we've been experiencing over the last couple of weeks is probably going to be the norm for a little while.
You're too good, man. You're basically answering questions we haven't even asked yet, because that's literally the next thing I'm about to ask you. This idea of volatility shifting higher, right? I mean, you kind of alluded to it a bit ago, and you're right. I mean, I noticed that last year. I think we all noticed that last year. There was a higher component to VIX. Market was still moving quite a bit. It was certainly not, I think, the 2017 type of era that people thought that last year was going to be, and we're certainly not in that now. So as a result of that, we obviously at Tasty a lot, we're talking about short fall trades. I mean, and short vol has worked very much for the last couple of years, outside of 2022 probably, but that's been the thing that's worked. Do you think that is going to be a problem going forward, or is this just kind of a blip on the map?
I think you're going to have to be more it's going to be more difficult. There's a method that I use that anybody that's ever seen me present before is kind of familiar with, where I'm looking at buying puts that have. In fact, the first time I ever came on Tasty Trade, I talked about this trade. Buying puts that if the index doesn't move, you'd actually make money at expiration over certain time periods. That doesn't work as well when VIX is in the 20s, and it really and in fact it doesn't. It works, but not to the extent that you would want to consistently be doing it when we're in backwardation. So in backwardation, I see a lot of folks avoid the short volatility trade. I do something on Friday afternoons where I go through the option tape over the course of the week, and I did that this morning, and I saw a lot fewer short volatility put purchases this week compared to other weeks, and it's just because we're in a slightly different environment and a more difficult environment to be short volatility. Now, instead of buying puts, there are opportunities with VVIX hitting pretty high levels with the implied volatility of VIX options, maybe allowing to sell out of the money calls and get some sort of premium. And as long as we don't get a huge volatility event that takes us to the 40 or 50s, you'd be okay with that. But that's kind of your alternative right now on the short volatility trade.
Yeah, that makes a lot of sense. And speaking of utilizing options, finding opportunities, when we talk about hedges to the downside, or speculating to the upside, or selling options against stock you might own after you see a pop in that underlying, what do you think is most valuable long term? Are you more of a short premium against shares to have no upside risk type of thing, or utilizing more downside hedges? Maybe when nobody's talking about it, maybe when VIX is really calm, that's the opportunity to inventory some hedges. How do you see it?
Yeah, it's one of the things at the Options Institute, we had certain, I don't know if Jamal, because we didn't overlap there, but the person that I worked on, the person that I worked under, there were certain things that we all had to be consistent on. And one is that selling a call is not a hedge. But you see all of these buffer protect type positions that give you partial hedges to the downside. And now that we're in a slightly higher interest rate environment, you do get some time value for slightly in the money calls. And I worked with a guy, one of the first jobs I had years and years and years ago, he would sell in the money, and it was a higher interest rate environment like now. He would sell in the money calls to cushion some of the downside. But also get some time value out of those options. So, within the equity option space, with interest rates at a more normal level, that's actually how I would be looking at them. If stock starts to get a bit ahead of itself, normally we would sell an out of the money call. I might be looking more at the in the money calls to cushion some of the downside as well. So I've never really looked at just purely buying a put for a hedge. I think a collar makes a lot more sense. And again, the being able to get a bit more sell in the calls because of the better interest rate environment, collars probably make a bit more sense now than they did 2, 3, 4 years ago.
Whether it's professional investors, whether it's in retail investors, I know you kind of studied the behavior of both of them. Mm-hmm. What do you think some of the mistakes are that they make, and what could they avoid in this type of environment? Because this is a treacherous environment, It is, right? Yeah, and so every time you do a trade, you really, and I think a lot of this is it might be reminders for folks, but it's very difficult
to make decisions on the fly if you don't have quite a plan. Now, I know, if you have a plan, you get punched in the face, the plan goes away, etc. But when you put positions on, having an idea as to why you did it. And another thing is basing your option trades more on the price action of the underlying than necessarily, what's going on implied volatility wise. Because when it really does come down to it, the major driver of the option price is going to be what the underlying stock does, even if that doesn't move a whole lot and crushes the volatility a bit. So, if I were to, put on a call spread, maybe an out of the money call spread, because I think NVIDIA is going to rally from here, and this is just a total hypothetical. My decision to get out of that trade when it's not working would be based on the NVIDIA price action and not the option part. And I think a lot of people spend more time just looking directly at the option and neglecting the underlying price action.
Yeah, I think that's a great call out. I mean, we talk about theta decay all the time, but like theta is not something I look at all. To your point, I mean, it's all about delta. It's all about vega. If we are in a implied volatility expansion or contraction environment, if we're trading like earnings and whatnot, so totally agree with you there. I know you're a VIX guy, VIX futures, looking at the curve. However, just to be crystal clear, is there anything else that you're looking at day to day, or a market indicator that you check every morning, maybe when you wake up, that we're not talking about too much?
I'm actually think, I mean, this is probably not an indicator a lot of people look at, but I believe that the next big crisis is going to come out of China one way or another. So I'm actually paying pretty close attention to some of the option trading that goes on the Hang Seng, seeing it, and there is a volatility index associated with the Hang Seng. I like to think maybe things will show up in the market before we do start to see some of the problems that I think are going to come out of China. Their housing crisis is so much worse than anything we experienced in 2008, and they continue to push the ball down the road on that one. And this energy price thing, I think, maybe be the thing that pushes them over the edge. So my first thing every morning is looking at what's going on in the Asian markets. Also, as far as within there are a couple of commodities that I think everybody's been paying pretty close attention to. Gold is definitely one of them. Oil is definitely one of them. I like to look at with respect to commodities, skew is not necessarily reactionary in either direction, but also you can have, unlike VIX, or S&P 500 skew, which is always, leaning toward the downside. If there are more concerns about higher gold prices, you're going to see the upside implied volatility higher than the downside volatility, et cetera. And with this big rally in gold, we saw the out of the money upside volatility higher than the downside volatility more often than not over the last 3 or 4 weeks. Over the last 3 or 4 days, it looks like the ball is skewing a bit more to the put side. And I'm not much of a technician, but I'm aware of what a flag, the little pennant looks like. And it does look like gold might be hitting an inflection point, and option traders think the move will be to the downside more than the upside.
This is exactly something I was calling out a lot on our network during early October, and then also the other time in January. You could see when it started to get flat skew, because to your point, usually it's upside skew, right? In gold, it crashes up. We talked about that. But yeah, once it gets flat, you're like, uh-oh, something's about to happen. You're totally right.
And oil, I mean, I've tested a few of these things. Oil works a lot better than gold, but oil's been a lot more volatile than gold over the last couple of decades, up until recently.
What do you think? Is it going to be another bad weekend?
Well, every weekend I buy a little UVIX Friday on the close, and I will continue to do that for sure. Sometimes I feel better about it than others. I feel pretty good about it this weekend. How's that? I do it blindly because it's a rule, but sometimes I feel better than others.
Yeah, I think that could especially be true because we tried to have a nice little relief rally this morning, and that was quickly slapped away. Now we're down 27 in the E-minis, 130 in the NASDAQ. But to your point with gold and silver, really, we kind of got a preview of what would end up happening in the oil markets when you have the crude oil markets rising higher. Implied volatility is also rising with it. Yeah. And you have massive call skew relative to put skew because of that fear for continuous upside movement. So it's been wild that we've seen that in those three markets, crude oil, gold, and silver. And now we're kind of seeing it in the minis with the VIX futures going into backwardation too.
Yeah. Yeah.
Yeah. And similar to VIX, I mean, you've seen like a higher elevated price. Oil, I feel like, has been like the VIX in a way. I mean, it gets in the 90s, the market gets spooked, it gets a little more elevated. Same deal, right? Does it not look the same?
Yeah, absolutely. And the correlation between the two right now is pretty darn interesting. And I need to say, I'm definitely looking at oil first thing. I definitely was not looking at oil first thing, a month and a half ago. So what you look at definitely changes, and it's I've been paying a lot more attention to the commodity markets than I do normally.
This has been a pleasure, my friend. I mean, we appreciate your time. You're coming back. You got to come back.
Oh, anytime. I'm more than happy to join you guys. I do want to throw one other thing out there. I do pay pretty close attention to you. Asked me first thing. I'm always looking at the Fed odds. Always looking at the Fed odds, just seeing how that changes, because it does seem to be a pretty good precursor to things that happened in the equity market, because the equity market really wants lower rates. So there, I won't interrupt you again, Jamal.
Well, I don't know if we're going to get lower rates until we have the Olympics in Los Angeles at this point. I'm really not sure.
It looks like it may be 28. I don't disagree.
It is wild. Well, Russell, we will let you go.
Gotcha.
We appreciate your time, of course, and thanks for your unique insight. It's always great to hear from the brainiacs of the world and ex-coworkers of Jamal's, of course.
Thanks a lot.
Fabulous, Dr. Rose. We appreciate you, man. Thanks for coming on.
Thank you so much. E-minis, NASDAQ, still down, trying to catch a little bid here. E-minis down 20, NASDAQ down 110. Bitcoin and ETH staying afloat, interestingly enough. But yeah, the story of the day has been crude oil futures to the upside, silver selling off 6%, along with natty gas down 2%, gold down 1.5%. What is your biggest fear for this market this weekend, Jamal? Is it the reversal today from being up 50 to down 20? Like, this is the kind of move where I'm expecting this market to just drop out by the end of the day, especially with the green to red reversal today. I mean, if we see the E-minis down 70 or 80 by the end of the day, that's kind of like what I'm feeling is going to happen here.
My biggest fear is that I was looking forward to possibly closing those iron condors. I got into March 20 expiration, and I don't think that that's going to happen. I was hoping to close those and then move it further out, and I guess I'm just going to have to wait until sometime next week, because I don't think it's going to happen today. It's totally something I expected. I was talking about it this morning on This Week in Stocks, and we were talking to Tony, and you know how Tony is. You know how he is as far as like numbers and levels, and we were like, man, it's 6,700. It's not, I don't care what the number is, but it's clear the market is fearful of that number. I mean, we saw it yesterday. We were on the floor. We hung around there most of the day. We closed below it yesterday. That's just not a good situation, because it doesn't inspire any confidence. So yeah, I'm worried about lower prices. That we, again, I have one of my iron condors with a 6,700, 6,690 strike. I'm worried about not being able to do anything about that risk, and I'm going to have to hold it through next week.
Yeah, I mean, it's really wild, because the last time we were near this level in SPX, we had that huge relief rally the same day, and that was kind of like, everyone was like, what's going on here? This feels fake. But now it feels like things are just getting started. The stagflation narrative is just getting started, and we're just at that level that was the previous bottom. So, yeah, I think volatility for sure is going to stay bid. I wouldn't be surprised if we see a little bit backwardation getting priced into this market as we end the day today. But I would personally be shocked if we rallied any more than we have so far. I mean, I think this is it feels like it has to be a risk off before the weekend type move here.
Yeah.
And we've already seen it, of course, with the intraday range here, trying to go higher above 6,700 and then getting rejected back down to 6,650. So yeah.
Oh my God.
We
10
shall
years
see.
almost 10 years almost 4.3. ZB is now 113 and change, which is, I'm glad I didn't try to get long it. Wow. And the other thing, I mean, this is where I'm hoping at some point the soybeans call spread starts to work a little bit as oil keeps going up. I'm also hoping that, the Boeing trade we put on yesterday, that's working right now. I don't know if we sell off more violently that it doesn't work, but it's true. Like I was seeing something this morning. It's true that a lot of those aerospace defense names, they haven't been like bid like you think they would be if there's, more escalation imminent, right? It really haven't seen that. This is, this one, or RTX or General Dynamics, GD. Like I don't know if they're bid today. I haven't really looked, but yeah, I mean, I would expect a little bit more out of these guys if we're going to really see some escalation, but I don't know. Where's Tony Stark when you need him? Where's Iron Man to be able to just go over there and just punch a hole in tanks? Like, dude, what?
Trust me, they're working on it. I guarantee you they're working on it in some hidden bunker somewhere. But yeah, to your point, I think you would expect to see some kind of further movement to the upside in a lot of these stocks, but Boeing catching a bit at least, that's nice for that position. We were contemplating yesterday and put on the 220, 230, 240 crab trade is what I've got to the upside. But I did actually luckily close that call butterfly to the upside in SPX that we placed yesterday. We were both filled late in the day. But that was really the only thing I've done today in terms of new trades or adjustments outside of the Adobe position, which we can talk about. But yeah, yesterday I got filled on that SPX butterfly, the 68, 6850, 6900 with 6 days to go. Lots of sixes there. But yeah, I closed it for $625, $125 profit. And I just figured, we got the 50-point bounce that I was looking for and just wanted to take a little chunk out of that position as a whole. And now the market's like 70 points lower than where it was, which is crazy.
Yeah, nice by you. Yeah, that's a good one.
What did you do in Adobe?
Adobe, I had the double calendar. I had the call calendar and the 300 strike, and then I had the 250 strike, and I just closed this one.
Nice.
I mean, things are moving around so much. I really didn't know what to think, and it doubled. So I'm like, I'm out. So it was an easy call.
Yeah. Same thing for Adobe. I had the 290 call calendar spread. So I had the 290 April and then the short the 1 day. And the 1 day, of course, is worthless on this sell-off. But I was able to, this morning, roll out to the 14-day cycle and pick up 90 cents. So just reducing basis. I mean, it's a long shot type trade now. But still, if we reverse this move that we've seen, trying to catch a bid here, only down 14 now. But if we rally up towards 260, 270, 280, this long option will gain a lot more value back. And my net cost is only $500. It's trading for 250 right now. Another way you can look at it is like, where is the option that's out of the money trading for $500, which is my current cost basis? We need about a 15-point rally. If you look at the 275, which is currently trading for $5. So we need Adobe at like 270. And this option will be trading for about $5, maybe a little bit more, maybe a little less. But that's the move I'm looking for here.
Did you see anything that they said? I mean, I typically don't look at what they say on anybody says on earnings, but sometimes I do. I meant to look at this one. It's just been crazy morning. But did you happen to see anything that they said as far as like AI or whatever? Or?
Yes. So spoiler alert, I'm doing a YouTube video on this a little bit later, but ultimately, they posted good numbers, but the CEO's dipping out, which is not good. So I think that's the bulk of the reaction here. But
that
just
should be positive, though, right? New guy coming in. Sometimes it is.
Yeah, sometimes it can be. It's ultimately setting up another binary event that you can't see. So that's the tricky part. Is eventually they'll announce a new CEO, and the market will either accept it or deny it, and they'll push the stock further down if they don't like it, or they'll rally it if they like it. So we've seen that in a couple of household name stocks in the last couple of years with CEOs being stolen from other companies and stepping down. So yeah, it's just going to create another shock reaction type movement to this market. We just can't really foresee when it's going to happen unless they plan an announcement, in which case implied volatility will be increased in that cycle. But I'm not seeing it right now.
Yeah, true.
MicroStrategy. Who?
Yeah, I had a Super Bowl in there that, Mikey, it was never going to work. It's just not going to work, especially with only a few days to go and it's March expiration. So I just closed that one out. I actually still have another in April. I just still feel like it's one of the more interesting trades on the board. As we sit here, you see Bitcoin still holding on to its gains, even though market's down. I still think it's one of those things that if we do finally turn around, I think you'll see some strength in Bitcoin. So it's one of those interesting ways, I think, to play it.
Fair enough.
But yeah, that one was not going to work. Next week is March expiration. It's not going to happen.
That's all right. I mean, take the shot and win some, you lose some.
Yeah.
But yeah, Microsoft's back down below 400. Crazy movement there. But yeah, I mean, the best position so far in this portfolio outside of this trade, the XOP trade, which I think was interesting. XOP was actually up pretty big when USO was down earlier. It's working out nicely, but this micro E-minis position, even through all this craziness, this is still a great trade here. We're sitting at the short put strike at 6,700. So we're basically tested with 48 days to go here with the short option. I think if you wanted to adjust this a little bit, you could. You could consider buying back this whole thing. If you wanted to shift it lower, moving the short calls to 7,100 and moving the short put to like 6,650 for a small credit. But it's not going to help you all too much. I mean, you still have a very tight window there. But outside of that, I think the next move would be buying this back in the 48-day and rolling out to May 15th or the end of May and just offsetting some of your intrinsic value risk. So what that would look like would be something like buying back the whole package for 215 points and then going to the end of May, for example, and seeing where can I collect 215 points and move my strikes down, at least to the put side. So it'll be pretty easy to do. If we look at 6,400, for example, move that short put 300 points out of the money, and then you can see I sell that option. I still have 55 points to make up, and it looks like I could just sell something easy like a 7,100, and this would be an adjustment that you could certainly do. Bring your short call in a little bit, but move your short put out of the money a lot and still pick up a small credit here. That's the kind of adjustment I would consider making if I was fearful of continued downside. And it might make sense to do that, especially if we keep chopping around here or sell off more.
I know, as you say that, I'm really kind of analyzing mine. It's probably about that time to sort of take a little bit of action. At this point, I mean, my thing is I'm 1,000 points in the money, which is, essentially maybe a 2-day move in NASDAQ if things go positively, but that's the problem. They haven't gone positively.
Yeah. It's been wild. It's been wild. If you want to join us on the YouTube channel, we're streaming live there. Just pop over to tastylive. You'll see this video streaming front and center. You can throw in your trade ideas, questions along the right-hand side chat, and we'll get to them right now. Some people looking at getting long oil, long OXI.
It's real, huh? Long oil.
Yeah. What am I doing? Typing in oil into the ticker symbol box.
I've done that plenty of times.
Yeah, I mean, USO continuing to rip higher here. And to the point we made earlier, because crude oil is in backwardation, when you look at these moves, like we're sitting at the highs of USO that we realized, and crude oil is off of the highs that we've realized just a little bit. So always interesting to see how the backwardation kind of plays a role into keeping USO propped up here. But yeah, I've got actually a downside position in USO playing for a big wipeout move, similar to what we saw in gold and silver. And then I've got a bullish position in XOP kind of as a hedge against that, but also for the exploration and production announcement that we heard earlier this week, actually, with the huge plan to build this ultimately a big excavation site in Texas to just get as much oil as we can from our own soil. So we'll see.
Trying to find new ways to be more oil rich.
Yeah. So I figured XOP would be one of those products that benefits from that. But if you want more information, if you just type in America First Refining on the Google machine or a AI bot, they'll tell you all about it. So check it out. All right. Let's take a look at this little YouTube chat here. Welcome. Thanks for tuning in. Can you please explain the UVIX buying trade Russell mentioned he gets into every Friday? Well, this is a $6 product, so I assume he's just buying the shares.
Yep, probably.
Yeah. And buying the shares, $8 product, just playing for a pop. So if he buys it today and the markets tank at the end of the close, or they tank over the weekend, like this could be a nice trade as we pop higher. These options markets look okay too. You could do a similar type of trade if you're trying to play for upside movement in UVIX and an increase in implied volatility. That would be just buying a call that's out of the money. That's going to be the strategy that works best in that situation, but you just got to watch your pricing here. You can see the bid-ask spreads kind of drop off as you get above 13 in May at least. And in April, they look a little bit better, but still 50 cent wide markets, not too great for the options market, but UVIX, easy to buy the shares if that's what you're trying to do. Bearish on commodities like USO. Is it impossible to be short volatility with a defined risk bearish trade? A put diagonal is behaving like a long put. The short leg has very little premium. It's tougher, that's for sure, but also,
what they say, is it possible to be bearish? What?
Is it possible to be bearish and short volatility with a defined risk trade? So when you define your risk, it's if you have like a credit spread, it's very hard to be short volatility in the sense of like playing for a vol crush because you're buying an option that's right next to your short and it kind of offsets that ability. But I have a bearish diagonal spread that I went way out in time for. So I bought the June cycle and I sold the April cycle. So that's the way to play for the near-term implied volatility crushing, the long-term implied volatility staying where it's at. And if you look at the crude oil futures market, it's kind of reflecting the same thing. So if you look at the regular expirations for crude, you can see we have big backwardation in these near-term contracts, 96, 95, 90, 87, 83, 80. And then the back months kind of flatten out at mid 70s to low 70s. So if you're buying an option in these low 80s or high 70s expirations, and then you're selling the near-term options, you are playing for a implied volatility crush in the near term, and you're taking advantage of that near-term premium. So the trade that I've got, long June, short April, the long option in June is at 90 with this big rally, placed it like, before this all happened, but 75 strike is trading for 30 cents. But if you reshifted this into the same expirations and same cycles, it would look something like, let's call it like a 115 June option. And then selling the April, you'd probably go to like the 100 or the 95. And that's how you take advantage of it. You got a 20-point wide diagonal spread for $14 where you're paying for that at the money, lower implied volatility, more long-term time value premium, and then you're selling that high implied volatility, shorter time value premium. And that's kind of the classic setup that we look at.
Yeah. I'm glad you. Oh no, I'll let you finish that. Yeah.
No, I was just going to show the basic risk graph here. If you look at Theo, and then as you get closer to the expiration of the short option, you see the profitability increase, and then if you crush implied volatility a little bit, it's probably a pretty good estimate. If you get a 10% crush in the long option, and then you get closer to the expiration of your short, you can make $500-600 on this type of trade if you get a reversal in USO.
Yeah. No, I was just going to make that point again about CL and the futures market. I feel like this is going to happen a lot over the weekend because it kind of got me a little bit early this week, even though I'm, again, very seasoned. I know about it. But they kept talking about how it touched 100 a couple of days ago. And we're already, on our platform, we're already in the K contract, which is the May contract. And but the problem is like right now, volume-wise, the J contract and the K contract are almost equal. J is trading over, if you look at volume, it's like 300,000 versus 200K. So just be aware, there's still 7 days left in J. Honestly, you really want to be trading K. I don't think you want to be trading J right now, but I feel like over this weekend, if we do get a huge move, they're going to be quoting that move of the J contract, which is April. And it's still kind of the front month, but the K is starting to shift right now. So just be aware of that, throughout the weekend.
Yeah. Love it. Question about VIX in backwardation. Portfolio has 500K value, looking to hedge 250K with 9 contracts. Where are you long the VIX?
What?
So if you're trying to hedge, if you're trying to hedge 250K of your 500K portfolio, first of all, if you're buying VIX contracts, VIX calls, the strategy that I would do in the VIX is just buying VIX calls. Because if you buy a call spread, let's say, like this looks good on paper. If you buy the 30-40 call spread, you pay 90 cents for $900. However, if the VIX pops to 40, the volatility of the VIX is going to explode, and you're not going to make anywhere near your max profit on this strategy until you hold it to expiration 66 days from now. And I'm willing to bet that 66 days from now, the VIX will not be at 40 anymore. So I don't like this. I don't like starting with the spread. You can leg into a spread to lock in profits and create a risk-free, like literal debit. You can have a debit call spread on for a credit, that kind of thing. But if you're playing for a vol pop short term, I would just be looking at some of these 30-day or 60-day or any of these weeklies if you want to go to a specific date and just playing for a pop. Like if you buy this for $1.40 and we get a pop in the VIX to 40, this $1.75 option is going to be trading for $6, $7, $8, $9, I would imagine, because the volatility is going to explode in this option, and that's going to be reflected in the increased price of VIX as well.
I'd go to April. March VIX expires this coming Tuesday. And so April's about to be the front month really quick, and you still got 30 days. I'd go to April. Hell, I should probably buy a VIX call right now just because. But yeah, I definitely would go to April. And April VIX is trading what? What is that trading right now? Probably it's trading 24. Yeah, totally. I'd buy a 30 call. If you have a $250,000 portfolio and you're worried about hedging, you can afford to buy $2 VIX calls for the 30 strike. You can easily afford to do that. You could buy a strip of them, 30, 31, 32. If you're really that worried, that's like $600 in premium. That is nothing compared to your portfolio. And honestly, even if the VIX does pop to, let's just call it 35, you're not going to be satisfied with the gain. I can tell you right now. And again, when I say pop to 35, this is where things get complicated because, the actual VIX contract, the VIX index will pop to 35, which I don't know. Let's just guess and say front month future will pop to 32. From second month would be to 29. So even though we just said, and I'm just making numbers up, but it's probably about right. And it's just because that happens. Again, the 30, 31, 32 calls I suggested buying, those are still a little bit out of the money, right? Because again, those options are based off of the April VIX contract, which I said if VIX is 35, front month March futures probably trading, 32, and that J contract's trading 29. So you'll get a little bit of money, but it's not going to do quite what you want. Now, again, if you get it just for mayhem, when you think VIX is popping to 50, well, just imagine what's going to be happening. I mean, market is probably down 3 to 5%. Oil is probably trading 120 in a heartbeat, and that's a whole nother scenario. So a lot can happen. A lot of this is speculation, but if you're really that fearful, I think you can afford to go ahead and buy some VIX calls. That's probably, oddly enough, and I say this word loosely, the cheapest thing you can do. Buying SPX downside right now is a little expensive. I mean, you really got to go a little further out of the money, and even then, like it's very low probability, and you can see it on our platform. If you were to go out and buy like the 6,400, 6,300 put spread, that's probably a little we could take a look at. I bet the probability on that's got to be less than 10%.
Yeah, I think 6,400, 6,300. Yeah. Yeah, something like this is certainly costly for sure, but you have the ability to kind of manipulate this short option, move it higher if the market does go higher. But also to Russell's point, putting on collars in a high interest rate environment, or let's just say the interest rate environment we have now, greater than zero interest rates, it puts a ton of premium on this call side. And that's what he was referencing when he was talking about selling in the money calls, where you get that extrinsic value premium associated with the call side, and you get a little intrinsic value. But what this translates to is if you were to put on a collar in SPY, for example, where you're selling an out of the money call for $2,100, if you look at the strike price, we're trading at 663 in SPY. The 670 call, 7 points above the market, is trading for $2,100. The put trading at 659 is $2,100, and 659 is significantly closer. So this option is 4 points out of the money. This option is 7 points out of the money, and that's a reflection of the interest rates being priced into the call side. So let's say you own a couple hundred shares of SPY. This is a strategy I would be looking at where you're buying a put closer to your current price in SPY, and you're able to sell a call for the same price much further away, almost twice as far away, and that just gives you all this upside room if you owned shares against this collar. So collars are going to be a really efficient way to hedge, especially like if you have a 500K portfolio and it's all in SPY, and you hedged with half of your portfolio value with a collar, you're still fine to the upside, and you're protected pretty heftily to the downside.
Mm-hmm.
And the further out in time you go with that kind of strategy, the more it's going to show you that you can do cool stuff like that. So like $2,500. So like the 650 is trading for $2,500 in July. The 680 is trading for $2,500 in July. So 10 points to the downside versus 20 points to the upside of wiggle room if you had 100 shares. This skew helps you in the sense of the collar.
Yeah, that's actually probably one of the better ways to protect yourself, honestly, in a sizable portfolio. It's probably doing that collar. It's a good call by Russell.
And on the flip side, if we ever get back to a zero interest rate environment, the exact opposite would be one of my favorite strategies to deploy, because if you take all the interest rate premium out of the call side, what do you get? You basically get a market where you always have put skew. Even if the VIX is at 13, you would have a ton of put skew here on the downside, and you'd be able to sell one put for $2,000, and you could buy 2 or 3 calls for a similar value. Like this call, if there's no interest rate, would be trading for $500, something like that. Like it's a crazy differential, and that was an interesting strategy back in the day when we were at zero interest rates. Not the case anymore.
Mm-hmm.
Gold looks like a bear flag playing out. So far, my thesis that we would get a low to buy in April is playing out. 4,700 is possible.
Wow. Serious carnage.
Yeah, I mean, it looks like it's turning over. So does the market.
Well, I think a lot of them, for the reason why they're struggling, has to do with I think dollar is making a serious move today. It's over 100, first time since November last year.
Yeah. All right, so we've got a MCL J6 contract. What happens on expiration? How do I roll it to the next contract date? So this is a cash settled product. So you will ultimately it'll just settle to cash, and then you can buy the next contract. But if you're trying to roll it, you just have to buy back the J contract and roll to the K contract. On your positions tab, you can just right click, roll positions, roll expirations, and it'll show you how you can just roll it. This is an option, so it's not going to look exactly the same. But another little hack is if you look at the options market, you can see there's still 4 days to go in the J contract, which means the options will settle to the J contract and then the J contract will expire. So the J contract expires sometime next week in terms of the actual futures, because the options will settle to the contract first and then the contract will expire. So you still have a little bit of time.
I just got long the euro here. Yeah, 114, lowest it's been since August. I do wonder if I'm going to take more pain in that. I don't know. This is where things get really interesting too with regard to commodities for sure. I don't even know what that news meant this morning when they said Italy is taking troops out of Iraq. I didn't even know they had troops in Iraq. But again, I don't pay attention to political stuff a whole lot. But big move in euro. Had to buy some 5 micro lots.
Yeah. A lot of people talking in the YouTube chat about the interest rate decision. It's going to be wild because March 18th, 99.1% chance that we do not cut rates. Trump is saying we should cut rates now. So that's going to be crazy because if you look at SPX and the Fed Watch tool is basically saying we're not cutting rates regardless of who says what. But the narrative, the Fed speak is going to really move these markets, I would imagine. And you can see here for Monday, we have a 100-point implied move, which is a pretty big number. But for Thursday and Friday, we've got almost 200 points for next week. 160 points being priced into the Fed decision day as of right now, which is wild.
Wow.
Especially if this holds.
That is massive.
Especially because it's not like the volatility isn't pricing in an indecision or like a 50-50 coin flip. It's pricing in what are they going to say during this press conference? Because it's all but guaranteed that we get a no cut. Unless they surprise and they cut, that would shock the markets because that's what happens with these Fed decisions. Like if they have a surprise cut, the markets will react violently for sure.
Yeah, and that's the one thing we're definitely not pricing in the idea of a surprise cut. And those really happen when things are really scary. So, yeah, good call out.
Couple minutes left here. What do you think happens at the end of the day or through the end of the day and into the weekend?
My gut tells me down. The market stays down. We go... we're probably, I don't know. Does it get scary enough that we get the 6,600? I'm not sure. But my gut tells me negative the rest of the day.
Yeah. I would agree. I don't think... I'd be surprised if we rally back to green today. We were already up 40, 50 points on the open and then immediately sold off. And we're about 80 points lower than where we were at 8:45 a.m. at the high. So, yeah, I think this is a risk-off day, and you're seeing the key movers move in the opposite direction in crude and a bunch of energy products, a bunch of other energy futures, I should say. Natty gas down 3% to the upside. Wheat, Bitcoin, heating oil, crude, Brent, corn, gasoline futures. So yeah, the fear is still here. Volatility futures are still in backwardation slightly. And yeah, if we continue to the downside, this J contract's going to catch a bid. We'll probably go into a steeper backwardation, of course, between the J and the K. But all these are elevated now.
I mean, I guess the only caveat to a finishing red on a Friday heading into the weekend is if some news comes out, right? Like that's about it. And again, who knows how fleeting that news is or is not. Just like early in the week, I mean, we heard news this thing is almost over, big move, and we're back down. So that's really the real caveat. Is it's a very headline-driven market. Is there some news that's going to come out to change that?
Yeah, that's it for us. Thanks for tuning in. If you've got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. And I'll be out next week, but Jamal will hold down the fort and have plenty of content for you all. So enjoy next week. I'll be watching from the sidelines, see what the craziness brings. But yeah, have a great rest of your trading day, and we'll see you next week. Peace.
Later, guys.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
It's the day that when you write dates in the American system of month, day, year, which is a little bit funny, looks like 3.14, which is one of our better approximations. And actually this year is even better because it's 3.1415. I've never before, but this year there's a couple other math people who just got a pizza oven, and so they're bringing everyone over. We're gonna make a bunch of pizzas. It's one of the few very important transcendental numbers, right? I mean, 0, 1. There's a lot of good contenders for most important number. Anytime you have anything that's circular, you're going to wind up with pies. Anytime you have a pie, you should sort of expect there to be something circular. I can do one more than the date on Saturday. I can do 3.14159. Irrational numbers are fractions, and pi just is not a fraction. 22/7 is pretty close, but that's not what it is. It's the ratio of a circle to its area, right? And so that's not an integer ratio. It just isn't. Oh. Pumpkin. Just circles are great.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
What is going on, everybody, and welcome back to Risk and Reward. Today's Friday. We got another volatile market on our hands. I see we got a lot going about pi. I guess that's a testament to us. We've been rolling the pi clips, bringing me back to high school.
Pi Day tomorrow,
right,
for all those who celebrate.
There we go.
It's not necessarily my religion anymore. I'm a former pi enthusiast.
not so much these days. Elementary school, high school, I was much more into it. But always happy to celebrate Pi Day. I don't know if I'll be getting some pie. Maybe if I could find a deal somewhere. If you're a pie shop and you're not offering deals on 314,
What are you doing?
Yeah,
I was just about to ask, do you partake? And if you do, what flavor pie? What's your go-to?
My go-to pie is coconut cream.
Okay,
is the answer.
Okay.
If we're talking fruit pies, I like cherry. But coconut cream for sure. Growing up, I actually always did a birthday pie instead of a birthday cake.
No way.
That was how my family liked to operate. My dad got me on that. And I like cake okay, but like I can put down on some coconut.
You're a pie guy for real.
Yeah.
Okay.
So shout out to House of Pies in the greater Houston area. If you're ever there, give House of Pies a visit.
Oh, shout out to H-Town.
Yeah. So always nice. But we got a interesting little market going on today.
It's been volatile.
Yeah, headed into a weekend where anything could happen, as we saw last weekend, and really shake things up. So be sure you're doing adequate risk management headed into this weekend, because we could be in a whole different place on Monday than where we're at right now.
Oh, we absolutely could be. I mean, with that being said, we can jump straight into the Taste Trade platform, do a little tour to market, see kind of what's been moving. What are you kind of looking forward to into the weekend? I mean, geopolitical headlines, we've been getting a lot of headlines moving left and right. I think this is a really interesting time, especially with AI right now. If there were to be anything that was difficult to believe that we see on the internet, I feel like with the AI slop that we kind of see going around, I just wonder how that's going to play a role into propaganda, just as a whole, in general. So I'm curious to see how that's going to translate into how people perceive things, especially like financial markets.
Yes, that's already becoming a all too common trope on the internet, as people will see a real video of something they disagree with and be like, "This is AI," and it's like it's not. You can still tell a little bit. But we are getting dangerously close to not being able to tell. I've been close to fooled a few times until there'll be like one little thing that happens, or something just seems slightly too far outside the bounds of reality. Actually, yesterday I saw somebody trying to pass off a War Thunder clip as though it were a clip from this war.
Okay.
Which was not convincing whatsoever.
Oh, it wasn't.
Yeah,
it didn't look very realistic.
It's a video game. It clearly was a video game as you watch it.
Yeah.
But they let you do like third-party camera stuff. So it was like a plane landing on a carrier, and then it like fell off the end, and they were like,
I might have seen something similar.
Yeah.
Actually.
And but it's just from a video game.
Yeah.
It was convincing for a second as the plane was coming in. But then once the plane like landed, you were like, oh, these physics don't exactly look like real life.
100%. I mean, seeing the drone hit Bahrain, I think.
I haven't seen
And there was a drone that hit the building, I believe. And it was just kind of crazy to even see that. We have videos circulating on social media, like even on TikTok. Like we get little glimpses of the inside of these conflicts, certain insights that we've never actually got to see for ourselves in our lifetime. So I don't know. It's kind of a very, very dystopia-like.
Well, yeah, and I think where it could really come into play is when we get to the point where somebody in Congress or the president is fooled by an AI video and posts it. That could actually have legitimate implications on the market. If we get a retweet on something that's AI, there could be this little 2-minute thing that happens in the market as people don't really realize it's AI.
I wonder what the pop is on that, because there's got to be a little bit of probability that could absolutely happen.
Oh,
right?
sure.
I mean, people make mistakes all the time. Yeah. So we're human.
Yeah, I mean, I get close to fooled a time. I've been close to fooled a time or two, and I've grown up in the age of technology.
Yeah.
So these boomers we got in office, I think it's only a matter of time till somebody slips up on an AI video.
100%. Lastly, like we find some of these AI videos start to mesh with reality. Like some of the AI videos are pretty good, right? And just to think about like the young minds in the generation. I know over Christmas I was visiting somebody and they had their nephews and nieces, and one of the nephews, I believe, was like, look how crazy this AI thing is. And I think I brought this up before, and he showed me, and it was like a cat, and it was like a digital. I was like, that's clear. That's the most obvious AI thing I've ever seen. So it was just like, if these young minds are so easily influenced by what AI might be, and it looks real to them, I mean, good Lord, I can't imagine even growing up in this generation with all the tech and AI going on. I'd be a little bit lost for words here.
Absolutely. But yeah, diving into this market here, we are testing some lower lows in SPX. We got, what was this, Monday? We touched 66.38, currently at 66.44. So hovering right around those levels, looking to make a new low of week. And if that should come through, it would be a new low since late November was the last time that we saw these levels. As you were just showing, VIX beginning to spike a little bit, not quite over 30 yet, but testing that 27 to 30
creeping up there.
Yeah, and the first the first VIX day we've gotten in a while where it looked like things were gonna crater, and VIX has usually been super directional. You can see that this week there's not many super wicky candles here. It's like 1 out of 5 candles is fairly wicky, and other than that, it's been super directional. But we did get a test of the lows, and now we're just slowly pushing back towards those high of days on VIX. So yeah, a little bit of volatility coming into play. Short delta panning out, but it's sort of a weird day where there are a lot of individual names that aren't hurting too bad, despite the broader market. Adobe making headlines today after just tanking on earnings yesterday. Software as a service seems to be a increasingly
it's getting
bad.
hit, right?
Yeah.
SaaS, and that was like the golden opportunity. I mean, even 5 years ago, diving into SaaS, whatever industry that you're in, and now wouldn't have expected this.
Yeah, yesterday I was taking a look at Atlassian, which is the ticker Team.
Which one is that again?
Team, T-E-A-M.
What is the company?
Atlassian.
Atlassian. Okay.
Yeah, they do Jira, they do Confluence. It's like they do workplace solutions, enterprise management, that sort of thing.
Mm-hmm.
They were getting hit super hard yesterday, and I suppose slightly recovering today, but still testing 6-year lows right now. After they announced that they were going to lay off 1,600 employees and replace them with AI, which is the same thing that Block XYZ did in late February. And when Block did it, the market loved it. It reacted awesome. And so I think Team was thinking, oh, well, this works so well for them. Our stock's really beat up. Let's start throwing stuff at the wall and see what happens. They did not have the same faith. The market did not care for that news whatsoever.
What does this generation do getting into SaaS right now? Let's say you're 22 years old, you're 23 years old. What is Gus doing if you were, building a SaaS product? How are you pivoting? I mean, how do you perceive these things if we were somebody at 22 years old? Because if I was in college, I might be a little concerned what's going on right now.
Well, yeah, I mean, I think in the broader, SaaS space, you basically have to, it's just AI or die at this point.
I like that.
Any new software that people are going to be integrating into their companies has to be AI first.
Right.
That's the only push that anybody is looking for at this point. And we've seen it. I mean, in the case of Adobe, which is what's sliding today, it's the same situation where we, they've been forced to integrate AI, and now Photoshop has AI, and After Effects has AI, and you can give instructions in plain English and have these things done.
Yeah.
But yeah, I mean, it's adapt or die at this point. And yeah, if you're building your own SaaS platform, yeah, I mean, I think you just got to be completely AI focused, and then you have to ask, how can you possibly beat the big dogs that have the millions of dollars to do their AI development when you're a startup?
Yeah.
So those questions become difficult. What's going on, everybody in chat? But I didn't mean to go this long without acknowledging everybody. JT, Gapper, Steve, Ranch, Sergio, Soul Train, Jared, Rodrigo, Grumpy Mike, good to see all of you. Happy you're here with us. Superstar, like that name. Anything happen over here? It's super windy here in Chicago. If one of you said it's super windy, I would say it's not that windy. It is quite a windy day today. I was getting blown around a little bit in my car on the way over here.
Oh, where you could feel a little bit.
Yeah, it
like
was
you're
like
passing
it
some
was shaking.
semis.
I had to stop to let a train by, and I was like, "What the hell is going on? You're getting blown like crazy." I know you were saying your apartment complex said you're not allowed to open the windows.
You want them shut.
Yes,
for the next 12 hours.
Because
yeah. Lake wind is no joke either. But as long as I don't see a tornado spurring out outside the window, I might give it a little.
Well, it's a catch-22 because the lake kind of kills the tornadoes too. So you're protected. It's just freaking windy sometimes.
Massive gust.
Not quite big enough for hurricanes to form in there. It's a good medium, except it's freezing in the winter. What are we talking about? Very, very silly movies. I just love disagreeing with people. Based.
They're like typing in based right now into the Google.
Michigan only up 4 at the half against Ohio State. Yeah, I'm sweating a George Washington plus 7.5 right now against St. Louis. That's I'm monitoring the situation on that one.
Oh, the situation is being monitored, guys. Don't worry.
It is.
Don't worry. Why is gold also dropping? Anyone knows? Shouldn't gold be a safe haven in markets like these? I mean, I would imagine as well. I was going to ask the same thing, right? The silver position is getting tested at 78 right now. We're kind of on the dance floor. So, I mean, as we get into some of these positions, silver and gold, these metals have been a little bit lackluster, and we kind of have oil rallying to the highs as the market's kind of selling off here. We've kind of seen that inverse correlation with oil in the indices, but in terms of the metals, I mean, they haven't been getting nearly as much love as they've been because oil's kind of taken the show.
Yeah, oil, liquid gold, if you will.
Liquid gold, there we go.
Has been ripping. But yeah, Bound Music, I mean, we've been asking the same question. I asked exactly that same question yesterday. It's interesting to see the metals falling off this hard in a time when you would think people would be rotating into safe haven assets. Right? I mean, that's generally the hedge where people start to go as times of uncertainty mount. But I think that it all boils down to the fact that silver ran up unsubstantiated from October all the way through, the end of January, and we touched these insane highs. It's like, what even is a fair price for silver? Had silver just chilled out at the 30, 40, 45 ballpark, I'm talking SLV prices here, which is what we're looking at on screen. If we had hung out at those reasonable levels, and then just now the conflict was starting, I think it would be this face ripper up to the levels that we're at right now, and it would be like, oh my gosh, this run out of silver is insane. The same thing that we were saying at the end of December when we were testing these levels for the first time. But I think that because it ran up so much, the market really doesn't know what to do with these things, because the safe haven element of it is sort of played out when it's inherently speculative at the levels that it's at. So that's my thesis on why we're not seeing too much additional run in the metals.
Oh yeah, a little bit surprising here. Even debating on managing this one a little bit earlier, because we've been taking this one down to the wire. 7 days left to expiration. So this is a position where we're 50%. We're down 50% of the credit that was received on here. So I'm not even opposed to even cutting this like something today, because I mean, if the metals want to continue to sell off, they have the range to do so, and they could absolutely do it if they want to. So I think a conversation I need to have with myself today in this position is, do I want to hold this through the next 7 days? And because, I mean, even if we get caught up in some consolidation around the levels that we are now, it's not going to be looking too hot for this position. So silver's been on our mind a little bit. QQQ, that one's kind of been hedging the other two positions in the portfolio right now. This is a swing to the downside. Both out of the money right now, 7 days left to expiration. I mean, do we want to hold for another 7 days when I want to squeeze out an extra couple pennies? Dr. Jim was right now, he'd be like, son, take that off right now. I mean, like, don't let me go over there and take that out of your portfolio for you. So for Dr. Jim, don't worry, you don't have to rip your hair out. We're going to go ahead and take this one out. There were some times where I had like $5 more to squeeze out and I would leave it on. I'm like, we could get that extra $5, Dr. Jim. That's a few McChickens.
Yeah. Oh yeah. I'm a big fan of squeezing the last little bits of pizza money out of a winning position. You gotta wring that thing out sometimes. But in these times of volatility and uncertainty, especially headed into the weekend where there's going to be 2 days where you're unable to act should any news break, that does seem like the wiser move to make. Circling back to the metals, I'm short silver on my side. Errol and I have something of a synthetic calendar going on here, because I am 63 DTE, short call spread. I'm long the 77, short the 75, so I need it under 75 63 days from now. There is a double doink opportunity for Errol and I if it were to go up over 78 by Errol's expiration and then slide back down to under 75 by mine. It's not even necessarily the most unreasonable outcome. But yeah, I mean, now that we're down testing your bottom strike in that position, it definitely does get a little more dire for you. I'm wishing that I was shorter dated and was just closing in on max profit right now. But instead, I am green a whopping $4, which I believe in this economy is one McChicken.
Is it one I think it is one McChicken, actually.
I think a McChicken's like 3 and some change now.
No way.
Yeah.
That's crazy. That's creeping up on us, even from when we started the show.
It is.
I think it's creeping up slowly.
They keep hiking the McChicken.
No, with that being said, I just took off that silver position, so I'm going to call it a day right there. If we could have just switched time durations and the direction, that'd be perfect.
Yeah, we'd be so set.
But with that being said, I'm going to stay out of the metals for now. We'll see what happens over the weekend. We did a little bit in the micro NASDAQ today. This morning, I hesitated on a couple positions, didn't pull the trigger, and then that led to a couple other trades. So we'll get into the weeds of that. But with that being said, anything else on the Tasty platform we can pull up before we shift gears over here, brother?
I suppose we should take a look at crypto, which has been in an interesting spot. IBIT took a gap up this morning, which my brilliant trading brain tells me means Bitcoin must have opened higher this morning or moved higher this morning. Yeah, Bitcoin actually took a nice little run this morning, up over 77 briefly before coming back down to about the 72 that we're at right now. But I'm always happy to see Bitcoin catching a bid like that. Like I said when we were on the initial run up, I'm just hoping that we will switch from resistance at 70 to support at 70. That does seem to be manifesting thus far. Being deeply long IBIT and less deeply long some ETHA leaps. I'm pleased to see a little bit of momentum coming through there. And perhaps, is that is that people wanting to rotate into crypto a little bit as a safe haven asset in lieu of gold and silver, which are already so speculative. So I'm not sure. I don't want to make those assertions just yet, but it does seem like we might be seeing a little tiny bit of that action.
I mean, somebody might have, because silver dipped on me. Gold is ripping, so somebody's diving into the real liquid gold.
Yeah. Oil. And then oil. I am short USO. That's not going great for me, as you can imagine. I knew that I was kind of stepping in front of the freight train, getting short USO when I did. And we've just obviously moved to higher highs. I'm thinking about taking an average down on these. It was sort of a heavy position as it pertains to
you have time on those though, don't you?
I'm 63 days on these. But it is a naked put. I'm long a naked put. So without the defined risk element, I'm tempted to bring my average down, especially now that we're at these levels, and especially because there really seems to be a sort of tough ceiling in on USO at around this 120 level. Even at the craziest of the crazy, we haven't managed to get over that. So I don't know. That's on my mind, but it was an expensive naked put to put on in the first place. So I don't know how deep I want to get on that. I'm already at like 2% portfolio allocation just to get involved with that to begin with. Do I want to go much deeper than that? I don't know. It would take another 1% to get another one on. But then, even then, it's only 3%. Oil's got to come down sometime,
It is like kind of the game of musical chairs. It kind of feels like we're playing with oil right now. It's like we know the music is going, but it could stop at any moment. But it's like it could keep going, but it could stop at any moment.
Yeah.
We kind of seen a little bit of a glimpse of it from last weekend. I mean, what a get out of free jail card for anybody that was holding short over the weekend, right, on oil. I mean, what a massive drop come Monday. So it does feel like the music could kind of be done here soon, or at the drop of a pen.
Yeah, I'm gonna split the difference here. I'll get another put on, but I'm gonna go a little bit further out. The existing one that I have is 63 DTE, which is the May 15th cycle. I'm gonna add something for July. I just like to go way out of the money on these puts. Again, it's not something I'm ever really realistically hoping is going to get into the money. I'm just eyeing this for a little bit of a gamma opportunity. Whenever the collapse comes through, it comes through hard on oil, as we saw with the fake out when I was able to get out of my first short oil position. So yeah, I'm going to throw on how out of the money do I want to go? There happens to be really good liquidity at the 75 strike and the July 17th expiration cycle. So I'm going to target that 250 notional to get involved. We'll fire on that. Instant fill, a little too fast maybe. But yeah, so we're involved there now as well. So in a ladder's not the right word, and a calendar's not quite the right word either. I'm just short. But I got one at 63 DTE now, then one at exactly double that, 126 DTE at $10 apart on those strikes. So whenever we catch the down move in oil, which is inevitable. I mean, this conflict will resolve sometime. I just have to hope that it's within the time horizon that I have now set.
I like it. No, oil's definitely super active. Haven't seen Katie in a little while. Yeah, no, she's still right over there in the backyard. Maybe you gotta, we'll have Mike or somebody force her to pop on and see what's up one of these days. But yeah. I had seen a comment. I have a short call spread on /CL oil and was thinking about selling the other side to neutralize some of the delta. What do you guys think? In oil, it wouldn't be my preferred move personally, just because of how volatile oil is. And I think kind of locking yourself in a defined range at the highs on oil right now can be a little bit of a tough position to manage, just because of how much volatility we're expecting here. So I don't know. We could definitely get a little bit more. We could definitely see more outlier moves directionally on oil. So I think kind of locking yourself in on both sides, I don't know. It could be a tough trade. You could always manage it, roll the untested side, but that's a tough one. I might stay a little bit more directional if that was my position, and at least have one side to run if it were to make that move.
Yeah, I think. I mean, it certainly depends how far in the red you are already on that. And whether it makes sense. If you're still fairly close to your entry, like within 20% of your entry, it might make sense to neutralize some of that delta. If you've already let it run a little too far and you're maybe 50-60% in the red, it might make more sense to just eat it and hope for the best. But I would say, yeah, I mean, while I did just get short oil again, there certainly could be plenty left in the tank here, no pun intended, on oil. I think the musical chairs analogy that Errol gave earlier is astute. We could, it's running, but the music could stop at any time. It just takes the one headline to all of a sudden send oil cratering back. So that's why I'm comfortable getting short, is because I think that whenever the music does eventually stop, it'll come back down so hard and these puts will get so juiced that I'll be able to get out for a nice little exit. But I would say that, yeah, it obviously depends how down you are, heavy you are, what percentage of your portfolio you kind of have outlaid on this one position. But my short answer would be I don't think it's a bad idea to hedge yourself out a little bit if you, as long as you can still maintain your short bias, because I do think that short bias, at least in the medium to long term, is the better place to be. I also don't know how close you are to expiration. 34 days. Luckily, still out of the money. Short call at 98.
Okay. Short call at 98. So you're sitting around. What kind of credit did you collect for that? Because you might have some decent break evens. And I mean, now that you bring it up again, and now that we're looking at oil, I mean, if you sell the other side, I guess you could, right? We don't really like technical analysis. I mean, this isn't much data we're really pulling. But I mean, maybe you could sell the other side. I don't know. But when you kind of look at it from this perspective, maybe oil starts to consolidate a little bit.
Yeah, but I don't know. I mean, 34 days is tight. I mean, that's you're asking for a little bit more. I'm more comfortable with my positions that are still north of 60 days. 34 days is a tight time horizon, but at the same time, it's like, how much higher could it really go? And at the same time, at the same time, it could rip to 150 tomorrow, and it's like I wouldn't be insanely surprised.
No,
but it does feel like we're at kind of peak uncertainty, and it feels like we might leak higher, but I would be surprised to see us just face rip higher on further news. It would take much more.
Maybe an official war.
Yeah,
official declaration of war, or something like that.
Yeah, something like that could make it rip higher. But I think at this point, it will just be it'll gradually make legs higher as the uncertainty continues, as the prices continue to creep up and up and up, as we are not able to get oil through the Strait of Hormuz. But like Errol said, I think it would take something to the end of like a declaration of war, some kind of crazy breaking news to all of a sudden send it just flying higher.
And then Trump could just tweet this weekend, "We won."
Yeah,
and oil's going to
exactly.
He does not want oil.
Yes, and especially headed into the Friday, and perhaps that's even a better reason to hedge, because just as easily as bearish news could break for oil, there could be some very bullish news that breaks as well.
Yeah.
Maybe if you wanted to hedge out, protect yourself over the weekend, and then revisit things on Monday after we're through the weekend news cycle, that could be a good way to attack it as well.
I just quickly pulled up the weekly candles on oil, and we're almost flat on oil over the last week, which is absolutely insane. These massive weeks to the upside, massive weeks to the downside. If you would have been in a coma the last 7 days and woke up, your oil position would have almost been flat. You might have been up a little bit. So insane markets. Why not pizza pie? What's a pizza pie?
It's a pizza.
Pizza pie.
Pizza is a pie.
Oh, right. Pizza is a pie. Right?
Yeah.
At first, I thought I was missing something.
The hot dog sandwich situation when it comes down to
it's a soup and cereal situation, actually.
Sure.
There we go.
I think cereal is more of a soup than a hot dog is a sandwich. But I don't know. I guess a hoagie.
I would agree.
I guess a hoagie is a sandwich.
I would agree.
Hot dog could be a sandwich.
You like hot dogs or bratwurst? What's your go-to?
Well, I mean, it's circumstantial, but I would say a brat. I mean, a little more meat, little snap on it. Hot dogs, you kind of like never know what's even in there.
Oh, I gotta have the 100% beef though, because that's so valid.
Yeah, but 100% beef, you still don't even know what parts.
That's true.
Of
it is a
we're
little bit.
talking
Of,
about.
it is a bit of mystery meat.
Yeah. But a bratwurst feels a little bit better to me.
Yeah.
That's my. But like a good Chicago dog,
like a nice ballpark hot dog, 100% beef.
Oh yeah, little 999 challenge. We could we gotta hit the Cubs stadium, give that a try. Hot dog is more of a taco. That's valid. That's good.
I never heard of that.
But it's like I always say, like, well, if a hoagie is a sandwich, then a hot dog must be a sandwich, because the only thing differentiating it is the connected piece of bread.
Right.
So there's my analysis on that.
That's a lot of carbs right now.
On hot dogs. Is Oscar Mayer publicly traded? Who owns them?
What else do we got over there? No, within the last couple of minutes, we can go ahead and jump over to the TradingView platform. We'll just quickly show a couple of the things that we did today. Hesitated on the short this morning, which made me a little bit more inclined to want to take this long. Got a little bit lost in the sauce, seeing all the volatility going on, kind of multitasking at the same time. No excuses. No excuses. I'm not going to make no excuses. But got a little bit lost in the sauce, was looking to get long here, stopped out long again, and just decided to cut the position flat. So that's what had happened, six minutes into market open. Then we came over here looking for a potential short, immediately cut that, seeing how aggressive the market was ripping to the upside, which I'm always going to advocate for stop losses, because if you give this a couple more minutes, 3-4 minutes to run, you're down $500, $600, $700, $800 in the matter of 5 minutes with the market environment where we kind of been trading in. With that being said, the market has completely sold off down here to its lows. Some insane volatility. This market definitely making you work for your trade opportunities, especially if you're trading the futures products. So now we're kind of consolidating down here at the lows. Wanted to see if we can kind of catch a little bit of a contract if we were going to start reversing. Had about a 2-point, 3-point stop on that. Not something we just wanted to do risk control, after the first couple trades over here on the day. And, Dr. Jim had even tweeted something not too long ago, but you really got to recognize when you start to get sloppy. Like, it was a really great week. And then it's like, even though risk was managed very well, I could tell mentally and like execution wise, it was a little sloppy. Like, in terms of the preparation, in terms of where I'm going to get at, like the size you're going to use, what you're going to look for next if you take this trade, like all of those kind of things. I think I got a little bit sloppy today, but we still managed the risk. And I think that's what's going to be most important. So with that being said, we'll see where the market ends up by market close. I don't know if we're going to sit down here at its lows or if we get a little bit of power hour action. I don't know, but that's what we got on the week. That's what we got on the day. A little bit more volatility in NASDAQ. But with that being said, anything else top of mind before we wrap for the day, brother?
No, I've got nothing. Just hoping. I don't know if there is a crazy weekend news cycle. I hope it is to my benefit. We will see. I would prefer.
I wonder if we'll get something.
Yeah, some war is cooling news is what would be most conducive to my success.
Yeah.
So that's yeah.
Well, I'm hoping for that. I don't have too many positions on over the weekend, so whatever happens, I'm rooting for you and that side of the things. I mean, we got QQQ, silver. Yeah, I guess we're kind of flat. So I guess I have no bias going into the weekend. We'll see.
Yeah, I certainly have long bias on just about everything except oil.
You got a lot of time on those contracts. So sometimes when I put them on, they expire in like 5 or 6, 7 days. So whatever headline comes out, I'm pretty much glued to it, unfortunately.
Yeah, I've got short VIX and short oil actually. So yeah, if we could just get some cooling, some little maybe, just a little 100-point face ripper to the upside on SPX.
100 points, nothing in this market environment.
Nothing.
Don't be stingy, NASDAQ. Don't be stingy. Now, with that being said, JT, Grumpy Mike, Darker, Brandon, Neo, everybody else, eMedia, thanks for taking the time, of course, to hang out with us. Be sure to stay tuned for more segments coming on next. Manage that headline risk over the weekend. You never know. But that's going to do it for today's segment. Be sure to stay tuned, and we'll catch you guys next time. Peace.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. This was not a paid, you're not getting paid for this advertisement.
If your trade's not going how you expected, it's not necessarily that your assumption is wrong. Maybe it's just not right. Yet. Rolling is managing a trade by closing your position and opening another one like it for a credit all in one order. The cool part is that you can change the expiration to get more time, or you can tweak the strike for a higher probability. Usually we want to roll the expiration instead of the strike. Remember, duration over direction. Exactly when and how to roll trades is a learned art, and it can be a little bit subjective. Usually we only roll if we haven't changed our assumption, and we almost never roll winning trades. If you have changed your mind, don't roll. Instead, you probably want to close it if it has undefined risk, or just let the probabilities play out if it has defined risk. So before you cut your losses, consider rolling the expiration, or maybe even the strike. Pretty simple.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Baby, your love is too good.
We are back. It's still Friday, March 13th. Oh gosh, it's a Friday the 13th here, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, it's a Friday before the markets are closed for a healthy little bit. What do you see out there?
It's not looking great. It's not looking great. There was every reason to think that maybe a little bit of soft U.S. economic data would brighten traders' spirits, if only because it might unlock the Fed a little bit. Yeah, not so much. It's apparently all still about crude oil, not surprising, of course, but there we are. Looking at what's going on here, we're up about 0.5% on crude oil, but I think the bottom line is earlier we had seen a bit of a drift lower and a bit of an attempt to correct, which has since been erased. So we're looking here midday at oil prices that couldn't even stick a little bit of a pullback. And of course, that's echoing across the board. The dollar is higher, yields are higher, stocks don't like it. Everything is kind of hinging on this stagflation risk now, it seems, because we have the dual sides of bad economic data and inflation happening simultaneously.
Cash is king this Friday. Dollar is up.
Not mad at it.
Down, oil up, stocks down, bonds down. People are trying to raise some capital. It's not a flight from U.S. assets. It's not a sell America trade. It's we need liquidity right now in this market, and for good reason. Oil prices are up and staying up. There were reports earlier that France and Italy are trying to negotiate an agreement with Iran to unlock the Strait of Hormuz shipping lanes. The Italian foreign minister denied such a conversation happening. Oil prices back up. What's interesting today, though, is that oil volatility is coming in, which is fascinating because you're also seeing prices get bid higher across the curve. It's almost as if the market's saying we're no longer uncertain about where oil's going. It's staying high.
We're certain. It's just not good.
It's just we're less uncertain and for the wrong reason.
Yeah.
So, Ilya, Fridays we typically start the show with taking a look at the macro calendar next week. Of course, there's a Fed meeting, so we should just get right into it. Okay. Is there a macro calendar next week? Isn't it just oil? Is that all that matters right now for this market?
Pretty much. Pretty much. I think that's about the summary of events for next week right there. I might have made the font a little bigger.
But if there was a calendar, like what would be the things that we'd be paying attention to?
I think if there was a calendar, then obviously the FOMC meeting is the thing to pay attention to. And it's not even what they're going to do because they're not going to do anything. It's what they're going to say. How Powell is going to talk about it. And probably most importantly, what's going to show up in the summary of economic projections, because this might be for the first time since maybe June last year. We're going to get a real assessment from some of these people that have been either working for the White House when they moonlight or trying to get a job that requires them to be nominated by the president. Stephen Mirren, Chris Waller, I'm looking at you. But we're going to get the real deal this time because nobody got the nod and everybody had to be honest. I mean, to Stephen Mirren's credit, he said that that if he was still at the Fed at the turn of the calendar year, he would quit his White House job that was sitting there technically on hold. Man of his word, he quit it. And so now he's shockingly, suddenly less dovish. So we always knew Stephen Mirren knew the variables. And so when you get this summary of economic projections, it's ostensibly going to be a more real assessment of the economy because you're not going to have a weird Stephen Mirren dot on the dot plot, or at least it's not going to be nearly as weird as it's been before, one would think. You're not going to get Chris Waller calling for things that maybe he doesn't necessarily think are the right course. So that's interesting. And obviously the Fed's going to have to comment on what's going on here with oil and the degree to which they think this inflation is going to be a transitory thing. I love how we've reclaimed that word from being a dirty word. That's great. But almost.
Just got to hear President Trump say it. He's going to say it.
We're this close.
Poly market on whether or not he's going to say it. I will take that.
We're this close. Yeah. So I think we're going to be very interested, most importantly, about what's going to come out from that summary of economic projections now that the fog is off from the politics, but on from the geopolitical environment. It'll be really interesting to see how policymakers parse this. We're at this point, just to sort of contextualize, we've got a 60-40 chance of a rate cut by December of this year. And that's it. That's all that's on the menu now. One cut in December.
If we get it.
And even there, it's about a 60-40 shot.
If we get it.
If we get it.
Next week, Ilya, the FOMC projections to me are the most important thing out all week long because this was a meeting that was overlooked. Perhaps no rate cuts expected. We're waiting to see what happens. If Powell gets replaced, who's going to be the next Fed chair? Will Warsh actually make it through the confirmations? Yada, yada, yada. So March was never really on the table. It was about June once Powell's term expires. now all of a sudden it's about how the Fed sees inflation and growth shaping up moving forward.
Yeah.
Stagflation, still it's not. And I know people are saying directionally we could be heading there. It feels a little stagflationary. In terms of the growth coming in, fourth quarter was 0.7%. In terms of the inflation going back up, Cleveland inflation tracker is now sitting at 2.9 for March, up from 2.4, given the moves that we've seen here in oil in recent days.
PCE or CPI?
CPI.
Yeah.
So we're starting to see the trickle effect through where it could lead the Fed to say, you know what, we're going to have to keep rates higher for longer again as we deal with this transitory inflation shock. Over the course of the day, we're heading into a weekend where oil prices are sitting near session highs as stocks themselves have been struggling near session lows. This is an hourly time frame, Ilya. We try to make a little bit of a bounce here over the course of the session, and we're not getting much out of it. So today, on this Friday the 13th, we find ourselves with the session low of 66.40. Downside momentum here seems like it's still very much intact. We traded up into the 1 week moving average today and faded from there. MACD
NASDAQ is maybe the one that's holding up the best. Everything else is leaking.
Yeah, NASDAQ now is actually the worst performer. It was holding up a little bit better, but now you have it here again.
At least it's got a range bottom that it's still holding.
Yeah, but the past 2 weeks, we've had this momentum profile where the 21 has been below the 50. We get that crossover as we make our way into the second week of February. And ever since that second week of February, that space between the yellow and the blue line here on the chart, it's kept the market capped. So this looks like a flag of sorts that's about to break lower.
It does.
You don't see anything in the indicators here that suggests the market's done anything except digest, right? We talk about a market that's moved sideways and the indicators have normalized a bit, and yet there's no recovery in price. We're digesting the oversold condition without it's a correction in time, not in price. That's just occurred, but in maybe the worst way possible if you're an equity market bull. So
zoom back a little bit because there's an interesting reference point there for NASDAQ. It's the low from November last year, the November 21st low. As far as I'm concerned, that's basically your bogey. And where you've broken that level now, if you look at the S&P, sort of the comparable levels, you've broken the comparable levels in Russell. NASDAQ is still above that reference point, but it's not looking good.
No, the Russell broke below its 2026 year-to-date open yesterday, and today it's finding follow through the lows that we had in January, which not great. I saw a study yesterday, Ilya, that when the S&P 500 sets a new high by the end of January, only to send March below the January low, the rest of the year, the S&P 500 has returned minus 1.6% on average.
Not great.
Year two of a president's term, if it's a midterm, and we've gone back and forth, is it year 2 or is it year 6? Year 6 is usually continuous, but if it's year 6 because it's Trump's second term, but is it year 2 in midterms? It's looking more like a classic year 2 midterms where you get a lot of chop, decline through the summer months, bottom out in October, November, if we're so lucky, and then you get your rally into year end before things continue along a steady path in the third year of a president's term. But right now, Ilya, the table, despite having a seasonal tailwind where in the past few days, that's when vol has tended to peak over the past 20 years, where equity markets have tended to bottom in March over the past 20 years. That's not enticing anyone to try to get long right now. Instead, it's this bigger macro issue.
Yeah, that's right.
Short stocks, short bonds, short gold, long dollar, because oil continues to push up. And it looks like it's staying up here.
I mean, there's no off
part of this wall coming in.
That's obvious. And
there's no off ramp right now. And it's getting
there's no off ramp that's obvious.
Narrower every single day with each passing minute.
Right. And we've talked about this before, but it's worth mentioning here again. Number one, if the war stops today, the Persian Gulf has been disrupted in a way that you can't undisrupt. Because now Iran is firing off projectiles every which way. It's hitting Saudi. It's hitting Qatar. It's hitting Oman. it's hitting UAE. This is not, you can't put this back in the box. It's understandable why they're doing that from an analytical sort of geopolitics theory of war perspective. They're desperate. They're fighting for the regime's survival. Their prior leader was killed. They're teetering. The stops are getting pulled out. That's it. They're going to do whatever it takes here because they're hanging on by a thread. They know this. And so their actions have become increasingly dramatic. Notably, during the Iran-Iraq war in the 80s, we were escorting tankers through the strait because Iran didn't want to pick a fight with the United States. It didn't want to shoot at Saudi. It didn't want to shoot at obvious U.S. allies. Now, the shooting has started. It's time.
Well, you heard me when this came out, when Trump initially announced that the U.S. would be supporting ships making its way through the Gulf. I was out here quoting Jimmy Carter in his 1980 speech when he announced that the U.S. would provide naval escorts for ships through the Strait of Hormuz and through the Gulf region. So it wasn't exactly like this is new policy. We've actually done this before.
But Iran has to play ball.
Iran has to play ball, and they weren't minding the Strait of Hormuz back then, which everyone. I find it so interesting when people who are macro adjacent come into the space like, isn't the Strait of Hormuz 20 miles wide? How difficult could it be to traverse it? The shipping lanes are 2 miles wide. So there's only so many places where these ships can actually go.
And it's shallow.
Well, that's
real shallow.
That's why there's only a 2 mile stretch.
And foggy and hazy
much of an area.
And busy with traffic. For a VLCC, which, by the way, has got to be one of the great acronyms of all time. VLCC, very large crude carrier. Fantastic. I love it. It's so on the nose. It's
At
incredible.
least it has better naming convention than copper. People go like, why is copper HG? Because it's high grade copper. Serious.
Yeah.
Who came up
at
with
least
that?
At least with gold, it's the periodic table symbol. So you go, okay, fine, that makes sense. Cool.
Yeah, XAU, XAG.
Yeah, AU,
AG, gold,
AG.
silver.
At least those are the periodic table symbols. I digress. VLCC just always is always a fun thing because how on the nose can you get? It's a really big boat, is what we're trying to say. So the really big boat has to traverse this very narrow area when 40, 50 other ones are doing it. The normal day at Hormuz is about 50 tankers back and forth. And
more than that, actually.
Yeah.
I pulled this chart. I got this chart from Michael McDonough over at Bloomberg. We have had one tanker go through.
Yeah, see, like 40 is the top here. So yeah, about 50 is kind of like a bad, busy day.
100% drop in tanker, commercial, chemical products. By straight direction, 0% flow relative to where we were.
Yeah. And so
99 ships commercial, now down to 1.
There you go.
57 tankers down to 0. Chemicals 19 down to 0.
Yeah. So you look at this and you go, okay, it's a busy shipping lane that's difficult to traverse without knocking into anything. Steep cliffs on the side, always a kind of fogginess that hangs over the water. It's a difficult waterway on a good day. And it's shallow. So this is not an easy spot. And you can't do anything there unless you really want to go not around this problem, but through it. And it seems like that's what is left, because people were talking about, oh, well, he'll just taco again. It's easy to taco on a piece of paper. You write down a tariff rate, you go, this is the tariff rate. And they go, no, it's not. And you go, okay, it's not. That's easy. You can't taco a war.
The incentive structure for Iran is
this
very
thing is
simple.
out of the box already. That's
the U.S. And Israel attacked Iran last year. They've attacked now again this year after refreshing the stockpiles. If you're Iran, just taking yourself or trying to do some critical thinking here, counterfactuals. If you're Iran, how do you handle the situation? Pretend you're not Iran. Someone has come to your house and broken into your house a year ago. And now they've come back and they've tried to break into your house again. Are you going to do something different?
And they killed your dog.
Oh, yeah. And they killed your dog. He's like, are you going to do something different? Like, yeah, you're going to do something to incentivize them, to disincentivize them from coming back again, to ensure an economic cost high enough, which is why yesterday when Scott Bessent was asked, is there a number that would make you go to President Trump? Mr. President, the war is too costly. Oil is too high. It must end. And he said no.
Well,
which I know
that
a
was
lot
the
of
right
people are
answer.
chatting him because that's the only answer you can give. You can't say, yeah, Iran, if you get to $123.48 in the CLK6 contract, that's it. We're calling the boys and girls back home. No, because then you're giving them a reason to turn the screws. Like you need to, in this kind of scenario, the U.S. needs to have a posture of inflict the pain. We can take it. We're willing to spend the blood and treasure in order to get what we want here. And so Iran has some very difficult decisions to make, which is effectively now on, you're not telling us what to do. We will incur the costs. We will inflict the cost. So stocks here are near session lows, 66.38 in the S&P. NASDAQ down another 0.25% from when we started the show, 24,370. We have a Russell off 0.75% here too, 24.72. Ilya, in terms of position management here, there's a few things that I've got going on right now. That long put spread that we put on yesterday seems to be doing a little bit better. We're looking for 66.25 to be reached. That would be angling for a retest of the lows that we had back in November and again here in March. So that seems like it's prudent. It's fine. It's doing what it should be doing given the technical momentum that we've seen to the downside. It can't be realized for that much of a profit right now. So I'm going to let it work a little bit more. In terms of some of the longer dated things, though, I go out to 48 days here, and I had been peppering in some short put spreads, some short iron condors, thinking that the market has been, sideways, maybe to lower. I have an MES position that's long, that's getting slaughtered. So net, just lots of churning here, trying to keep my head above water in terms of capital protection. But we start to see a move down to 66. This thing starts to lose much near-term support that becomes compelling to dip your toes in the water.
Yeah.
Even on the long side, it looks like it's a falling knife right now. We've done the inverse Russell exercise. What kind of goofball would I be if I saw that chart pattern coming out of a bottom? I'd be frothing at the mouth, chiding you and
rightly so.
Texting you stupid GIFs late at night, waking up at first thing in the morning.
Yes, I'm buying everything under the sun. You kidding me? Here we go, baby. Back up the truck.
That's not where I am. And just as like a sentiment checkpoint, I want to do this. And someone tweeted at me this morning, oh, no wonder effectively no wonder the market's going up. It's because I turned bearish today. That was at 9:47 a.m. That was here on the chart, 9:47 a.m. And that was effectively top ticking the market. So we've gone down since then. The point is, no one knows what's going to happen. I have no idea what's going to happen. Neither do you. If we did, we would be making a lot more money and I wouldn't be here pulling out my hair or going gray in more places than I realized. I shouldn't have got my hair cut this short, Ilya. It exposed a lot of gray underneath that I was not prepared for. But to that point, if you're a technical person, if you're a momentum guy like I am, as a core approach to how you view charts, there is not any semblance of bullish momentum on any time frame right now that would make this applicable or appealing to start dipping a toe in the water on the long delta side. So as far as I'm concerned, the shots I'm taking, I'm using the vol, I'm using the ranges that's being afforded, looking to go wide still. If I take on any new position, it's going to have to be more of that same. It's going to have to be at 48 days. You want to give me 6,150, 6,000 on a downside and 7,150, 7,300 on the upside. I mean, we can go pretty wide here. This might be too big of a trade for someone else or even for the book, depending upon what's on the book at the time. But there are things to do around the one standard deviation move where you can get a 4-to-1, a 3-to-1, perhaps, and take advantage of the fact that you can sell calls up near 7,200 in around a typical Tasty cycle. I'm hard pressed to think that we're going to cover 500 S&P 500 points without a major turning point in the war. That would lead us to believe that we have enough time to take any short call spread side of any, short iron condor trade off the table.
Yeah. I mean, you got to be real careful here. Real careful. Because this is one of those things where I'm almost happy to be looking at this through the lens of positions that I've had for a while, because my risk reward is based on markets that haven't had all of this consternation yet. And I'm able to look at the situation from a different vantage point and say, well, I can stomach a bit of near-term back and forth. But to put on something fresh is just psychologically very difficult, because you might get one of these insano gap fill, wait, are we really bottoming kind of exercises. Who knows for how many weeks now? We just had it this week. I thought it was a really great case in point. It was apoplectic panic at the open of this week. Then intraday, fully erased the panic, saw a rally. All the buy the dip enthusiasts out there immediately got giddy. Oh, this is the bottom. It's all over. Here we go again. It's an emotional roller coaster, which if you're not approaching from a very mechanical risk reward kind of perspective, you're going to get punished for chasing with the utmost vigor. This is the market environment where when people go chasing, they get their year ruined because they start to accumulate losses.
This isn't panic in the market yet. It's still very orderly, right? Where did we begin this month? 68.50 or so. We closed at 68.75 in February, and we're down to 66.40. So 210 odd points, 3.5, getting close to 4% on the way down. I think many people would have anticipated, we go to war with Iran, 5% shock right off the bat. And it hasn't been right off the bat. It's been 2 weeks now. Interestingly enough, keeping an open mind to things.
Yes.
2003, it takes 16 days for the S&P 500 to bottom after we attack Iraq. And the market declines.
And boy, does it bottom, by the way.
And it then bounces 26%.
It then rallies the entire year.
And it finishes the year up over 26%. Now, I'm not saying that's going to happen, but in terms of the time, is this an Iraq reaction? It could be still. The supply chain issues look a lot different when you look at
There is a very big difference, and people aren't going to like this. The president isn't going to like it. Difference in Iraq, boots on the ground.
I was going to say, we don't have Dick Cheney.
Well, there is that. But the reason we had boots on the ground was because we had Dick Cheney. So I suppose that's connected. But yes, Darth Vader is unavailable to lead the troops this time. But we had boots on the ground in the Gulf. That's a very different set of circumstances.
Never say never. A Marine Expeditionary Force was deployed to the Gulf. 500 soldiers, Marines, me, not soldiers, making their way into the Gulf.
Oh, great.
Yeah. Good, great.
And by the way,
so
don't get it confused, everybody. I certainly am not advocating for this military strategy or that. I am no military strategy expert. I'm looking at this as a tourist and saying, well, if the problem is that people keep shooting stuff at you when you're in the Gulf and you need to be where the shooting is coming from, it would be helpful to get there if that's what you wanted to do. And then you could stop the shooting. But of course, that would carry with it all manner of other issues and open a can of worms that, at least from the president's perspective, it looks like he's not trying to open. at least at the onset, the tactics here open sort of dialogue from the president, from the Secretary of Defense, war, whatever, has been, we don't want Iraq. We're not here for regime change or occupying the country or promoting democracy. That's not what we're doing. This is an aerial war.
Yes, famously, Vietnam was an aerial war. We dropped more munitions on Vietnam than we did in the entire World War II theater in Europe.
Once we realized that the ground war was failing. Yeah.
And I don't know if that turned out the way that we would hope it would have turned out. Ilya, doing some position management here into the weekend. Earlier this week, we were looking at the Russell being effectively at the halfway mark between recent lows in November and the highs that we had in January. And with the ADRs where they were, short iron condor seemed like an appealing thing to do. It's not a trade that's not working. I could sell out of it right now for a cool $10. And you know what? That's exactly what I'm going to do. I am really not liking the price action here. This is very deliberate downside momentum, failing against the 1 month moving average. And the oil volatility evolution today without prices coming in, to me, makes my stomach absolutely churn. We've all come to the conclusion that, nope, this is going to be sticking around for the while. There's no reason to think about, is oil going to go to 140 or back down to 60? No. We can start to cut some of the risk off on one of those ends, because this is not over for a bit. Ilya, all of that is to say that bonds are breaking bad here today. The inflation concerns of the market are still subsuming any growth concerns. Fourth quarter GDP was revised lower from 1.4 down to 0.7%. You see that we have some labor market indicators that are continuing to struggle in the wake of the non-farm payrolls report that showed a loss of 92,000 jobs. And yet, we have our notes and our bonds continuing to track towards session lows. You can't blame the bond auctions this week, Ilya. Those are good particularly when you look at the foreign demand there. In the tens, that was the best foreign demand that we've seen for one of our auctions in over 6 months. So much for foreign buyers, particularly Middle Eastern counterparts, not necessarily having the appetite to fund the U.S. empire's war machine. And yet we're still at the lows. So Ilya, 0.7% on growth. Okay. The 92K on non-farm payrolls, oil up at 96. There is a very clear catalyst that's moving this market right now. One factor is consuming everything else. When bonds start rallying, when oil is going up, that's when the panic starts to set in. That's when this is a supply chain crisis that's going to lead to global recession. Right now, that's not where we are. So the bonds are just taking it. But when bonds are down and stocks are down and gold is down and the dollar's up, people are looking to have liquidity and cash on hand right now. And that may be an environment that bonds do well in the future, but still not in the short term.
Yeah. I mean, in order for the bonds to bottom, you would need one of two things. And an unclenching of the inflation scare seems like the distant one. So then the other one would be the same thing that would activate the Fed into action, and that is some sort of an economic decline that is bad enough that the Fed can look through immediate inflation and go, yeah, but look, this is going to be a growth disaster. So we're going to go ahead and start cutting. And bonds would, of course, anticipate that. They would move ahead of where the Fed would actually come out and say things, because markets are as ever forward-looking. So you would start to see it in Fed funds futures. You would start to see it in the bonds, but you're pointedly not seeing that here. Now, I guess, if there were some sort of real calamity kind of a credit situation where some combination of this situation in private credit, coupled with the inflation scare, with the squeeze on rates from oil, if that gave you some kind of a credit market outturn that started to feel credit crunchy, then maybe the bonds start to respond, because that gets spooky enough that people go, you know what? I don't care about returns. All I care about is safety. I just got to stick my cash somewhere where it can sit quietly, and I can come back to it in like 6 months, maybe longer. Obviously, the dollar is is a venue, and we're seeing that already. But so are the bonds when things get panicky enough, because they're safe, relatively speaking. You're lending money.
Are they?
Well, you're lending money to the most eligible borrower in the known universe. So in relative terms, yes. There is no more eligible borrower than the U.S. government. Full stop. That doesn't mean it's the perfect borrower. It's just the most eligible. Right? That's not to say that the billionaire walking into the Ferrari dealership wanting to walk out with a car with no money down has no blemishes on the credit, has no debt out there. It's just they're a billionaire. And they're walking out with the car. They're walking out with the car. So
we make a choice to have deficits and debts this high. We could raise taxes, cut spending.
Right. So we are easily the most eligible borrower, full stop. And when people say, oh, well, all that the money's backed with is the faith and credit of the U.S. government. Yeah, that's a really firm backing.
Well, we're not worried about
faith and credit of the
Fed
U.S.
not paying its bills right now. We're worried about the market having to price in substantially higher inflation for longer.
Yeah.
I mean, look what happened in 2022. I put the box here on the screen. This is when Russia invaded Ukraine. ZN, continuous contract, weekly chart. You basically had downside in treasuries from the invasion, the week after the invasion, all the way through June. And then you got a little bit of a break for a few weeks. And then August 1st through, we'll call it October, even more selling. And then sure, you got a little break for a few months, maybe even 6 months. And then you took another leg lower down until October 2023. So I'm looking. Oh, thank you, Russell, for getting me out. I don't want to be in there. We have ZN. Was this a triangle? Was it bottoming? It looked like it. Couldn't get through the prior swing highs that we had around the tariffs last year. False breakout back into the triangle. Typically that yields a return to the other side. So Ilya, it is a 60 IVR, 61 IVR, and I don't want to dismiss that. So let's do some trimming here. Yesterday, we could have taken this position off for a loss of about $62. Today, it's a loss of about $62. I don't want to be in a short iron condor. I want to recenter the strikes given the market volatility. So I'm going to take a small loss here, try to get this off, and then go out back to that continuous contract and think about the trading range that we've been in right now. If we were to break through the pivot low, that's 111.5. We go up to 114.5. So 3 points. 3 points on either side means I should start thinking about a move down to 108. All of a sudden, though, Ilya, looking at like a 108, 109, and then maybe we'll call it a 114, 115. Not quite there. It's a little worse than a 4-1, but the range expands. And if we want to sell this volatility, we can recenter our strikes as opposed to having a short iron condor position on where the downside put spread side is being tested right now. That is what the market volatility is yielding, and I don't think we should outright dismiss it, considering everything that's going on here. But if I'm going to be short put spreads here in notes, this demands breathing room right now if we're looking at a supply chain crisis that pushes inflation higher akin to what occurred in 2022. And the treasuries are certainly behaving like they did back then. There's no way to spin a narrative right now, so it's not even worth it. The momentum sucks and the story sucks.
Yeah. And frankly, if you're going to put anything on, right? If you're going to come out here and you're going to put any trades on the board, if you're not looking at just shorts, so looking at Russell, for example, and saying, you know what, I can get myself to understand how this is a breakdown. And so a put vertical that's eyeing 2,400, 2,300, depending on sort of where you want to look, the further low or the sooner low. Obviously, there's a question of cost there. But somewhere around 2,400 is an inflection point. Somewhere around 2,320 is an inflection point. If you want to look at S&P and say, you know what, I'm going to try to play for a squeeze down under 6,600, maybe 65.40 is the low from mid-October, or 65.25 is the low from November. You could size up some put verticals with a good amount of duration in them and look at that. If you're not going to do that, really the thing that presents itself is the dollar, because the bonds are in a tough spot here. Almost anywhere you look, you're at support, but you haven't broken it. And so the risk reward is essentially shot. If you're not already in, there's good argument to say, wait this. Either we're going to get a bounce, and that's an opportunity to sell, or we get a break, and that's an opportunity to sell. But ZN, ZB, they don't really look very good right here from a risk reward perspective.
Hard to ignore the vol, though.
It is.
Let's just, putting some, not just having a directionally neutral trade here, Ilya, but looking at the lows that we had around the pandemic, or excuse me, the tariff episode. So many different once in a generation events happening. It's hard to keep track. 109 is right on the other side of this one standard deviation expected move over the next 42 days. 2 points in 42 days. Could we do that? Yeah, we could do that. What if we just went a little bit longer, though? What about 70 days? It's still in the ZN M6 cycle. So same contract. It's a little bit of a different risk to reward, but it's risking 1 to make 5. It's a 15% probability, 14% probability of profit. I think we need to be creative here. Having something that's a little bit out of the money where vol could continue to expand. Treasury vol has been incredibly low when you look at the raw IVs. I know it's a 60-something IVR now, but it's after a period where volatility has been really, really depressed. So even today with oil vol sitting like at an 88 or 85, it's not really a huge vol crush. It's still substantially higher than where we were at the start of the week. I mean, the 5-day IV change here on the platform says enough. Even though it's an 88 IVR, raw volatility is still up 26% over the past 5 days. So this is, you got to have a little bit more context here. Directionally neutral to me is still the way to go, capture the vol. But given what has happened in the past, when we've had episodes like this, you have to play, if you're playing directionally neutral, I think that you got to have some downside kicker in there, just in case this is a repeat of history, a repeat of what we saw in 2022, which, gold is different this time. The metals really have been dented for this liquidity demand here, Ilya. It is the grossest price action that I think that we've seen on a daily basis for gold or for silver since the war started. I know you could argue that what happened on March 3rd was bad, but this is a little different because I've been watching this trend line here, and you can't tell me that diagonals don't matter, that when we break down and retest it several times and fail to punch through the exact trend line and flip from there, the market's not feeling a little indigested at those levels. So I don't know. Again, gold, silver, copper, down. Bonds, notes, and bonds, down. ES and Q, RTY, IM, down. All the dollar things up. It is cash is king.
Yeah.
Cash is king.
By the way, in case there's any de-dollarization enthusiasts out there, let's just point out that when cash is king, there is one form of cash that shines. It isn't the euro. It isn't Bitcoin, if you want to call that cash. It isn't all those things that everybody kept saying, oh, the dollar is forever damaged and that's it. Everybody's moving away from the dollar and this is going to be the new thing. Insert your nonsensical dollar alternative here. Clearly, liquidity is king. And we see here that when push comes to shove, it's dollars that people buy.
Well, you're not walking around with gold bars shaving them off to pay for things right now. Not in this world.
You are decidedly not. No.
And if you're, if you're a Middle Eastern buyer, if you're a buyer in that part of the world, you're not necessarily able to get the goods transported. So you're probably not looking to buy gold at this present moment. You want something that is a little bit more within your reach. And that's where the sanctity of the US dollar comes in. So Ilya, I think about how the markets behave at the start of financial crises, COVID, for example. gold and silver got hit hard before they ultimately recovered. Once the liquidity stress phase and concerns of the market filtered through, gold and silver, their wings spread. I think what we've seen in the past 2 sessions, gold coming in, I'm going to be a broken record here. Gold coming in, stocks coming in, bonds going down, dollar going up, and then sprinkle in some other facts. The crude futures curve has started to become less backwardated. And I know earlier this week and last week, folks were saying, well, oil's got to get out of backwardation for the market to calm down. The monkey paw curls anew. It's getting less backwardated because people aren't selling the front month or the next month. It's because they're bidding up the rest of the curve, projecting a prolonged slowdown, a prolonged cash crunch and supply chain problem, which is now filtering through into other products, which I know fertilizer has been the beat here for me as a talking point recently. And I know it's off a little bit today, but over the past several sessions, Ilya, the fertilizer names in the space have likewise gone ballistic. Helium all of a sudden is becoming the talking point in vogue. I've seen it now in a bunch of different spaces as it pertains to the semiconductors. Just this morning, they were talking about it on CNBC for the first time, at least that I've heard this week. Maybe they've mentioned it before. But the market is now acting as if, the dominoes have started to be knocked down and the chain reaction is unfolding. It's not just oil and gas. This is a molecule event. If it's on the periodic table and it's an input into your business, chances are you're about to have a real problem here. And so you know what, Ilya? Gold and silver, people say they're inflation hedges. They're safe havens. They're store of values. But why do you have them in your portfolio? It's not so you can walk around and shave pieces of gold off or transfer people ownership of your GLD. It's so that when times like these happen, you can sell down the safe havens to have the cash on hand to cover losses elsewhere. So in a very specific way, gold is fulfilling its purported role as a safe haven. It's given people the buffer over the past several months as a store of value. And now that there are legitimate cash needs, people can get rid of it temporarily, in my view, in order to cover those losses. If you think oil is going to be staying up at 95 or 100 for the foreseeable future, you need more cash than you previously assumed for a longer period of time. So I am not loving any of my gold silver exposure today. Been watching some Game of Thrones recently here too, so I'm going to take a page. Bless the gods that I didn't get filled in my new silver call spread. The best trade that I didn't take this week would have been out on my my butt already for probably around another grand. Just don't need to do that. We're in capital preservation mode. So Ilya, I'm thinking whatever we've got here, gold, silver, if it's in the money, it's been working. Today is the day. Right now is the time to take a pretty long, hard look. Do you have enough duration there to survive a potential liquidity crunch cycle? And I just don't know if I have the structure and the duration that I need to want to be long gold and silver anymore.
It's kind of why I'm straddling both sides. It's why I'm short the futures as an immediate tactical idea, which took some beatings there, but I stuck with it and now it's working a little bit. But at the same time, I was shorting puts 70 days out. And the losses now being taken by those puts because they're pretty far removed from Delta. There's a lot of time on them. They're very small, whereas the gains on the outright futures are much larger. And that was the idea, to essentially be there for the long-term deglobalization gold narrative, but also to capture something tactically around a cash crunch type of situation and to have duration work its magic, where if you're thinking gold is going to go down near term, but ultimately go higher, you want the bearish side of this to be jumpier sooner and the bullish side of it to be relatively constrained until the time comes. So far, so good. We'll see if I'm being too cute by half here, but so far, so good.
Silver had that nice little head and shoulders-ish bottoming pattern where it ran out, had a little uptrend here, and then it started to crack. And so then you start doing things like making excuses and drawing trend lines and redrawing trend lines. And then you keep redrawing them, and all of a sudden, all of the support that you were looking at has been chipped away, no matter how many times that you've tried to redraw it. We got out of the feeling better zone. we're gearing towards being in the feeling worse zone about silver. We bounced off of that 79.5 level. It's been on the chart for the past 2 weeks. So it feels like it's a place horizontally where the market would want to try to pick itself up and recover. But down below 79.5, 80, Ilya, there's not much by way of support here. This is a cluster zone. We've seen there was no volume or supply here. We bounce back into it, and this is exactly where the market starts to even out. So 79, 80, it matters, psychological, price action wise. I don't care how we want to ascribe it. You get below 80, there's no reason to be long any gold or silver here. I'm a momentum guy. People say, Chris, if you liked it at 87.5, how come you're not buying it at 81 right now? It's a gift. You can get in cheaper. You can express your view cheaper. Perhaps, but I'm trying to find something to justify doing that. I'm going down to like a 5-minute chart here, Ilya. Even on the 5-minute chart.
Don't chase now.
The
Don't
very
chase
silly
now.
5, 21, 50-day moving average envelope. It's not even in bullish sequential order on a lower.
I mean, frankly, it's testing the underside of former support turn resistance, even on this chart.
Yeah, when you go down to a micro level, there you go.
Yeah, I mean, even here. I mean, if anything, that looks like a short.
So it's just the structure doesn't look great. I'm never going to catch the bottom. Could we do a short put spread down here and take advantage of this? Sure. But, Ilya, when we do start to get back in long, I think it's worth making the point right now. Let's say someone says, Chris, I don't care. Ilya, I don't care what you guys think. Gold and silver, they usually do well on the other side of words. I'm going to go out a little bit further. I'm going to go to 74 days. I'm going to go to 104 days right now to start building to a long position. I feel like this is a better environment, and haven't acted on this myself, and I've been poking around with it, trying to learn lessons from last summer when you, Jamal, and others were being bullish long delta by being short puts. Yeah. Where I was still doing my, let's take the coins and put them into the slot machine again. We just made a 4-on-1. Let's take one of those 4 out and put it back in for another high convexity upside call spread. And it never worked out.
Which, by the way, worked wonders until it didn't.
It worked wonders the first half of the year. It worked wonders in the last third of the year. But June, July, August, that thing was terrible.
Yeah.
So maybe we're back into that type of view where the prudent thing to do is if you want long gold exposure, long deltas in gold in your book, it's to start thinking about the short put spread side. And to further add rationale there, if gold is falling, given how gold has enjoyed higher vol on the way up, and since the peak, gold vol has been slowly coming in. Since the war started, believe it or not, gold vol has been coming in.
Yeah.
Short put spread, prices come in. Chances are, if it's still orderly, it's going to be with an erosion of vol. Now, that's
why my long side, my long duration long side is expressed not through buying calls, but through selling puts.
I feel like I'm more on your side of the table for that now. I still have my 5,000, 5,100 call spread that was put out in December. Time is starting to run out now where it's no longer appropriate to say, I'm just going to ride this out. It's still working. We could sell it today and flip it for a profit. And this week, not taking it off has cost me about $1,000 in the position itself, but it's still profitable. So Ilya, just a little bit more here in gold and silver. And I've seen enough.
Yeah.
It's time to go home for a bit. Gold and silver will have their time in the sun once the liquidity crunch washes through the market. So we need to move on to oil. And this is the most important. We have 5 minutes here, Ilya, so we're going to have to really compress this so we don't run into Dr. Jim. Oil now up 3.65%. You see stocks sitting near session lows, oil up near session highs. We're going to go down to an hourly chart, I suppose, where nearly 48 hours ago, you and I were espousing the benefits of a inverse head and shoulders pattern here in the chart at 88. Since then, it's rallied up $11.
Yeah,
I'm still sitting long. I think that you're still sitting long. I think that our rationale has been sound, that if you look at the physics and the reality of the ground about how much oil is actually flowing through the region, the amount of flow that we have based on tanker rates. Here's another one. How many tankers are going through the straits? Zero. There are certain realities that are hitting right now. And the market giving you lower IVR today is twisted. It's like we are collectively saying, you know what, we don't need to be confused about what the future holds. The future holds more certainty that oil prices will be higher.
The future holds pain, and we know that.
$99.23. If we think oil's painful here right now, if you wanted to go back and take a look at what $100 oil means today, different than when it was in 2006, for example, when we had the last big oil spike, going into the global financial crisis outside of 2022. $100 oil today, I think, is equivalent to $62 worth of oil back then. So $100 of oil back then is worth we're talking about pressing 140, 150 equivalent today. So the economy now, us being net exporters as opposed to net importers, it changes our tolerance threshold a little bit more. Greg Gipp over at the Wall Street Journal pointed out this week, President Trump has latched onto that point of view. Doesn't mean it's not going to hurt consumers at the gas pump, which RB futures continue to run higher. There is no reason, in my view, not to look for opportunities to buy the dip in oil right now. There's no sense that this war is coming to an end. The market pricing is still fairly rich. So should have got even further out of the money the other day on that dip, Ilya.
Yeah.
But selling put spreads right now on dips in oil, are we really getting below 72, 75 based on what we know right now? And the answer is probably not. So let's ride this. Let's treat it like a momentum trade. You want to give us pullbacks? We hop back on. And perhaps cheekily, before I hand it off to you for the final word, if the rumor is true that the U.S. Treasury is shorting oil, that means we're short oil as taxpayers. I don't want to be double short oil right now.
Yeah.
So I'll be long CL. It's fine. It's fine.
Yeah.
We'll be fine, right? Fine.
I mean, so there's a wonderful Russian, and I guess more like Soviet saying that the government always has one round in the chamber extra. And that is an admonition to not underestimate just how much the government can do when it really puts its mind to it. And not to assume that just because it seems like the government isn't going to cross certain red lines or isn't capable of doing certain things, that under the right circumstances, it won't find a way. And so I suppose if the government is shorting oil, which I think is probably not happening, but if that was the case, then we're just setting money on fire. And I think that somebody like a Scott Bessent would know that better than anyone. But is it possible? Sure. If that's going on, and again, I don't think it is, but if that's going on, it's going on because people know something that isn't out there for us to see. But if that's what's going on, then it's not out there for the whole of the market to see. And that seems incredibly improbable. Because the idea that this administration, or frankly any administration, but especially this one, filled with markets people as it is, wouldn't have any kind of a communication line where the markets would sniff out that they've prepared something? No. This ship is leakier than that.
One last chart before we close the session. The US dollar index DXY back to par, $100 right now. It's potentially.
God, I love my dollar longs today.
Well, Eurodollar here breaking below 115. There again, cash is king.
Go.
That is why the episode is called Cash is King. Everything is down except for the dollar. It's not a Sell America day. It's a find cash and stuff it under your mattress kind of day. We kick off the week with a lot of Chinese data. Retail sales Monday morning out of the U.S., perhaps the most important thing to watch, though. And then again, does any U.S. economic data matter? Refer to the first slide for the macro calendar next week. Oil. It's the only thing we'll be watching. You and I will be watching it in about an hour and a half because we'll be back for a last call today to wind down the trading day and the trading week. And if you miss us there, be sure to catch us on first call as we panic and see where oil is on Sunday night. No, we're keeping cool heads here. You know who keeps a cool head, Ilya? Dr. Jim from Theory to Practice coming up next here on Tasty Live. Stay tuned, folks.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Growing up in Brooklyn, New York, in Bensonhurst, Brooklyn, where I was born, there's no social climbing of the ladder. So if your father's a bricklayer, you become a bricklayer. If your father's a doctor, you become a doctor. If your father's a hoodlum, you become a hoodlum. My dad was, he was an original market maker, let's put it that way. Only not an exchange-regulated entity. My mom was a waitress, just trying to make ends meet. My parents were divorced when I was 11. And my mom did everything, legit did everything for me. But I idolized my dad. I was a good student. I didn't want to disappoint my mom. I was boy leader of Arista and Archon, which is the honor society in junior high school. I wanted to be a police officer or an attorney. And then I realized we were on the opposite side of the street to become a police officer, but that my dad was going to need the attorney, so I wanted to be an attorney. I did go to college for 3 months. I became the best air hockey player that John Jay College of Criminal Justice had ever seen, but I wasn't learning anything, and I just didn't think I was going to go anywhere. So I had a cousin who was working on the New York Stock Exchange, and they transferred him to Chicago for a new exchange.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Friday edition of what it is that we are trying to do. Welcome to the afterlife edition of what it is that we are trying to do, man. Jolts, PCE, some consumer sentiments. It does not appear that we made it through, but we're here together. This is very Lost Season 6-esque, where it's like, all right, like, it's over. Like, we're in the afterlife, but at least we are together. So thank you guys so much for being here and being a part of the show. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube because you can join the conversation and join the discussion, and you can celebrate with your fellow Bears? Yes, that's correct. You can commiserate with your fellow Bulls. You can communicate with your brethren who are also watching the program, and I can assure you it will be a good time had by most. And of course, if you have any questions for me, I will drop them in the chat box. I typically get to somewhere between 0.2 and 0.6 questions per show, so the earlier that you get it in, the higher the delta that I will get to that question. So Josh, I don't even want to ask, man, but bring us into the show. Do we still have a market? Look at this. Look at this. We got a little bit of something happening to the upside. The S&P is only down 26 now. That basically feels like an up day. Risk-free instrument, also known as the NASDAQ futures. Extremely high-risk product, only down 130 on the day. That's basically like up 130. You got the Russell down 26, and then you got the Boomers down 26. You got the Russell down 12. And yeah, wow, they must have just kind of got a little bit of a bid in them there the last couple of seconds. Bonds down a couple of ticks. Got notes about unchanged. You got oil up another couple bucks on the day. You've got UB40s down, man. The shifties getting smacked around. You got silver getting beaten up. You got volatility. Obviously, on a day like today, volatility is probably going to be finding a little bit of a bid, but it's already so high. As we've talked about this, I've already waxed poetic multiple times across multiple days on volatility and volatility decay and extrinsic values and VIX pricing and what have you. So I'm not going to spend any more than 13 minutes on it again here today. But volatility futures only up 18 cents because you're working at a 24.55 base. That kind of makes a little bit of sense. And volatility on the spot with VIX is actually down on the day. Because again, it's collapsing under its own weight. It's like you can only have so many cheat days in a row, and then eventually, like, it's over. Like, eventually, you can't fit anymore, Krispy Kreme, man. Like, you want to, like, the mind is there, the willpower is strong, but physically, man, you just can't get it done. And so that's exactly what the VIX is experiencing here today. But yeah, we got a little bit of something happening in the next couple of seconds. I've got some tweets to delete later because I called for a 1% up day. And so I don't know that that's going to happen, but a quick little delete, and it's like it never happened. So let's go into, no, I never delete any tweets. I'll probably retweet it just to kind of put that guy out there. But all right, let's go through a couple positions that we have on. Of course, we are hemorrhaging cash. I mean, we are absolutely bleeding red, like all over the place. But that's what you guys have come to know me for. What you guys have come to expect from the program. I don't want to let you down, and so the hemorrhage continues. And then, of course, I'm going to see you guys. I'm going to see where you guys are at. Man, I see you guys in the chat doing work on the algo. Man, you guys are already in there. Look at you guys, man. Sergio's in the house. Man, Bogus Family is in the house. Too Late Jake showed up. Sam L, Margin Walker, Gapper X, Cameron Vincent, the Preston is here. Jared Kramer is here doing some work on that algo. I appreciate you. Look at Catch That Voltage in the house, man. Look at this. Even the S&P is only down 22. Man, did King Trump decree something? Like, did King Trump say, let it be so, and it is indeed being so? Like, somebody let me know what's going on, because I don't know, maybe we are going to finish up 1% today. That would really be something. But all right, let's go into a couple of things that have kind of caught my eye that I think would be a very, very good use of our time here. So number one, this USO strangle. So this USO strangle that we just put on yesterday, I mean, we just put this guy on yesterday. The ink is barely even dry on the confirmation slip that was this short strangle. We're already up. We were actually up more before the show, so it was a more compelling case to take it off early, but we're already up $1.20 on the trade. So we've already pulled about 20% of maximum profit on the position in one day. It's only been one day. And I've already, we've talked about this before. I'm warming up to the idea of maybe taking trades off early. Like I'm warming up, I'm open-minded to the prospect of, hey, I'm up 20, 25, 30% in a day or 2 days. Maybe I'd take that guy off. I still generally like to stick with my profit targets. I still generally like to say, all right, 50% of max profit. This is what I'm gunning for. And we'll just kind of stay the course and use any, kind of early movements in our favor as a little bit of a catalyst in that direction. That still is my default setting, but I'm open-minded. I'm not so pig-headed and just so thick-skulled that I won't change my mind when I think new information has arrived and better information has arrived. And so I think, kind of mixing it in a little bit might make some sense, especially when, and this is kind of the tipping point, Malcolm Gladwell style for you guys, when it comes to this position specifically. So I have on a strangle in USO. If you've been following the show for any time, we already have a strangle on an MCL. So we already have a strangle on an MCL. So now, we're layering in some risk, right? We're layering in some concentrated risk in oil, and we're already bearish oil with MCL. And so with USO, fresh strikes, we don't really have any risk in the position just yet, but that could obviously change in a hurry, especially with weekend risk and all the things that could potentially change or happen over the weekend. I think it makes a little bit of sense to go ahead. Let's cash our profits in for USO. Not to mention, guys, I've got a date with my lovely wife tonight. So Autumn and I with 3 small kids, we rarely get dates. Once a month is like a surprise and delight on our end. Like if we could get once every 6 to 8 weeks, like that's pretty much kind of the norm. So we have a date tonight, and where do you guys think we're going? Actually, let me rephrase. Where do you guys think I want to take us? Now, that doesn't mean we're going there. In fact, that likely means we're not going there. But should we find ourselves in a situation where I have won the argument, not even the argument, but the debate, where I've actually been given the choice to lead my family into the future, you can bet your bottom biscuit that I'm going to be the only place in town where you can get some bang bang shrimp. So how am I going to pay for that bang bang shrimp? I'm going to do it here with this USO short strangle. So let's go ahead and close out of this USO position. And I think we're just going on a walk or something. I actually don't think it's that exciting, but still, we may need to be nourished after said walk. Let's close this guy down and let's move on. So USO, let's see if we can get it closed for about $4 or so. And that would be a good start to the show and a good start to the weekend. 420. Let's see here. Boom, got filled at 420. So we picked up about $1 on USO. If I go to the activity page, you can see, we sold it for 520. We bought it back for 420. And again, this was only a one-day trade. This was like an overnight deal, which I didn't intend for it to be an overnight deal. That wasn't necessarily what I was thinking it was going to be going into the trade, but the wind blew us in a certain direction that it just made it made a little bit of sense. And so that is USO. Let's talk about Adobe really quick. It's going to be really quick because there's not much to say. You can see that we played Adobe to the upside. We were banking on Adobe saving us. Like we were banking on Adobe being the thing that would bring this market back, and it was not. Right? No Adobe. Like no EME S&Ps, no NASDAQ, no metals, no nothing could bring us back. And so Adobe, unfortunately, was down just like everything else. And so our expected move butterfly, sadly, is not going to make it. And so we paid $257 for it. It's marking for a penny. It's essentially going to go out to pasture here today. And that's why we have to size correctly. Like that's why position sizing on entry is just so critical, right? Because again, sometimes it doesn't work out. And if you happen to follow my trade still to this point, it doesn't work out for you on a very regular basis. And so you need to be sizing your positions correctly. Make sure that you are in a position where if a defined risk strategy doesn't work, you're okay. If a string of defined risk strategies don't work, 2, 3, 4, 5, 6, what have you, you're okay. And this is why somewhere between 1 to 3%. The lower, the better, of course. But if you have less capital, some concessions need to be made. And so 1 to 3% is typically a good range to live in when it comes to position sizing for defined risk. So for us here, at $2.57, that was less than 1% of the account. So it stings a little bit, but it could be worse. And so Adobe, pour one out for a little bit of Adobe. Save the banana natty because it is Friday, so maybe pour something else out like a neutral, or maybe like what's that other one called? Oh, White Claw. Maybe pour a little White Claw. We don't need that garbage. We need some banana natties for the weekend. So ADBE is over and done with. I also want to talk about. Let's talk about Tesla for a second, because our calendar is looking really nice now. So now all of a sudden you've got Tesla down right at 393 and our strike is 390. And man, we are close. Like we are so close to greatness on this calendar spread. We're up about 16 to 17% on the trade. I typically like to get closer to 20. Minimum is typically 10%. But I actually think going into the weekend, and I have a feeling a lot of things might happen this weekend with tacos and no tacos and this, that, and the other thing. I'm thinking, I don't know, man, maybe we go ahead and take this guy off. Let's take this guy off. Let's take the $1.70 because now we've got potentially not only bonefish tonight, but bonefish tomorrow night. And then possibly even door dashing some bonefish breakfast on Sunday morning before church. And so you've just got to think strategically and holistically about all the things that you're trying to accomplish. And so for Tesla here, I'm kind of thinking, let's do it, man. Let's take it off. We got about 16, 17%. And we'll let that be that. So there you go. A little calendar spread action for you guys. We actually got a winning calendar spread. The fact that we even had any calendar spread is a little bit of a surprise and delight on our own end here. But let's go ahead and go. Yeah, we'll do like 1165. That's fine. There you go. Get a little. Yeah, there you go. So now we got a little DoorDash of some trout on Sunday morning. That'll be some good stuff. All right. So that is. Some trout for breakfast? Is that a thing? It's about to be here in a couple of days. But anyway, all right. So we did Tesla, we did USO. I also want to talk about SoFi for just a brief second because this is a trade that we put on just a few days ago. I think maybe a week ago. Okay, so 227, so 2 weeks ago actually, we put this trade on. And what's interesting about this trade is if you look at the stock is at 1760. It's a pretty good price for a 17 straddle. But it's not the perfect price, but it's not too far away from the perfect price either. And you can see we're only up, 35, 37 cents on the trade. And this actually kind of supports the point that I made on a very recent calculated risk, talking about sticky extrinsic value. And extrinsic value has so many different characteristics and so many different features to it. And being premium sellers and specifically out of the money premium sellers, this is our widget. These are the wares that we bring to the marketplace to sell. Extrinsic value, right? So we want to understand all the facets of extrinsic value to the best of our ability. Well, one of them that I think is a little further down the pathway forward through the forest than like the basic things associated with extrinsic value is it can be kind of sticky. And by that, I mean, the options can really cling on to the extrinsic value in certain circumstances to where it's like, man, no matter what happens, like the extrinsic value just will not dissipate from these options. This generally happens with at the money strikes. This generally happens when you've got the stock kind of hovering around the strike. And especially when you have a strategy like a straddle, where that's kind of the spirit of the strategy. Like that's literally the way it is by design, right? I sell a straddle, the at the money strike, the extrinsic value is likely going to stay around for a very long time. So how do we typically combat that? We combat that by managing more aggressively. We combat that by now, instead of taking it off at like 50% of max profit or whatever, I'm closing this guy at 25% or 20% of max profit. And so with SoFi, we're not even there yet. We're not even we're only at about 10% of max profit, and it's already been 2 weeks, and the stock is basically in a good spot. And this just really kind of goes to show you that extrinsic value can stick around longer than you would like it to, even though we have politely asked it to go away. And so for extrinsic value with SoFi, we sit tight and we do nothing. So that is SoFi. Oh, and then one more thing, Starbucks. So take a look at this, man. This is exciting. Like, you want to talk about drama? Look at this. You want to talk about covered call drama? It gets no more dramatic than this. Look at this. Our 100 call is going to expire in 7 days, and look at the price of Starbucks, $99.93. Like, we are right there, guys. We are on the razor's edge. Like, it's right there. Now, I'm not going to close it today because the content next week's not going to write itself. Like, you think Monday's show is just going to happen? Nah, man. We need things to talk about. We need things to do. Here you go. Starbucks covered call. So with this 100 strike on Starbucks, with the stock right there, man, it's crazy. It's very, very, very exciting. And so we are in a situation where it could expire completely worthless. It could be fully in the money. You've just got to tune in to find out. That's all I can tell you. You got to tune in. And if you watch it in the archives, you got to tune in on you guys had me laughing yesterday, man. When I was talking about watching the show and I was talking about helping me out because your boy needs that watch time. And your boy still does need that watch time. So I appreciate all the help and all the efforts. But I was reading through the comments after the show. And you guys I think Griffin Jones was talking about having bot farms. Like, he's got his AI agents watching my show. Now, that's a good use of AI. Like, I understand it's coming for everybody, white collar, blue collar. Like, it's over. Like, I got it. But in the interim, what is that good use of AI? Here's a great use. Hop into Claude, hop into OpenClaw, like open up your co-workstation, whatever, and get your AI agents watching my content, right? And because they can act autonomously, get them like pausing the video and like rewinding in certain spots, doing certain things that might not be clear. And so that would give your boy all kinds of engagement on those videos, and that would be a fantastic use of AI. And so anyway, you guys had me laughing when I was reading through that yesterday. But that's pretty much it. That's all I really wanted to talk about today. I think one more thing. Market's really, it's catching a little bit of a bid here. It's really interesting. IWM, one more thing I guess we could talk about since we have a little bit of extra time, I think. So IWM is at 246, 247. You can see our strikes are 235 and 289 on this strangle. And you can see that we are down money on the trade. Like, we're down about $1.50 on this trade. Like, we sold it for $3.83, and we would buy it back today for about $5.30. So we're down about $1.50 on the trade, exactly $1.50 actually. And so when you look at a situation like this is something I've said on the show a million times, but if you're brand new to the show, hey, welcome aboard. I really hope that you stick around, whether it's my show or the other shows on the network. Like, if you are an active trader, or if you are like an aspiring active trader where you want to take a more active role in your portfolio, man, you're in the right spot. Like derivatives and just active management and just kind of trying to find ways to strategically adjust and maneuver around in our portfolios. Like, man, there's just a lot of great content here for you. And so welcome aboard. One of the things that I think can be confusing when you sell out of the money options specifically is, the IWM strategy is actually a perfect example of this. I sell a strangle, which is what I have on an IWM. The stock moves around, some time goes by, what have you, and I'm looking at my P&L and I'm losing. I'm looking at my P&L and it's not cooperating. It's going in the wrong direction. So that would naturally lead me to conclude the strategy is not working. And by just a purely definitional way, I suppose that is correct. But I don't really look at it that way. I actually look at it in a very different way. In fact, the complete opposite way. If the strategy is situated such that the strikes are still out of the money, and we're not even really close to either side. I still have 11 points of downside before I get down to my put strike. Like, there's still a ton of room, essentially on both sides of the market with this strangle. So even though I'm losing money now because the down move has been so quick, and obviously volatility has picked up in IWM and the overall market kind of writ large, that is going to lead to temporary losses with your P&L. But just understand that as long as the options are still out of the money as a premium seller, the stock still has to beat you. It hasn't beaten you yet. The stock still has to beat you, and it hasn't done it yet. And so, in my opinion, you're still in a good spot. Like, in my opinion, I'm looking at this IWM strategy and I'm like, this guy is still working. Yeah, of course, it's not working as well as I would have liked, and it hasn't been as easy as I would have hoped for from the beginning, but I'm not chalking this guy up in the loss column. I'm not chalking this guy up in even kind of, the problem children column. This guy's working out just fine, and it's very much a do-nothing situation, in my opinion. And so there's a few comments around IWM, but I think that's pretty much it. I mean, Dell obviously is hurting us because that's what Dell does, and then AMD is hurting us because that's what AMD does, and yeah, that's pretty much it. I'm surprised we're actually up money on MCL today because it is also up, and it's moving outside of our put strike, but that could be some volatility compression maybe, because I think the IV rank in MCL yesterday was over 100, or was that USO? I know it was USO. Maybe it was MCL as well. So I don't know. I'm not going to look a gift horse in the mouth. We'll just go ahead and we'll take it. So that is, that is MCL, and that is essentially everything else. I'm not going to Snapchat down 12 cents, which, I mean, that's how you know things are bad. When Snapchat's going down, when the prototypical flight to quality, not bond, forget about bonds, gold, King Dollar, forget about King Dollar. Queen Snapchat is where it's at. When Queen Snapchat is down, man, things are just not good. But anyway, I digress. So let's go to you guys. Man, where are you guys at? Josh brought me a surprise and delight. Once again, man, these Amazon Primed, delivered to my doorstep, surprises and delights. I appreciate you, Josh. This is some really, really good stuff. So Josh says, Joe YQ, can you compare the pros and cons of a debit bear put spread and a bearish calendar? Yeah, sure. We can take a look at that. And so, let's set up a couple. So, I mean, let's say, I'll just pick, because everything's kind of got high volatility right now. And so, I could do Tesla, but we already have a position on Tesla. Let's do Google. Let's just do Google just to kind of set something up then in something that we don't have on right now. So let's say I wanted to do a long put spread, which is a bear put spread. Let's say I wanted to do a long put spread in Google. Generally speaking, this is going to be an at the money play. So generally speaking, you've got Google at 301. I'm looking to buy, maybe buy a 305 and sell at 295. Right? I'm basically risking one to make one. I'm actually risking a little bit less than one to make a little bit more than one. And it's essentially going to be a 50-50 proposition. And so this is a purely directional play. You're not really playing volatility. You're playing a little bit of volatility, but you don't have that much Vega exposure here because it's going to essentially be canceled out by the long option and the short option. You don't even have that much theta. You got a little bit of positive theta right here, but I don't really classify that the same way that I might classify, a short strangle or even a short vertical spread. That's usually going to be even more positive theta. But it's, mostly a directional play. He was just playing this guy to the downside. And so this is, a very standard way to take a bearish shot on a given stock or a given index. And so, max profit, 50% of profit target, 50% of max profit. And that's typically what we would look for. If I was going to do a calendar spread, then let's see here. Like if I wanted to do a bearish calendar spread, maybe I would, I'm in April. Let me see here. Would I do March, April? I don't know. The March weeklies, yeah, they're okay. We'll do the March weeklies just for illustrative purposes. So if I buy the April 17th 295 put for 880, and then I minimize that, and maybe I sell like a 14-day 295 put. I think maybe I said 285 put. I'm long the 295 put in the April monthly, and then I sell the 295 put in the March 27th weekly. And so this is a similar trade from a maximum, from a maximum loss standpoint, the way that it's set up. So that's actually pretty good. So in terms of like risk parameters, with a calendar spread, the most you can lose is usually what you pay for it. It's not exactly what you pay for it. So when you buy a vertical spread, the most you can lose. As long as you don't jank around with the strikes and change the risk parameters of the strategy and turn it into something that it wasn't, the most you can lose is what you pay for on entry. With a debit vertical spread, that's always the case. With a vertical spread, the most you can pay is usually the debit. There's no guarantee because you have multiple expiration cycles now. And if some weird and funky things happen between the volatility in the front month and the volatility in the back month, you could end up losing a little bit more than what you pay for it. Now, it's not going to be a situation where, I'm paying $4 and I lose $8, or I'm paying $4 and I lose $6.25. Like, no, it's going to be, you're paying $4, you might lose $4.20, you might lose $4.15 or $4.35 in kind of a drastic scenario. It's not going to be a scenario where there's going to be a massive discrepancy between the two, but that is one difference. So understand that it's not locked and loaded like it is with a vertical spread. And then in terms of like profit potential, again, remember, typically 20% on a calendar spread is pretty good, right? So, I mean, I'm buying this calendar spread for $4. I'm probably only looking to take this off at about 80 cents. So the profit dynamics are going to be, very, very different simply because, calendar spreads are really slow moving. And so you don't typically want to stay in them for a really long time. You typically want to execute more of a smash and grab strategy. Kind of like, okay, I got in, I got my 10, 15, 20%, and I get out. And then I guess the other element of it that is definitely different between the two, if I buy a vertical spread to the downside, then I'm pretty much open season anywhere to the downside. Like any number down is good for me. Any number lower is going to be beneficial for the strategy. With a calendar spread, that's not the case because you have to pin the short strike. Right? You don't have to pin the short strike to make money, but that's where you're going to make the most money. If you miss it too badly on either side, then that becomes a losing trade. And so, Google, if it goes down to 295, that's great. If it goes down to 290, that may still work, but 285, 280, 275, those are almost definitely going to be non-desirable outcomes for you. And so this is a great question, Joe. Hopefully that helped a little bit. Gave you a few things to think about between, long vertical spreads and then calendar spreads that could also be kind of situated to be directional in nature. And so thank you there, Joe. And thank you, Josh. That's a very good question. And so let's see. Can we surprise and delight somebody else? I mean, I think we can. I mean, it's our show, right? We can do what we want. And so I see Brian Dowdy's in the house. What's going on there, Brian Dowdy? Let's surprise Brian Dowdy near the end. Hey, Dr. J, as I keep rolling my UNH in the money short put, I'm still collecting theta, right? That's correct. I was not able to roll down and out, so I'm just rolling out, and I think that's the best I can do. Well, you didn't tell me what strike it was. I'm assuming it's pretty deep in the money. And so let me just go ahead and set up. So let me go ahead and set up like just a really deep in the money UNH. I'll go to April. I'm assuming you're probably already in April. And then I'm just going to say, just for example, I'm going to say you're short like if you're short like a 330, let's say you're short the 330 put, right? So first of all, you can see that the extrinsic value, let me change my implied volatility to extrinsic value. The extrinsic value in the strategy is only 91 cents. So right here, you can see that you've got a little bit of extrinsic value working for you, but not a ton. Right? 90 cents worth. And so time is still working for you. Like time is still on your side. I mean, it's a positive theta position. And so little by little, as time goes by, that extrinsic value is going to dissipate and that is helping you. But remember, at the end of the day, a deep in the money short put, it's basically long stock. You got a little bit of an extrinsic value kicker, but man, once you get really deep in the money, like 85, 90, 95 delta, that's long stock at this point. And so that's a good thing because it's not going to be too different if you do get assigned. The risk parameters on the position are essentially unched. It's like you were already kind of long stock to begin with. Now you're actually long stock. You lose the extrinsic value kicker, but now you don't have to roll, every expiration. And if UNH pays a dividend, which I think they do, then you're going to collect that dividend. And so that is, there are some gimmies that come alongside the gotcha of potentially being assigned there. But if I were to roll this guy out, like let's say I had this position on. Right. So let's just pretend that I have the short 330 put on right now. So if I wanted to roll this guy out from, April to May, then I would buy 330 and I would go to May and I would sell 330. And you can see that I'm going to get another $2.50. Right. And so I'm always going to be picking up additional extrinsic value, even for pretty deep in the money options. And so you can obviously, look at the strike that you actually have and kind of utilize the same principles that we're outlining here to better understand what are the extrinsic value differences. How does my theta change? You're always going to be positive theta. Even if it's super, super, super deep in the money, you may get to a situation where the extrinsic values get to like essentially just pennies now because it's so deep in the money. That can and will happen if you're in the position and it's really, really deep in the money. But you're still going to be positive theta, even if just a tiny, tiny little bit. So time is indeed always working in your favor. And so that, of course, is a beneficial thing. And so hopefully that helps you there, Brian. But I appreciate you, my friend. So thank you so much. Man, let me go ahead. Let's go to I'm going to surprise and delight somebody else at the very end. Man, look at Archer Fire near the very end. Archer Fire says, hey, Dr. Jim, thoughts on selling a hood put? It's looking cheap. Yeah, along with everything else in the market right now. Hood. Didn't we make a little money in Hood recently? Hold on. We made a little money in Hood, right? Like if I go back, it was kind of recent. Yeah, look at that. We made a couple bucks in Hood. And it was only a couple of weeks. And so, yeah, I don't know. Maybe we'll do a little something. Does Hood have earnings coming up, though? Hang on. They probably do. Ah, okay. So April 29th. Okay. Let's do an April cycle. Let's go into the April cycle. 35 days to go. I still think we're good to go from a decay curve standpoint. You're getting a little bit shorter than, might be comfortable, but I think anywhere between 35 and 45 is fine. From trying to, put yourself in a favorable position on the decay curve as a premium seller. So I don't know their Archer Fire. I mean, we could go in here. I could sell a 65 put for 280. The buying power is only $650. I mean, man, look at that. They were just giving these things away. And so, yeah, your pop is 73, your P50 is 82, so we can round that up to about 95 to 97 for my mental records. You got a positive theta. We've got positive delta, of course. Our maximum profit is going to be the credit collected, but it's going to be for the whole contract. So it's the credit collected, which is on a per share basis. And then we multiply that by 100. And then my maximum loss of $6,200 would only happen if Hood goes to zero, which, probably not super likely. Since it is a direct competitor of Tasty Trade, wouldn't be the worst thing in the world, I suppose. But it's not likely to happen, at least not in the next 35 days or so. And so, I don't know. Let's go. Yeah, let's do it. I mean, the volatility's there. You got an IV rank of 34. That's pretty solid. Let's do it. So, good trade there, Archer Fire. I appreciate that. We'll try 283. Got filled immediately. So, there you go. All right, perfect. And by the way, if you're brand new, or not even brand new, but if you have a smaller account, let's go back to the beginning. Where are my beginning people at? Man, I appreciate you guys so much. If you're just starting out with like a smaller account, you're looking for undefined risk positions potentially. And buying power can be an issue with undefined risk positions. So, one of the things you're going to be looking to do is find lower buying power stocks to trade, maybe some short puts on or some strangles on or what have you. I mean, Hood is a great option. You just saw a short put for $650. I mean, if you've got $10,000 in your account, that's 6.5% of your account. Right. And so you're inside the position sizing parameters at 10 grand. Even if you only had like 8,000, you're pretty close to the upper end of the position sizing range there. So it can be a really, really nice option for smaller account sizes. And so, all right, let's see here. Where are we at? Org Denu's in the house. What's going on there, Org Denu? Hello, Dr. Jim. Thank you for explaining options on futures. It was extremely enlightening. Just like all your videos. Hope you have a great weekend, man. I appreciate you, my friend. Yes, you are very welcome. That was a great question. I remember the question about MES and kind of thinking about, kind of not wanting to pull the trigger on MES and looking at the max loss and what have you. I think we just did that yesterday. But thank you, Org Denu. I'm really glad it was helpful, and I hope that it helped maybe some other people out there too. Really, really good question. So thank you, my friend. I hope you have a good weekend yourself. Weiss is in the house. What's up there, Weiss? Sam L is in the house. Crazy week in the market. Good thing we ended with the one and only Doc explaining what just happened. I can't do that, but neither can anyone else because nobody really knows, right? It's story and direction, guys. It's story and direction. But if you pay close attention, here's what you will see. The story is always told after the directional move has been made. Right, man, it'd be really nice to know the story before the directional move, right? But whenever they take a shot doing that, they just bury it when they're dead wrong. That thing just floats off into the ether, man. The story gets attached after the directional move. So it's story and direction, but it's always direction and then story. But thank you there, Sam L. Rodrigo's in the house. What's up there, Rodrigo? I appreciate you, my friend. Man, good stuff. Wolf is in the house. Doc, after your post last night on PCE and Jolts, I couldn't sleep. As you shouldn't have been able to sleep because, again, welcome to the afterlife. I hope it's everything you dreamed it would be. I stared at the overnight markets. I placed an ES buy at 729 Central for that last dopamine hit. Now I'm on my sixth ghost. Man, that's a power move. You should be supersetting sour pink lemonade with sour green apple. Like if you're going pink lemonade, green apple, pink lemonade, green apple, pink lemonade, green apple, banana natty to wrap it all up. Man, that's just some good stuff, man. Only from theory to practice has me up. Man, I appreciate you so much, my friend. And I mean, what a way to go out, right? A bunch of ghosts and then a banana natty. I mean, that's the way to do it, man, if you're asking me. And so Jared Kramer in the house. What's up there, Jared Kramer? Oh, you guys are talking about Bitcoin. And so what's Bitcoin doing? They're still out there, right? Doing it? Yeah, they're at 71,000. All right, there you go. And so Danish Dynamite's in the house. The apocalypse is upon us. Drinks all around. That's correct. Banana Natty's on me. And so, I mean, with that Natty Light Ice base, I mean, they're pretty cheap. So I can afford quite a few. And so flower power, it's a correction incoming. That's what everybody says, right? And so I kind of think it's a melt your eyeballs rally that's coming. I kind of feel like, I thought it was going to happen today, and maybe it still will. But But again, just a couple quick deletes on the old tweets, and it's like it never happened. But Monday or Tuesday or at some point in the next 9 to 11 weeks, man, ES is going to be up 185, and it's going to just melt people's brains off. And it's not going to make any sense, but it really kind of never does. And so let's Gapper X. I think a bottom is being created here. It may end up being short term. You might be right. Flower Power says, if not a depression, we're doing depressions now. 5% off of all-time highs. That's where we're at. Okay. All right, Jared Kramer. I'm depressed. Market may as well be too. There you go. And so if you can't beat them, you join them, right? We've talked about this many times before. Gapper X says, but yeah, bottom. Then Trump will tweet out some bullish news. I mean, everybody's waiting. Everybody's waiting. Everybody's looking at the feed. Everybody's on the Bloomberg terminals, or you don't even need a Bloomberg terminal anymore. You just need an X subscription. Like, that's all you need for the information that really matters. You don't need to know like PCEs and CPIs and like, imports and exports. Forget all that. I just need to be on the social feed. That's all I need to know. That's all you need to know. And we're all just kind of waiting for the same thing. Let's see. Catch that voltage in the house. What's up, my friend? Another put call spread in Meta, Dr. Jim. It's back to its lows. Man, are we doing this again? Didn't we make money on this before? I think we made a few bucks, didn't we? Man, look at Meta down $25 today. Did I make money in this before? I can't remember. Yeah, we made 75 cents. Okay. And we did something else before that. That must have been an earnings butterfly. That makes sense. So this is the trade you gave me. That worked. This is the one I did on my own. That didn't work. So that makes that makes perfect sense. Let's go into let's do it, man. I'll do it. Let's do a little something. Put call spread. Yeah, let's play the melt your eyeballs off rally on Monday. Let's see if we can do it. Let's do a what are we thinking? A put call spread? Man, what do we do? How about we go at the money? How about an at the money melt your eyeballs off rally play in Meta? We're gonna, collect $4, which is actually, that's about where I like to collect anyway. About 40% the width on a short vertical spread is typically where I like to live. I don't love the fact that I'm right up against the stock price and we're just kind of snuggled up, cozy, comfy, right up on that guy. I'd rather have a little bit of more room. But this is just the way it's, this is the price of admission for playing that melt your eyeballs off rally, Monday, Tuesday, or maybe June, October. So let's go ahead and do 610, 600 short put spread. Sure. 405. Maybe they'll give it to us. They're going to give it to us? Nah. No takers at 405, but maybe we can get, can we get somebody at like 401 maybe? Let's try 401. We get somebody, right? Just need one person. There it is, 401 filled. So there's your Meta short put spread. Playing to the upside. Who gave me that? That was Catch That Voltage. Hang on, I'm writing these down now again. Catch That Voltage. Meta. And then what was the other trade? We just did Hood. Who gave me Hood? Was that Gapper X? Hold on. That was somebody. I'm keeping receipts again. I can't find it though. I can't find it. Hold on. Where was it? Wolf. No. I can't find it. Rats. Okay. You're off the hook, whoever gave me Hood. Or you can identify yourself. But I would wait and do it after the fact. I wouldn't do it now. And so the Preston's in the house. What's going on there, the Preston? Dr. Jim, I followed you off the Adobe cliff. Oof, man. Thelma and Louise style. Yeah. I love you, my man. You're the king. Yeah, I don't know about that. I think I'm right up there with Queen Snapchat, man. It's just not good. It's not good at all. Yeah, the Adobe thing. I think somebody else took us down on Adobe. I'm not sure that was my own idea. Although the fact that it's losing so much money today would lead me to believe it maybe was my idea. But the Preston, it's okay. Hopefully you controlled size like we did. And, it's just a drop in the bucket, man. It's just a splash in the pan. Couple hundred here, couple hundred there. And the next thing you know, you're talking about real money. But with Adobe, I think we'll be okay. And so Sam L. Doc, we might have to officially do a course on the Fade Doc strategy. Adobe just confirmed it again. No, we don't need a course. You don't need a course. You don't need a subscription. You don't need a membership. Like, we don't need to mastermind this guy. It's very simple. You just watch the show, right? And anytime I place a trade that is associated with a binary event, right, you need to be on the other side, right? Any binary event, anything that's like overnight, anything that's like front week, just take the other side. Don't think twice about it. Don't try to insert like logic and like analysis. You don't need any of that. That's just going to muddy the waters, right? They are crystal clear if you simply do the opposite. And so, we don't need a course. We'll save the courses for some other things. But Flower Power, Iran's not agreeing to end the war, just like Russia isn't, which Trump couldn't work out. Yeah, I don't know, man. It could be a little crazy. And so, oh, there's my surprise and delight. There's my Brian Dowdy comment. So thank you there, Brian Dowdy. I appreciate you. Hopefully that helped you a little bit. Rodrigo, Dr. Jim, I think SPS will close down 1% today. You might be right, my friend. I mean, right now it's just kind of, I mean, it had a fairly strong opening. Like, I mean, ES at least. I mean, it was green for a little bit there. I mean, if you go back to like the, the beginning. Wow, look at that. Is this a daily chart? Wow, look at that. Man, that's a lot of back and forth. If I go to like a 2-minute guy, let's get Errol Coleman some of those royalties. Don't forget, guys, if you click on a 1 minute or 2 minute chart inside a Tasty Trade, Errol Coleman gets a 17-cent royalty. He gets 16 cents for the 1 minute and 17 cents for the 2 minute because that's a little bit more of a premium play. And so let's help our boy out, man. Like, he's young, he's making his way, like he's just kind of trying to make a name for himself. And so, do us all a favor and click on the little 2 minute chart. I mean, it's going to give you all the information you need. And so, yeah, I mean, the market was, you could see on the open there. I mean, it wasn't that strong, actually. Now that I'm looking at it, I haven't looked at this at all today, and it felt stronger. But I'm looking at this, I'm like, yeah, that's pretty weak, man. That's like, I'm not even sure that could be any weaker when I look at that. But on the open, there was a little bit of a a glimmer of hope, and then they squashed them. And so there you go. But let's see here, where are we at? If I do, that was Rodrigo. Jared Kramer's in the house. Dr. Jan on Friday. Stacks were burned this week. Ready for some R&R. You should be, my friend. You 100% should be. And look at the Preston pumping the algo. Jared Kramer, and of course, pumping the algo. Man, I appreciate you. Tomas is here. Doc, that USO trade. Looking good. Nice play. Thank you, my friend. Yeah, we took it off. We just, we cashed in the winners, and we'll just move on from there. And let's see. Flower Power says you can't unilaterally end a war. That's true. Even if you did start it. That's very true. And so there's a lot of wisdom there, I think. Samuel Algo running complex models. iPod Touch just says market going down and walks away. Yeah, he lit the powder keg and just bounced. Like, he lit the powder keg and called it, and now he's never to be seen again. Which that makes sense, right? Because where is he? He's in Fiji or something. Like, where is he? Like, my man's in like a hut in Barbados, just living the dream now. Like, he doesn't even need to do banana natties. He can go actual banana daiquiri. Right? He doesn't need to cut costs with the Natty Light Ice base. Like, he's going straight premium banana daiquiri, like, on the beaches now. And he should, because he earned it, man. That's some good stuff. And so Ramsey is in the house. I see Joe YQ. There's the question that Josh brought to our attention. So thank you there, Josh and Joe, for the question. Ramsey's in the house. Hello, Dr. Doc. What's happening in the market? Adobe couldn't save it. No, it could not. And so now we just wait for... we wait for King Trump to decree it to be so. And I don't feel so good about that. I don't know how you guys feel about that, but I don't know, man. So Too Late Jake in the house. Let's go, Dr. J. Here to update my Fade Dr. J account. Yes. You should update it. I'm sure that you're doing quite well, right? I mean, you should be withdrawing profits. You should be taking out lots of cash and just spend it on your family, man. Like, get yourself something nice, because you probably have ample funds in there now. And so nicely done, my friend. Samuel Algo, volatility detected humans. What are we even doing here? That's correct. I don't know what it is, and we haven't figured it out yet today. But maybe next week. Maybe next week will be our time to shine. Cameron Vincent is here. Bogus Family is here. Brian is here. Patrick is here. Dr. J is the algo, and the algo is good. Yeah, we haven't quite gotten to the Dr. J, the Dr. J.I. editions of the show, where it's just algo form doing the show. It's actually still me, sadly. And so hopefully we'll figure it out sometime in late 2026, where I can be doing like walking lunges or something while you guys think it's me, but it's not actually me. But we're not quite there yet. And so, but we are actually at the end of the show, which is crazy, man. That's really quick. But I see you guys in the house, man. I appreciate you. Morgan's here. Grumpy Mike is here. Juan is here. Man, MP is here. I appreciate Emmett Morrison snuck in. Man, I appreciate you guys. RC Mindset's here. Wow, that's crazy. I appreciate you guys so much. Thank you guys very, very much. If I can ever help you guys in any way, please shoot me an email. I'm a little bit behind on emails, but I should get caught up here in the next few days. I am at Jay Schultz, or I'm Jay Schultz at tastylive.com, or we can connect on Twitter. I'm at Jay Schultz F3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with trading the charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. #1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University. #30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago. #6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign. #18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
I like the looks of that lineup.
Well, Be Mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Hey, tonight, and it is the end of a really amazing week. I've been having a ball with this market. It's been terrific fun. By the way, I keep forgetting, I set up a one-page website the other day just to give you an easy way to reach me if you want to say hi or ask a question or something. Easy to remember, tastytim.com, which sounds like a potentially really disappointing website, but it's just, pop over, say hi, got a question. I can't give, and I won't give, anything even in the zip code of trading advice. Even stuff like, what do you think the stop on this should be? Sorry. But otherwise, yeah, love to hear from you. But it has, as I said, been an incredible week. I'd like to jump right into it. I don't have that long a list of charts, but I feel kind of chatty today for obvious reasons, so I want to give myself some time. And we're going to start with the diamonds. Let's jump back a week from today. Let's go back to last Friday, which was this green bar there. And we had last Friday also been at the end of a really exciting, fun week. And I had speculated that this week could be really cool. And there's like a 20% chance we'd have a big tumble on Monday. We didn't. It was just the opposite. We rallied strong on Monday with, hey, 20%, come on. But what did transpire, of course, was that we were super weak on Sunday. That's when we bottomed out on the futures. And we rallied mightily on Monday. And it kept flowing into Tuesday until about 4 hours into the trading session. And then that was it. And we peaked, which is this red spinning top right here. And no matter what ETF you look at, whether it's the cubes, the IWM, the RTY, the diamonds, they all have some flavor of this, which is tagging the bottom of the pattern and then resuming the fall. I have been trading really well this week, except not that great today. I give on my website, I have a little trader's diary, and I use it every day myself. Even if nobody else did, I would use it to record my thoughts. And it takes just a minute, but I basically say, what did you do right? What did you do wrong? Give yourself a grade. And my grades lately have been kind of A-. Sometimes I'll even give myself an A. Today, I'm probably going to give myself a B+ or so. Because I was really well positioned for today. I came in today very, very, very short, like over 200%. And the market was climbing, and it kept really climbing, and it freaked me out. You can't see it here. Today's a nice, clean, down day. This belies what was going on under the surface, which is that through the wee hours of the morning and about a half hour into today's session, it looked like revenge of the bulls. And being as short as I was, like, I don't want to stick around for this. So I ran around, and it's not like I covered everything, but I went from like 200% short to like 100% short. And then the market started falling to pieces again. And I got back into positions I had no business closing in the first place. So yeah, B+, kind of messed up that first 45 minutes or so. I've tried to make up for it. And the worst of it all was I did have my loony spider put trade that expires today. Dumped them right quick. And they're up about 300% last I checked. You know how this sort of thing goes. So a lot of this is psychological. And a market like this, where, I mean, the VIX is not at 12 anymore. You know, the VIX is, there's a lot more volatility. There's a lot more action. Easier to make mistakes. And, I made a few this morning. Absolutely. But the big picture, see, I told you I was chatty. I got something else to say. The big picture is to keep the overarching fact in mind. I believe we're in a bear market. And given that template, having a few minutes of strength should not justify, oh, help, I'm going to cover things. It's like, no, just let the stops do their work. Go tend to your bees or something, which is like what I did later in the morning to get myself out of here so I didn't screw up again. So, yeah, shame on me. The spider, SPY, as I said, these are similar in one way or the other. It has completed its pattern, and interestingly enough, we've gotten even a little lower today than we did on Friday. In other words, we briefly traded at prices today that we hadn't seen since, this is not my platform, so I'm not as quick and adroit as this as I am on my own. No, okay, Thanksgiving, November 24. So kind of interesting that we're back to late November sort of levels on the spider, and more importantly, that we have very plainly completed this pattern. And if I was bolder than I was, because I'm back to, I'm not at 200% short anymore, I'm about 150%. If I was bold enough and YOLO'd this, I would use every penny of buying power I've got, shorting power I've got, and just, damn the torpedoes, and because these are fantastic looking charts. I don't know. I've got a little bit too much caution, and I think just go all out like that. But I think the top's very cleanly in, and it's ridiculous to me that the only times we are rallying, and the biggest one, of course, was on Monday, was just based upon the bloviations of our own administration. It's like, well, what else are they going to say? It'd be like JP Morgan saying, short everything. That's not in their interest. They're always going to say buy. What's Washington, D.C. going to say? Things are going great. Don't believe the failing New York Times. Failing what they seem to be doing fine. So incredibly, these ludicrous pontifications blast the market higher until people come to their senses about an hour later and be like, I don't think that's the truth. And then they start selling again. So if you kind of want to short Washington truth, this is the way to do it. This is the small caps. On Tuesday, we did pierce and poke into that topping pattern, but it did not stick. And so we're basically across the board closing near not lifetime lows. We're closing near lows for the week and for the year. And I do think that weekend jitters are going to cause some last minute selling here. We're seeing it at this very moment, right near the lows of the day. Which means those puts I sold are worth even more. EEM, the emerging markets, they just keep gapping down. We got a gap here, we got a gap here, we got a gap here. Wouldn't be surprised if we see another gap on Monday. And for the one or two bears left on the planet besides myself, the beauty of this market is nobody thinks any selling is going to persist for very long. The BTFD thing is deeply, deeply embedded into the mindset of the public. And I know it from my own website. Back when COVID hit, I got flooded with subscriptions. People were like, take my money. This time, God bless my members, they're keeping me afloat. There's no mania like that going on. Why? Because my website's better than ever. Why wouldn't they subscribe? because they don't believe it anymore. They don't believe, a day or two of weakness, and then that'll be about it. The president says the war's over already, so everything's going to be fine. And it makes sense, we haven't had a real bear market since 2008. So naturally, most people who trade the days, they don't believe in it. It's like believing in the Easter Bunny. Just no such thing as a bear market. I don't agree with that, but EFA also down very hard, closing near the lows and also gapping down nicely like that. And EWY, South Korea, you get the idea. Just basically the world over, things are slipping quite badly. And there hasn't been any really, catastrophic news out of this war. I mean, there's been very sad news and tragic news, but nothing like, this people will be writing about this 20 years from now kind of news. I think that's still coming. But there's this supposition that it's going to be fine. It's going to be fine. These things always work out. Another day or two. But the charts tell me differently. These are giant, giant patterns. And if I had any sense about me, I would just let them be. XLB, which is the materials select sector, also slumping lower, bearish engulfing pattern on this, and just down, down, down we go. We've seen a lot of this also with home builders. I'm not showing it here, but XHB, home builders, also quite weak. And that flows into kind of the substrate there. So for example, FND, remember that one? Floor and decor. Look how this is going. This was a short idea from a while back. And that makes sense, if fewer homes are being built, ain't need so many floors and decors, do we? Those are going down as well. So really extraordinary. I mean, of all the things going on, you may have noticed I don't talk about Bitcoin as much. The one item which seems kind of strangely robust has been Bitcoin. So I've been kind of sticking to the knitting of equities. And so we'll look at that in a sec, because like I said, I haven't really talked about crypto hardly at all. Gold, as I speculated, continues to be weak. I talked about yesterday there's no place to hide. Because as usual, the only thing that's green right now is crude oil. And like I said, Bitcoin's kind of holding its own right now. It's in the low 70,000s. Likewise, silver, SLV down pretty hard, almost 5%. This was just almost a straight shot higher. And the tippity top here was established, and then it's been really rough riding ever since. And then the miners, of course, GDX, these guys are down almost 6%. Sadly, I'll tell you, even though I usually short anything that has a ticker symbol, I've shied away from precious metals as clean as the trades have been, mainly because, and it's again, psychology getting in the way of sense, this notion that, we got a war on and there might be some big news and precious metals will spike like crazy. None of that is happening. So, I've certainly got 48 positions. I've got enough to keep me busy, but I haven't been taking advantage of what should be pretty obvious trades with precious. So this just keeps slumping. This is, these are big moves. XME, by the way, which is also mining, but not purely precious mining, is lower as well. And long term, as we've discussed, because of those ratio charts, XME should greatly underperform GDX as it has done for months now. I mentioned Bitcoin earlier. Here's BTC. I have been shying away from this. I will say that if it does get in the vicinity of 81,000, it's going to be an irresistible short. But maybe people are sort of like sneering at precious metals and going for Bitcoin right now. I'm not touching it, but like I say, if we get to around 81,000, it's going to be very, very interesting trade. The companies that surround Bitcoin, of course, have been having relief rallies of their own. Strategy, for example, MSTR up a bit and then up pretty consistently over the past couple of weeks. But here too, it's at the mercy of Bitcoin, and let's keep an eye on that. Crude oil is having another good day. If you sort of set aside this mayhem, this one red bar, just going to pretend it's not there. It's been a pretty steady climb. And I think very easily we're going to be looking at triple digits, not for a moment like the last time, but like persistently on Monday. So this continues to rally quite strongly. And we can see this reflected in energy ETFs also, obviously. We've got XLE, for example, pushing to what I think is a lifetime high, and XOP, which is also doing quite well, also the lifetime high. So all the oil stuff doing super. I do have one and only one energy-related short, which I'm delighted to say is down. Why? I don't know. I don't care. Down is good. So Halliburton is down about 3%. And it's extra good because if you're short something and every one of its compatriots is green, wow, that must be a good choice. So yeah, Halliburton sinking. And you don't need to write to explain why it's sinking. It's okay. The chart's all I need. I don't even need to know what they do. Any of these guys. It could be ticker symbol XYZ, just doesn't matter. It's just a chart. So just to wrap things up quickly, the cubes continue to sink. The pattern's not quite complete. We are getting kind of close. We may complete this next week. It's possible. It's possible. And if we do, it's going to be a pretty big deal. SMH, against which I own a whole bunch of puts, is down a little bit, but it's a super clean pattern. These are June puts I happen to have. I've broken that wedge, just looking terrific. And then a little more saucy SOXL, the triple leverage bullish on the semiconductors. Also, it's actually up a little bit weirdly. That's strange. But the gap is key right there. And the fact we're below the trend line. So that's also looking really, really good. The NQ, and I'm sorry, I'm a few moments over here, but I just want to wrap real quick. We'll make this the last one. The NQ pattern's been banging around here for months. We're getting close. We could break it next week. We could break it on Sunday for all I know. But it's looking very, very good. We're range bound still. Haven't broken it yet. But if we can slip below this pattern, I think we'll really start to see some serious selling. So anyway, great week. Hope you've done all right. Have a good weekend. I'll be back on Monday. Bye-bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Got friends? get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Ilya, we are back. It's the final 30 minutes of the trading day, final 30 minutes of the trading week. This is Last Call. You're watching Tasty Live. I'm your host, Chris Vecchio. He's your co-host, Ilya Spivak. Ilya, we have a market here that is certainly on its back foot as we go into these final now 27 minutes of the trading day. Fix that microphone up, so that should be a little bit better now.
There you go.
B500 sitting down at 0.6%, 66.37. We have our NASDAQ off 0.75, our Russell off 0.6%. Bitcoin and Ethereum are a little bit higher here, but of course, we can go to the charts because all attention remains on the only thing that anyone's actually looking at right now. It's oil. Oil bottoming out near 92 or so this morning prior to US GDP, US PCE, and a host of orders coming through as the market opened. The day's news flow, Ilya, boots on the ground, 2,500 Marines making their way there. Wrong. 5,000 now with the latest reports. Powell subpoenas squashed over by a judge in DC. Okay, so there's a lot of news here right now, but we're going into a weekend where markets are closed, oil is up, and so folks are looking to raise cash. We've seen bonds sold, we've seen the dollar go up, we've seen gold and silver come back, and silver off 5% right now. Goodness gracious, Ilya, are things coming a little bit undone right now on the broader macro level before we turn our attention to the winners and the losers in the stock market? Not that there are many winners.
I think you're going into the weekend here. There's a lot of news flow coming hard and fast. The markets have already learned what it's like to wake up with a serious gap and a serious shock at the start of the week. So it's not surprising that things are a little bit soggy here. I mean, the picture in stocks, I mean, it'd be weird if it was better almost. Because none of this really changes anything. I mean, certainly the situation with Powell is welcome. It's good that we are getting a little piece of support here for the Fed's independence. That's very, very important. But does that change the fact that there's an oil shock underway and that's squeezing inflation expectations and bidding up yields? No.
No, so we have 97 here. Ilya, the market gapped open in oil to 98 exactly on the nose at the start of the week, and that's where we're going to find ourselves closing this week. Have we learned anything about the conflict, about cross-asset flows in equities, bonds, the metals here? If it's about preferences within stocks, what's performing well, what's not performing well over the last few days, because there hasn't been much movement in oil. When you net it out, I wouldn't discount the 119.48 print we saw in CLJ6 on Sunday night, but it seems like we're finding a new equilibrium and realization of what the realities are right now with the framing of this war.
Yeah, I mean, if you look at where this is setting up here, I mean, we're closing crude oil higher on the week if you look at the active contract CLK. So that's quite something because, of course, it was a wild ride. I mean, we opened on CLK at 91 for the week. We got as low as 75, 64, as high as 113, obviously on some of the contracts earlier. CLJ, we got as high as 120 almost at one point.
Did you notice something here, though, across the curve as you look at these charts?
Yeah.
CLJ, the front month contract, we opened up at 98. We're a little bit higher than now, 98.71.
Just a touch,
CLK, you opened up the week at 91.48. We're closing at 96.84. So $5 above the open as opposed to CLJ, which is flat compared to the open. And then you go to CLM6, right? We opened up the week at 85 and we're closing at 92.48. That's about a $7.50.
Well, and that's exactly what I was trying to get here, is that the market, when you look at the way that it's stacked, CLJ, yeah, it's basically a scratch. But then you start looking, first of all, CLK is now the active contract, but then you look further down and you go, oh, there is a greater premium in the futures the further you go out. And that's something. That's telling you that the market doesn't think this is going to end soon.
That is the most important point of what's happening right now in the market. There is this idea, and I've certainly shared it, that once oil volatility breaks, that's when you know this chapter in the Iran story is over. Maybe oil volatility not hitting a new high with respect to IVR today signals that we have entered a new chapter. We've turned the page, and the adventure that we're going on is this is not going to be a short-term disruption. The fact that we're seeing oil bid across the midpoints of the curve right now, and it's not just the front month, but it's really everything else that's going up, it does have some implications. If this were to continue, for example, calendar spread trades should do well here because they would benefit from a positive roll yield. USO as a trading vehicle for oil exposure, if you're not trading the futures, is benefiting from positive roll yield. As a result, you could see here, Ilya, we opened up, today's the 13th. We opened up at 119.42. We're closing it at 119.65. So even this is trading positive after recent sessions. So I mean, the oil is not giving you much confidence. It's not giving me much confidence right now that we see a near-term exit path that doesn't inflict more pain and more disruption. I mean, it's here, it's happening. So this goes beyond just simply worrying about how to survive the next 2 or 3 weeks, and realistically, like, what's capital preservation trading look like if the market has a little bit more downside exposure moving forward?
Yeah. I mean, I think you look at this now and you say, right, so this, you got to operate from the perspective that you've got one narrative, that narrative is inflation, that inflation is being driven by oil. So you go oil to inflation to higher rates to risk aversion. And that becomes your kind of map here. And you go, okay, well, in this environment, the things to be long are oil and cash. Cash is probably the thing to be long, whether you're looking at yields or not looking at yields, because at this point, it's a vehicle for that risk-off mindset. People are cashing out. That means dollars. Because it's a yields thing, it doesn't mean yen, and it doesn't mean gold, because those things are low yielding. And while they are sometimes havens, sometimes anti-risk instruments, because the impetus here, the catalyst starts with higher yields, those things are not going to perform. It's the same story as why gold fell in 2022. And everybody was saying, well, isn't gold a safe haven? Weren't stocks down all year? Well, that's cute. It's cute. But gold is not a haven in the sense that it moves opposite of stocks. It's a haven in the sense that when the circumstances are right for a gold kind of haven bid, you'll get it. And when they're not, they're not. And the entire reason that stocks fell in 2022 was rate hikes. Yields were going up. That's an environment where gold and stocks move in the same direction, down. This is increasingly that. Frankly, that gold is holding up as well as it is already encouraging. So when you look at all of this, you start to kind of get a basket of assets that starts to make sense. And then if you want to start to get on the short side of things, start betting against things, Bitcoin, the indexes, they line up. In fact, Bitcoin is maybe more of it's a better risk reward idea in the sense that this has been going down. It's got a beautiful consolidation flag pennant something here. And you could look for a clean break and you can still get some really good verticals off in IBIT. If you just wanted to buy a put vertical, you could do that. Vol's not that high. If you thought this was going to be just a straight go to cash liquidation, nobody's looking here. And this is just waiting to be sold.
Well, it's been making its way through the market, right? I mean, you saw a little bit risk on people getting their money out of. And if you're looking for cash or cash equivalent, right? Right now, is Bitcoin or gold more portable?
Well, one thing that concerns me about Bitcoin, frankly, and this is where you have to be careful about selling it until you get confirmation. Let the support give way. Iran is a big Bitcoin mining center. Actually.
The IRGC has its own hedge fund.
So if you were going to go and short some Bitcoin and then we were to decide, oh, you know what? We got an expeditionary force going there. We're going to, like I said earlier this week, it seems like, given the Hormuz situation, the only way forward in this situation is through. That is to say, more bombing, go harder, establish a monopoly on the use of force on the ground, stop things being harassed in the Gulf, and create a situation where you don't have to drop missiles on cities so that your hopes for a popular uprising can actually be realized. Because how in the world are you supposed to have a popular uprising with tomahawks falling on Tehran?
Well, I don't think that's happening anytime soon. Ilya, as gold is hitting session lows, nearing those session lows, you find yourself with your S&P 500 sitting near session lows. Same thing for your NASDAQ, your Russell right now. And even the dollar, broadly speaking, if you were to head over to DXY on the chart here, DXY is sitting up just above par again, 100.45. Yeah. Lots of things to suggest the cross-asset market are, again, this is a reach for liquidity environment, a reach for liquidity type of environment right now. If the headlines don't get worse over the weekend, there's, of course, the chance that we wake up on Sunday and first call goes off and the futures market opens up and the dollar's down and gold has recovered a bit and stocks have recovered a bit and oil's a little bit off, just as there's a chance that we wake up to more headlines that arguably things are getting worse. But Ilya, how would we know that things are getting worse? How could they get worse from here, I suppose? Is it really about the flow of oil? Because what we've seen in recent sessions is that the amount of tankers making their way through the Gulf has been zero. That's known. The wells are shut in. The oil has stopped moving around the world to a certain degree. Why would this problem compound from here? Why shouldn't traders be looking at the S&P near multi-month range lows and thinking, this is a good place to start layering in and maybe looking to buy a dip?
Well, because nothing in the world tells you that you're not going to break these levels. I think this is the most important thing for people to remember when they watch us do all of this cute chart art. If support and resistance levels, or whatever you want to call them, supply and demand levels, pick your nomenclature. If these levels always held, the markets would be in a perpetual range. But they're not. These things break. Just because there is a bottom there around 6,600 doesn't mean that bottom is going to hold. And right now, you're much closer to that bottom than you are to the immediate resistance, somewhere in the vicinity of 6,750, 6,800. And so you're upside down on risk reward here to short more, but you have zero confirmation that you should buy. So at this point, late in the day Friday, if you don't have something on already with good risk reward, why would you want it? You wouldn't. You would look for either a break or you would look to get to 6,600, find some sort of a reasonable signal for a bounce. Let's say a 3-candle candlestick pattern like we had the last time we bounced from that level on the daily. It was a clear as day bullish candlestick setup, 3 candles with a breakaway gap. If you wanted to buy that, you could do that. And it would be reasonable risk reward. But you don't have that here.
Yeah, gap open higher on, if we got to move on Sunday where we gapped open lower and tested the lows from this week and didn't break them and then close the gap, that would be a really interesting setup for the start of the week, just from a pure technical perspective. Whether or not you could have significant faith in it is another story. I'm looking at the lower term timeframes. I know the volatility here is elevated. It's still a 42 IVR, and potentially laying out long delta exposure vis-a-vis short put spreads is something to consider. Before we consider that, when you're range support, Ilya, so, should range support hold? Maybe it does. Maybe we continue to grind sideways here, and the last 2 or 3 days of price action was all for nothing. But I'd want to see something change, even on like an hourly chart right now. The downside momentum here is just so strong still. We're below whatever cluster of moving averages you want to throw on your screen. MACD stochastics trending lower, stochastics having dove back into oversold territory. That's not a place, in my view, because I'm not trying to catch the exact low, that we even see a possibility right now with 10 minutes left in the week to think that this is a good place to deploy. Because again, think about the average person. What do you do? What have we seen in these war times? People raise cash as they go into the weekends, and then they redeploy when they can manage that risk a little bit more closely when the markets actually open next week. You and I were joking earlier today, though, before we go to a quick break, refer a friend promo, production team. Could we talk about this Fed meeting next week? It feels like the Fed meeting next week is a lot more important now that Powell's going to have a reason to outline a set of forecasts that don't necessarily give you any hope for a rate cut anytime soon.
I think the Fed meeting is going to be very important. In fairness, I always thought the Fed meeting was going to be very important because this is the updating of the summary of economic projections. And we, of course, have heard before all of this nonsense that the Fed was leaning more hawkish. That was the tone of the minutes from the January meeting. That was the commentary around everything that's happened since the beginning of the year before, again, we launched this war. So it's now that much fuzzier. But when we were looking at the forecasts in December, they were one cut this year, one cut next year, and the markets were frankly chafing at that and saying that's not enough. You got to do 2 this year. We'll let you off the hook for 2027 if you give us all of the 50 basis points in 2026. And that's been the story really going to mid-2025. Well, obviously, things have changed. Now the markets aren't even sure they're going to get one cut this year. So what that summary of economic projections looks like is going to be very interesting. And what Powell says around it is going to be very interesting. So I definitely think this is the key event risk next week, and the markets will understandably be on tenterhooks ahead of it.
Rate cut odds have been decimated this week alongside the move higher in oil. It just goes to show the market's reaction function at present time is still tethered to the inflation risk rather than the potential growth risk.
That's right.
Or in other words, the market's saying it's going to be transitory-ish because it's not so concerned about growth. It's more worried about inflation. I am waiting for the moment, and maybe it's happening today in the second half of the day because the SR3 contract is off the lows while stocks are hitting their lows and closing at the lowest point of the session. Maybe we begin to tip towards recession concerns away from inflation. But Ilya, today's a good day to debate these things with people. After work, you can go talk to your friends. You could tell them that they need to come trade what's happening in this market right now. Refer a friend. We have that up on the screen. Refer a friend. You refer a friend, and they fund it with a $2,000 plus deposit. You both get $100 bonus. tastytrade.com/refer a friend. tastytrade.com/refer a friend for more information. Lord knows I need a friend after this trading week. I have been my gold and my silver positions that had me sitting up on high and feeling pretty good about myself when I was in Chicago 6 weeks ago, have since been a punch in the face. Ilya, we need to talk a little bit about the stocks here individually as we turn the corner and get ready to go into the closer today. We frequently mention that we track, or at least I track now, 26 sector ETFs. IGV made the cut recently here on the show. 10 of the 26 are in the green for today, but when you look at the breakdown of what's going green, it's not great. It's all the defensive names, the energy sector stuff that has been a little bit more defensive here. Utilities, they are on the up and up. The oil and gas producers, exploration, those are up. The consumer staples, those are bouncing. On the flip side, the worst performers, the gold miners, GDX, GDXJ, taken out to the woodshed off over 5-6% each year. And that's starting to look a little more toppy. You have your XLK, the tech stocks of the world, more of that rounding top, specifically the Mag 7. What a change here, Ilya. Talk about a problem for the broader market. The Mag 7 were looking like they were going to be safe, so to speak, a few days ago. And then you see the supply chain. Well, they get above 63. It starts to look a little different. 2 days ago, we were trying to maybe carve our way back above our 1 month moving average. And now we're going to close potentially below the lows at the start of the week and maybe signal a more significant flag breakdown here.
3 cheers for horizontal lines here.
Backslash.
We can clearly see there was a very clean axis through the middle of this chart. You have it set up here as those 2 gray lines. I mean, how much cleaner do you get? A break, that becomes a new range top. We oscillate there for a while. It looks like we're about to get the other side of it.
Yes. So Nick here's messaging me. Trump's going to pump us this weekend, followed up by a he must. Like hope. I called the BTFD Avengers to assemble earlier, and we were informed that we're out of money at the moment. But
take a golfing break, Mr. President. I'm still short.
Helium to me is certainly popping up in FinTwit circles. If you're on Twitter, you've seen this conversation a lot the past 2 days. But a lot of the world's helium is consumed by the semiconductor manufacturers, producers. About 25%. I've been told TSM is 20% of it. That's a lot. Helium, typically, you don't just find helium deposits sitting around. They, like natural gas, prefer to be underneath salt domes, miles beneath the Earth's surface. So, it's not a coincidence that you see Qatar with its massive gas fields and 35% of the world's, producing some of the world's highest gas levels, also controls equivalent amounts of the world's helium supply. You need your helium in the manufacturing process for semiconductors. So you're seeing some of these tech stocks and potential supply chain concerns. They're beginning to get sucked into the conversation right now. You're not finding even in the equal weights, Ilya. QQEW. If this was a flag, it started to break here today. I think the audience knows me by now that I'm not someone who panics, and I always look for the silver lining to buy the dip. Because I'm not retiring tomorrow, and I think I have a timeline longer than green bananas. This is not the environment to even buy green bananas, I fear, which makes me unnerved because I'm never like this. This is not who I am as a trader.
I think if this is what this looks like, it is something of a pattern. I tend to be, and macro people tend to be, woefully early on things like this. They start to smell the smoke well before the fire is visible to anyone, sometimes by a year's time. And you don't always know where the fire is. You just know that there's a vulnerability. And you look at the markets and you go, it's not that you know what the brick is going to be that smashes through confidence. It's that you know that confidence has become vulnerable to brick throwing. And nobody, myself included, could have told you that the reason the whole thing unravels, if it does, it hasn't yet, but this price action is worrying. So if this thing does unravel in a larger, more holy moly kind of way. Could anybody have known it's going to be a war with Iran? No. But could you have been tactically short? Yes. Because the market gave you that information. And were you wrong a lot last year? Yes. 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 You did have to trade other things to keep experimenting with the stock market that looked bonkers. But if there is a meaningful correction here, it's not like you couldn't see it.
Oh yeah, we do have about a minute and a half, a little bit less than that here in the trading day. I mean, look, we can explain why things are going on, but what's the trade setup bias moving forward into next week and immediately on Sunday? In this high volatility environment, when volatility futures are trading where they are, when the VIX is bouncing between 20 and 30 and pressing the top end of the ranges, it's all defined risk strategies. Period. End of story. It really has been that way since mid-February when dispersion became the clear driver. So if you've been trading in a more risk-defined way the past 2 weeks, hopefully if you have losses, they've been a little bit more limited and contained. But these energy-driven macro swings, they are driving the volatility across sectors. The energy-driven uncertainty is rippling across the financial markets beyond oil and gas right now. It's in the dollar. It's in gold. The dollar's at the strongest level versus the euro since August. And Europe is looking at astronomically higher gas prices. I think they're up 75% now from before the crisis in the Dutch TTF grade. So strains in private credit markets. I mean, Ilya, worst case scenario here, TSM can't make semiconductors. So a bunch of these data centers, they can't be built because NVIDIA can't get the chips that they need to make the GPUs. Okay, so then what happens to like an Oracle with some of their debt covenants or Microsoft and the AI trade that we all feel is oversaturated?
And of course, that was the problem with the tariffs. The AI pipeline needs frictionless global commerce.
Define risk. That was the plan this week. That's the plan next week. The goal here is capital preservation right now. The goal is to stay above water and see what volatility looks like on the other side of this all. So that's the end of our trading week. We'll be back Sunday night, 5:55 Eastern, 4:55 Central. First call, myself and Ilya to pick up where we left off. Hope you have a stress-free weekend. I know I won't. Good luck trading. See you on Sunday.
Have a good weekend, everybody. Buy dollars.